Good morning, everybody. Good evening and good afternoon or good night, wherever in the world you are joining from. It's Monday morning again. Time to kick off this week with a little bit of streaming. And the first thing I have to check is if I'm actually online. Seems like I am really online. In a minute or two, I think we are going to have LJ also joining us. How's everybody this morning? Are you guys doing good? Who is already with us? We have Henry already with us. Good evening to you, Henry, one of our very frequent guests. We have SWL Musics. Good evening to you as well, my friend. And we have Sebastian. Good morning indeed, everyone. I hope you're all having a blessed Monday filled with love, peace, and abundance. I couldn't have put it better, honestly speaking. I hope that's true for everybody joining us here today. We have a busy week ahead. When can we see Ashley? Ashley, for sure, going to come on later this week as well. And good day to you, my dear friend. I hope you're doing well. Lots of people already here. Joining us this morning. Louis, how are you doing, man? Good to see you. Good morning, Unbiased Trader. Good to see you as well. I can see we have another one coming in. LJ, good morning or good evening to you. How are you doing, man? All good?
Doing all right, yeah.
Damn, you're
Bit
loud.
under the weather at the minute.
Yeah. Your mic is super duper loud.
Oh, is it really?
Yeah, it is.
Is it for you guys as well, chat? Or
is it just my weird setup here once again?
I haven't changed anything, so no idea.
Yeah, maybe because you were like screaming full of enthusiasm just now, because it's Monday again. You know, we're starting and let's rock it. And I've been 1 week on holiday actually.
How was it?
It had its, let me put it, had its very highs and very lows. The very highs was that we had a very nice house. The very low, sadly, was that my mom passed away last Monday. And so it was a bit like she was very sick already. So not unexpected, but of course, still when it happens, comes as a shock. So for me, going back into the office, returning to the markets is a little bit of therapy as well, honestly speaking. And thank you. But sadly, that's the circle of life, and the one statistic nobody can escape from. That always becomes true. By the way, I'm seeing right now here when I checked on YouTube just now, we are only 1,400 subscribers away from reaching 90,000 subscribers. And not only will LJ then grow his mustache into a full beard when we reach 90,000, we are for sure going to have some very nice giveaways. Jonathan just told us before starting the live stream. So guys, hit that like button, subscribe if you haven't already, leave us a comment. This is going to attract more. The merrier. At 90,000, we're going to have a nice giveaway again. So yeah, let's head there. Let's see. Maybe we can even reach that already this week. When it comes to the markets, I have to say, I haven't been looking very much at the markets. One thing that, of course, struck my mind or struck my eye, which already started happening before I went on holiday, was good old gold. And I remember us 2 weeks ago, LJ, when we had this candle here on the 20th of October, talking about, maybe swing trading long in gold. This is not the place to be at the moment. And this became like a self-fulfilling prophecy, I almost said, very, very quickly. Now, I don't want to point this out because I want to say something like, "Ooh, I was right." There are many, many more times that I was actually wrong when it comes to gold. I was right. No, but no, honestly, there are many, many more times, of course, when I was wrong with gold. What I want to point out here as well is, again, because we're for sure going to have these questions, when is the right time to rebuy now into gold? Did I miss already the bottom maybe yet? Can I still buy it? And I've been working so many times with the moving averages especially on the gold chart and on the Bitcoin chart, on the NASDAQ chart, on the S&P 500 chart, the so-called bull market support bands, so the yellow and red line you see down here, and this blue line which is on a daily chart, but it's an 8 weeks moving average, which is, when you have a trending asset, always like a nice point already if you are a little bit more aggressive in your trading to put in long trades. And you can see, again, I didn't modify anything here, how it honored really 3 days in a row almost exactly the 8 weeks moving average. This is crazy, but it shows, again, in trending markets how well moving averages can work. This is the 8 weeks one now. You can for sure find the same patterns when you're moving with when you are working with other moving averages. Now, I personally did not buy here. I would have bought if we would have seen a drop all the way down to the bull market support bands, so the 20-week and 21-week exponential moving averages, which are still down here. What usually happens, at least that is true for Bitcoin, and to some extent that is also true for gold, is if we close below the 8 weeks moving average, we usually see price also trying the bull market support bands. This didn't happen, so we really bounced off it. So it might be that it's over already. Nice mustache, nice. And but if we should close below it, that it could very well be that we see prices somewhere. Well, if that's next week, somewhere in the area of $3,700. Not saying this is going to happen, but have an eye on this. If we really close, and that's important, close well below the 8 weeks moving average. I'm not talking about closing like $1 or something below it. It really needs to be prominent, the close under it. You can see this happening kind of in gold. So I mean, this was the sideways range anyway. You can see, for example, here when we had earlier this year the pullback in gold, that it also reversed on the 8 weeks moving average. So this happens quite often. Could be that it was already it. Depends, of course, also what the orange guy comes up with this week. And are we still in a lockdown, by the way? We are, no? In the USA?
Yeah, it's still in the shutdown, yeah.
So again, no economic data coming out this week. We had an interest rate cut, correct?
Yeah, we had Powell. Yeah.
And so, let's see what this week brings. Anything you're looking in particular at this Monday morning?
Well, I mean, coming off the back of last week, we had obviously the Fed. Powell came out and spoke about the shutdown, the fact that they don't have that data, and pretty much put a big dampener on the December rate cut.
That's
so
the thing, right?
Now from 94% to 69, 68%, somewhere around there. So hence, you're seeing that strength in the dollar, right? Like dollar yen right up. Euro dollar under pressure. Pound is under pressure anyway from its own problems, and we've got the budget coming up for the UK as well. So that cross combination of all three, it's really shuttled the dollar higher in the near term. So but apart from that, if we do get government opening anytime soon, we start to see some of this data come through. If it does come out poor, those rate probabilities could go right back up. But until they've got that data and it's clear.
And it doesn't look really like they will come to like a conclusion very soon. No? I heard like rumors, that the Republicans are ready to play this well into January still. Somebody else wrote like, hey, look at this, even with the government shutdown, we have like $100 billion more in debt now within a week.
I don't know. It's hard to say right now at what point does the market start caring about it as well, because we've just completely shrugged it off. I'd say if this does keep going on a bit more, and it does seem like we're going to get this very extended shutdown, then you might start to see some kind of shift in the bond market. Rates jump around, and then that becomes the catalyst to spur that kind of fear through the rest of the market. So, but right now, no one. I don't think anyone really believes he'll go that far. Not yet. It's just so hard to read with him because completely good. So
I mean, not that much happening actually on the bond market currently. Of course, last week we saw a little bit of a jump higher there, but it's what you would expect, in this kind of interest rate environment and the outlook. I'm sure the jump actually came probably from the possibility of not having the rate cut in December, which is also something, remember, which I always said, like, I'm not so sure if this is going to happen actually. Because which I can understand also, if you are within in the committee of the Fed and you don't have the data backing you up, you're not going to decide, just by a gut feeling, especially in a situation where you have like this very weird labor market at the moment where nobody knows, like, is it going to get worse before it gets better, or were these numbers we had before the government shut down outliers to the south, especially thinking, of course, about the non-farm payrolls, where for me always like 100,000 per month is kind of should be like the natural growth of the economy, of the job market, and the last numbers we had were, I think, well below that, if I remember correctly, plus the ones that got corrected in retro perspective.
We're sitting around that replacement number at the moment. Powell did also touch on some of the tangential data that he has been seeing that hasn't actually been too bad. It's been sort of stabilizing. So those were part of the other side comments that he threw in with we're still missing the data because of the shutdown, obviously. So hence again, just highlighting that data dependency, as I always talk about, but there's a bit of a split opinion coming through from the Fed now. So that December rate cut pricing, even all the way back before we started the shutdown, we talked about that a number of times. That, we were looking at like 88, 90% all the way back then. Which was seeming a bit too much. October, yep, sure. December, I don't know. So, and we're seeing that finally come through now. So there you go.
I mean, if I see something like this here, for example, on the daily pound sterling chart, pound sterling cable, I mean, of course, chart, it's kind of like we're establishing, or looks at the moment like we are breaking out of this pretty long-term sideways move we had formed for the majority of a year. So like, I haven't looked into this very much, was busy with other things this morning, but for me at the moment, I would kind of look if I find short entries here, so a little bit into the direction of a positive dollar again, which I don't like doing very much, but this is what I'm seeing right now, at least for pound. So I don't know how it looks on euro dollar. Should be
euro dollar's definitely held up better, of course,
yeah,
because the pound's got that idiosyncratic movement going on. So
for euro, you would like to see this come into play probably first for a short possible trade.
But we're definitely getting that back to when we started the competition initially. I was talking about I was looking for extended pound weakness and Aussie dollar to outperform, and we're getting that play right through now. And so Aussie dollar's held up quite well. Also, we signed the minerals deal. Talked about that a little bit with you guys last week. With Trump, obviously, since China and the US, or China, I should say, is using that as leverage. So the US wants to lock that down. The other piece we do have is the RBA decision for Australia this week. So I would say no rate cut. We were looking towards a rate cut when we had some of the prior jobs data, but then that sort of settled and corrected itself. It looked like more of a distortion in calculation. And then the previous inflation print came out a touch higher. So right now that's going to keep the RBA on pause. So
how come we are scheduled for JOLTS job openings? Or is this from a private company? Maybe.
Yeah, well, they keep I don't know. I've seen that with the calendars as well. They've kept showing up a number of the public data.
Yeah.
Some days, and then some days not.
It's kind of weird.
Like for instance, it was showing like non-farm payroll last like Thursday or something. I was like,
might be that they deleted, whether they have it in their database at TradingView.
Yeah, I think as well. It's sort of prior anticipation of possible chance that they open the government, right?
Yeah.
Then you get the flood of data coming through, but yeah, still at the moment no public data. Don't forget for the US guys, we do have some of the private US data coming through though, so you just have to look through, which if it comes from a public entity, so the government itself not coming out. If it's from a private entity, you'll still get that. So there's a couple pieces there.
So this one coming from the Bureau of Labor Statistic for sure, not going to be released. I would be very
no
surprised.
jolts.
No jolts.
But we will get stuff like ISM and.
I was just going to say ISM for sure, because you can see they have a forecast here for ISM as well. For jolts, not. But let's see. We have, as you said, we have the Royal Bank of Australia interest rate decision, but probably is going to be zero, unchanged. We have later this week also the Bank of England with interest rate decision forecast also here unchanged. So I don't think many surprises from there. You were talking about the minerals deal just now. Australia did. What was that about? That I missed that.
Yeah,
one.
for rare earth minerals for all of the battery stuff, defense, and like AI development. So all the key rare earth minerals that they need for that.
All the trigger words.
Yeah. So massive investment here. There you go. Bada bing, bada boom. This is definitely something I'm looking forward to over the next period. Like Australia's just going to benefit from both sides.
Yeah.
From China and the US having this this competition. We're like perfectly planted in the middle.
Of course, if you are sitting on the minerals for that, also, this is like what you want to be, where you want to be. I read like a couple of weeks ago, there's like a rare minerals deposit was also discovered in Germany, not too far from where I live actually, and it's kind of surprised me. It's like, oh wow, we have minerals here, other than coal, which we used to have.
Yeah.
You know what, guys?
I did see that. I think when they were putting together how long it would take to like get mines and stuff online, though, it would be well over like a decade and a half, almost 2 decades.
Yeah, that's like
for part of the reason that it's not like you guys have sort of stuff set up or the workforce or the that kind of stuff over there.
Exactly. Yeah.
Yeah. So.
I think I'm going to do a little trade here in cable. I need to attach all my position side.
Yeah, Henry. Mate, house price is just going to keep going. There's nothing you can stop.
Always up. Always up.
Yeah. And DJ, not back yet. I'm off tomorrow, so I'll be gone Tuesday till Saturday. In hospital. So.
Oh, I hope nothing serious. Or...
No, I'll be right. I'll live. I'm all good.
That's comforting to know. All right, guys.
So try and catch up on some of that sleep I've been missing all the time.
Yeah, some of that sleep. That's maybe good, but you don't need to go to the hospital for that, mate.
It's going to be pretty boring there, so
take your tablet with you, and then you always got stuff to read.
Yeah.
Or you can watch us.
Yeah, I might be able to check in. I just don't know how like loud and that sort of thing. But I'll definitely come in and say hi. But
yeah, do that, please. Do us a favor. Okay, guys. So I went short cable here just now at 27.8, 127.8 with a stop loss at 132.16. So God, where's my screen? Here's my screen. So should we see, this is a daily chart, by the way, of course, and should we see a breakout out of this box again? For me, it would more look like, this is it. We bottomed out and we're going to see a push maybe back somewhere to the area of 133.75, 134 maybe even. Just a little trade, 0.25% risk. So let's see if we see a continuation of the US dollar, more US dollar strength, which could possibly push the pound down to the region of 130. Other than that, I would like to enter a trade on gold as well, preferably a long trade. So should I see here my system possibly a long signal, I would take that one too. Probably also with a stop around 3,990-ish. But I gotta see if it triggers, at what price it triggers first. But seems like we are seeing some decent moves this morning, at least.
Yeah, definitely. There seems to be more downside for euro dollar for sure right now, and then hence pound dollar, same deal. UK budget is the 26th, so keep an eye out for any tangential headlines throughout the week or next couple of weeks for that as well, guys. On any pound pairs. So I'm considering a euro dollar short here. Since we're now,
you think
sort of
going to catch up a bit.
this.
You removed yourself? Wait, there you are again.
Yeah, I mean, after breaking this bottom, this looks like very weak.
Yeah.
We've just pulled basically back up to the underside. This will be a bit clearer if I hand that. So yeah, that downside into the 114s like you were talking about before. You zoom out a bit. Let's go further. Let's go daily. Yeah. Wait, Henry, Dirk, what's the hide drawings tool? Hide drawings button again? Do I just right click here? Where is it?
The what?
Oh wait, here. There we go.
Yeah.
That's what I was looking for.
I was just about to say, like, man, you have a lot of drawings, a lot of chaos on your chart.
Yeah. Yeah, I was meant to go through and clean that up this weekend, but I didn't get to. Yeah, I mean, it looks like fair shot. We just want to run right back down to 114.10 kind of zone, right? Like maybe you've got midpoint in there. So if I hide that again, it's basically through here. So 114.75. That's probably a good look point for today. But then beyond that, yeah, it seems as though it's kind of free air down to 114.10 now. And then you'll have the 200 coming up, find support there on the daily, But yeah, given where we are now, I might just jump into that.
Yeah, I mean, it looks nice if you look like it's a well-established downtrend already on the lower time frames. Can argue like if you want to wait like for a swing up. If I switch to euro dollar here to then go to the 15 minutes.
I was looking for like a deeper pullback.
Yeah,
somewhere between 115.25 and 30, right?
Yeah, that is really the only thing I also would say. Like, but I mean, that's the thing, we never know. It's like, is this happening like this now, or are we going to see something like this and then the pull back up to the price where you would short now? Maybe that's of course a little bit uncertain always. What we could do is we could like add
check the Dixie as well.
EMA. Let's go with 3 EMAs. I need to add indicators, titles. Oh, too many indicators now here. This one can hide. This one. We do something like, let's see where the 21 is and the 50.
Yeah, the Dixie's got a double top in the 5 minute, actually.
It does. Okay.
Yeah. So I might just wait for that, in fact, given that extra added piece.
Why is that one? Did I really put in a 21? Well?
So we're not down too far today, percentage-wise. But yeah, I'll probably look at waiting for that pullback now.
Oh, I'm on the 50 minutes. No wonder. It's like, hey.
What were you saying before, Henry? Starting to diversify my portfolio, investing in a minimum of 500 multiple assets on semiconductors, rare earths, strategic minerals, energy, fuel security, logistic, and supply chain. Nice. You'll do very well, Henry. There you go.
I'm very sure, yeah, about this as well. Absolutely, yeah. And it's always, it can be so easy, if you do that like on a monthly base, you pretty much don't care about where the price is right now. As a matter of fact, you're probably going to be happy if we see like some sort of crash or the market's losing a bit in the beginning, because it's going to add so much to your compounding in the end. Compounding, in my opinion, anyway, is like one of the most underrated things you can work with. It's amazing if you like take that example again, $500 a month or whatever you save it, and then like 10 years later you look into how the interest you earned on your first $500 investment probably generates like on average $500 a month by itself already. It's such a powerful tool, but it's something, when you're a beginner, when you're not sitting on huge piles of cash already, it's of course something most of us cannot relate to, except you have like a couple of million, you're sitting on and investing, then for sure. But if you're trading with something like 10K or 50K or 100K, it's not that much of an effect.
Yeah.
But you'll see that if you find like a trading strategy that you really trade and do that for a couple of years, how this effect is too. I was very much surprised lately when I did some back testing on some of my trading strategies, and I was like, how come this one performed so well? And then I saw like, like the first year was quite a good year for that strategy, and that compounded like 5 years later into insane returns. But long term, I'm very much with you, Henry. I'm like investing monthly at the moment in data. So anything related to data centers, what they need, be it infrastructure, be it material, be it chip manufacturers, of course, be it something like water, which is like severely underrated when it comes to building data center, that you need access to actually a lot of water, not just, this little shallow kind of lake you might have in the backyard. You really need a lot of water to cool stuff. What else? I still investing a bit every month into environment related stocks, which of course since Trump has been elected did not perform so well, but for me that's a very long-term investment. And then everything related to consumer products to consumption, especially in America, because I think people always need to eat. So you're not going to have those crazy returns there, but a little bit diversification. If we don't see like all those trending topics, AI, data, and so on, performing so much anymore or being a little bit weaker, you're usually having those stocks catching up again a bit. So really long term, I think it's good to have that mix and not to rely too much on just one single stock or something like this. I have a friend, for example, who has been investing quite early into Tesla, of course, sitting on very nice returns for that, but he's like so married to the stock by now and to Elon Musk that he never would part way with his Tesla shares. And I don't know, at one point you gotta take out some profit as well.
Only if he goes to Mars, and then it's like forced ownership that you can't own intergalactic stocks or something,
Oh yeah. Isn't there some treaty or something that nobody can like own the moon, for example, and stuff like this?
Yeah,
I think there is, no.
Yeah, I think that's up for debate. I think it's gonna be whoever gets there first, trying to take ground. So.
King asking here, what's your take on gold? Well, as I said, long term, or like let's say from a swing trading perspective, the 8 weeks moving average here was a good point already. Not going to say reinvest now because we're already like $100 higher. I'm actually waiting because I'm not the usual swing trader in gold. I don't like to swing trade gold very much. So for me, I would prefer to see prices somewhere in this region between, let's say, 3,650 and 3,700 if it happens this week. Next week, probably more around 3,800 already. For a swing trade long, that is. If we break then below, we can argue about, do we see a break of market structure? When it comes to more short-term trading, as I said just now, I'm actually waiting here for a long signal. Currently, my strategy is still short since, when was that? 4,016. So not a bad trade as well. You can see we are struggling around 4,000, which of course is quite an important number on a psychological level for gold. And my ideal scenario would be now that we see probably price rise to something like 4,005, maybe 4,010, which probably would produce a long signal in my system. And that's a trade I would like to see, because it feeds also into what I was showing you just now, the deflection of the 8 weeks moving average. Of course, we are trading higher, well higher than that already, but that would be my preferred scenario. But I will wait very patiently for this to hopefully happen. So the only trade this morning I am in right now is for one I just opened in cable. Did you open it in euro dollar as well, LJ? Sorry.
I'm still thinking about it because I'm looking around. I'm getting sort of mixed signals.
Yeah, that's why I didn't want to look for cable at the lower time frames, because I'm sure I would have found something that keeps me from this trade. But for me, sometimes it's just like, I don't know, like looking at the daily charts gives me often better ideas than trying to overanalyze it on the lower time frames. It shows again, that in my heart, I'm not so much of a scalper and day trader.
Because I was looking at that double top on Dixie on the near term on the 5 minute, 15 minute kind of time frame. We pulled back a touch, but right back into 10 moving average on the 5, and then now we're having another go. And I'm looking at dollar yen here as well, which looks like it kind of wants to just rip. So I'm somewhat unconvinced.
Oh, you mean which double top do you mean
on like the 5 minute? Yeah, if you go down to the 5.15, so very short term. So I was looking to see if we'll get that slight pullback.
Oh, you mean this
euro
one
dollar
right now?
Yeah.
Oh,
yeah.
Okay.
Yeah. So if you go to 5 even, you can see it even closer. And this sort of.
I mean, it's kind of
turnaround.
Tempting also. That looks.
Yeah.
Looks more prone because it's right at a 100. Again, like this important kind of figure. You see double top can kind of, and if it's just like 25 points down to 75 or something again.
And I mean, we've had quite a bit of downside pressure already last week. So,
but that would mean you would go long euro dollar, but probably.
Yeah. So hence, I was wondering whether to go long from here up to that 30 point, or short from here, just looking for this to continue, or wait for us to get up to 115.30ish. That or scrap.
I mean, look at this at the daily also. It's such a such a nice number here, 100.
Because I feel like either we're going to get a small shoot just here, dollar yen, same with euro dollar, potentially have another little crack at the lows, but then just sort of a fake out, turn around, retrace a bit.
Damn, 154 already again, dollar yen. Crazy. It's like, this was one of my worst not going to say trades because I didn't lose that much on it, but like I was very biased on dollar yen trending lower to around 130. So 125. That at all didn't happen.
Yeah, it's the I mean the U.S. government Japan thing intermingling with China. Obviously, having that weaker yen puts a lot of pressure on China. So it looks like, as much as we've touched on this a few times when they keep saying we're not talking about currency effects, but it seems pretty clear they are.
We're not talking about it, but we are
Yeah.
talking about it.
Yeah, but we did have the new Japanese PM the other day, or the other week now, when she got sworn in.
Yeah.
And from various comments previously, this was a couple of months ago, talking about dollar yen at 120 to 130. And when Besant went over there, they also mentioned it specifically, and he said he would like to see dollar yen start to come off. So it's going to be in the cards at some point, it seems. It's just it's a waiting game, matter of time.
So yeah, maybe this actually is a point, for like a long-term effect. Like a typical game, maybe I would play with an option. Not going to do that now, but do something like sell 158, better 159 dollar call yen put. And if you want to do that aggressive, you can sell the call and buy the put. So sell the dollar call yen put and then buy a dollar put yen call with a strike price, I don't know, of 150. But I'm sure the volatility is not that great yet there, that this really, that you could
I think it's a next year thing.
Yeah.
Yeah, it seems. Especially with the guise of like potentially not getting the final rate cut in December.
Yeah.
And depending, it's either that or this shutdown goes on for longer, causes some kind of issue, then hence you get the dollar selling come through. Then you get the double bubble of going into next year with further rate cuts, all that kind of stuff. So I think Trump did also say he could try to look to announce his next preference for the new Fed chair before Christmas as well.
You have any idea who that could be already?
No idea.
Me neither.
No idea. Absolutely none.
It's for me, he always like suddenly kind of pulls a magic trick where some name comes out of his magic hat, that I've never heard before. But I really need to look into, hey, who's that person? What has this person done before? Most of the time, not at all related to the new job they are going to take over. Whether that is a bad thing or maybe even a good thing sometimes. When it comes to the Fed, maybe not such a great thing. Yeah, but I remember we touched base on that like 2 weeks ago. No, when we agreed on that, like if we look at the U.S. economy as a whole, that potentially late next year, if you have somebody who takes over from Paul in I think May it is, who's like pro-Trump, a little bit of a puppet of Trump, and does the journey down to 0.25% or maybe even 0% interest rates. That when really you have like something happening, the economy is in bad shape, that basically the Fed doesn't have any ammunition left other than doing what they did in 2008. Like, hey, we're going to buy all the bonds from you for 100%. They are guaranteed, which then means they need to print a lot of new money again, adding onto the already insanely high GDP to debt depth. What is debt ratio? Yeah, that's what I was looking for. Yeah. So that
there was that one guy. Oh, what was his name now? I forget. Remember that we were talking about some time ago. This was all the way back on ABL, I think it was. The guy with the orange suit. Remember I was showing the photos of him?
I remember really somebody in an orange suit here, but I don't remember what that was all about. Yeah,
he used to be a former Fed member in some capacity, and then did some other stuff and worked for a fund and some other things. Anyway, he's very pro-Trump, friends with Trump, all that kind of stuff, and he was dating the other Republican sort of it's kind of
not
news or propaganda machine.
Pam Bondi or whom?
No. The other, she's blonde. I forget her name now.
Yeah,
Well,
I can.
this guy had a super random name. I hadn't heard about him before, but
Super
this was
random.
a few months ago now. I'd have to look it up again. But yeah, it's one of those kind of picks that are very likely that he'll just sort of throw that out there, you know. All right, so euro dollar is tempting me. But I'm still very undecided. Very undecided. So I caught some like short term longs this morning through Asia. Was up through here, basically just up to the moving average there, and just below those heads, the peak head just after the open. Similar deal on the Aussie dollar today this morning. So that was from, pull that back. Jumped in through there, and then it was just up here by that head.
Yeah, Van Alven, you're right. We haven't been bullish for the US dollar in quite some time here on the stream on Mondays.
So, I mean,
it's not an ideal
I'm
setup.
kind of wondering if I just drop the whole euro dollar idea. I feel like something like this, like Aussie dollar right here, is looking much better. Like it just, that has the structure here, continuation.
Aussie dollar is looking nice. I think cable is also looking nice. If you want to reduce it like more to a technical thing, is there an established trend already? Have we pierced in the case of cable through like areas of support already? I think it's clear. I wouldn't be too sure if euro dollar is really catching up. But because especially cable, is like the weakest one in the basket in my opinion at the moment. So I rather play it with that. Although maybe I'm opinionated, of course, about it, but then again, it's just a little trade, 0.25% risk. So
Yeah. I sometimes like taking the outlier, like the euro dollar, which is not so clear. Sometimes because it's a bit more mixed, you also reduces that volatility. You can express the trade idea and then add to the corresponding asset that's properly running later, but still have some degree of exposure. So it's almost like it entering like a partial, but on a separate asset, sort of.
Yeah, I mean, you're right. If the move is coming, and it's like a dollar denominated move, of course, having like the one who has the biggest influence in the basket, if we take it from a DXY perspective, then the choice, of course, should be euro. Yeah.
Let me just. I think Pooley. I think it was David Zevos.
David Zevos. I have to Google that now. He looks crazy, man.
Yeah, it looks pretty wild. Google in the
and huge. He's
suit.
like oscillating between being very fat and very slim.
Yeah, so this is him in the orange suit. That was the suit.
Kellyanne Conway. Yeah, right.
Kellyanne Conway. That's what it was.
Yeah. He looks like the orange Jesus on some pictures.
Yeah, but he works at Jefferies. I'm pretty sure.
Oh, okay.
Yeah, he's chief market strategist for Jefferies.
So there we have a connection again between Wall Street and politics.
Yeah, exactly. And he was formerly one of the Fed board members. I forget for which jurisdiction, but yeah. So I mean, it totally it sort of fits the guy. Yeah, it's a bit wild. is definitely a character, but you can see how each of those bits line up. Former Fed experience, Jeffries, markets, Wall Street, dating Kellyanne Conway, eccentric, kind of whatever. It kind of fits very much the whole Trump motif. So this was hence why I put that together months and months back.
Yeah.
I was like, this kind of seems like a good.
I'm seeing like one of the first news that pops up is market yawned at Fed Chair Powell's comments today, says Jeffries David Zaros.
Yeah.
Yeah. Okay. It's man, it's like this movie Idiocracy, really. Yeah, Dr. Burry always says there's a bubble.
Yeah, he does.
Yeah, so be careful, with
every
those
5 minutes
profits. Sometimes they are right. In the case of Michael Burry, he for sure has the financial background also to be more wrong very, very often. But betting on a crash is almost never a good strategy, because we are betting on the economy. If you buy a stock, if you buy a currency, you're betting on an economy in a nutshell, and that usually trends up economies over long term. If they stop trending up, it's a whole different thing. But looking back the last 1,000 years, there haven't been that many cases where you saw like really prolonged 10, 20, 30 years of the markets either going sideways or down. I think the last prominent example for this might be the Great Depression, which started in 1929, where it took like 10 or 15 years, I think, for the Dow Jones back then to catch up to where it left off. But since then, we've not seen something like this to this severity. It doesn't mean it cannot come, but it's something I wouldn't bet on. And let me tell you this as somebody who has played this game for a very long time, because when I started 26 years ago, there were people also having the same arguments that they have nowadays. Debt is too high, everything is going to crash down, the euro is going to crash. Was like a story being told, especially in Germany, for a very long time. We are going back to the D-Mark, everything is going to crash. I don't know, build a cave and stock up on water and canned ravioli or whatever. And it so far never has happened. And this is also my argument, whenever those gold bugs now approach me and say like, see, you're wrong with gold. I never was a believer in gold. I always like to say, yeah, but you missed out on 10 years of alpha because you were only betting on gold when it didn't do much. Congratulations that it's finally moving, but I'm very sure you have pretty much just caught up with what you lost the 10 years prior to this. So careful about this. I'm one of those other crash prophets. I actually did a video on him a couple of times on my YouTube channel, is Arthur Dent, who like every 2 years comes around and says the S&P 500 is going to crash by 95%. Whenever he publishes, by coincidence, a new book, that he likes to sell. And then he gets invited, to all those talk shows where he tells like stuff. And this basically has been going on since 2007 or 2006. So careful. This is why we here at the 5ers, it's such a number, like 95%. But of course, it's a nice it's a clickable headline. It's better than saying, no, it's going to crash by 30%. And this is why we here at the 5ers, we always try to teach you how to use your own brain when it comes to analyzing the markets, not only from a technical perspective, but also, of course, from a fundamental perspective, which is why LJ and me are always discussing a lot of fundamentals also on Monday mornings here on the stream. I mean, today we're more on the technical side, I guess, but this is due to a lack of economic data.
We've been missing quite a bit of it for some time now. I was saying this last week. I was actually finding it quite annoying.
It is.
I actually enjoy having my US data coming through, right?
I feel like I don't know anymore what's going on.
Yeah, definitely. I would say be cautious on the Aussie dollar sells. Rate decision coming through tomorrow, and looking for no cut. So no cut, probably sort of expected now, but very likely you'll get some more sort of bullish comments coming through there. So I'd potentially even this trade I'm starting now, probably even hold that over through to tomorrow.
It's holding up better than the euro, even, no, Aussie dollar.
Yeah. So that goes back to the outperformance from the Aussie dollar relative to the euro and the pound, and then the pound dollar in particular being quite poor over the next period. And that's all running right through now. So happy to stick with it. What I want to know is where dollar yen is going. I want it to just either find a top or.
I mean, you could
This was
potentially
the
short it here, but then again,
yeah
we've
this
established over the trend line. Now it could also be a break of structure soon. Ideal
yeah
for me would be like if we see like a blow of top somewhere, you know, at around 158, 158.40 or something like this. For sure, then I would like, you know, gamble on a short trade there. But I don't see that happening.
because this was the sort of gray box I have up here. This was the sort of cluster area from when we first had the gap through and the big run through to 153 that we're looking for as a possible top. Friday, we did finally get that run through, some very nice momentum. Dollar yen absolutely charged. That was really good. And I was looking for this kind of a pattern. We did end up getting that dip down, right back up, sort of double top. Today, we haven't fully followed through with that. So I was looking for this to sort of at least by this point in European session to actually start coming off. But it might just be that we're wandering around here waiting for side trigger like euro dollar, pound dollar to sort of stabilize, take a bit of a move higher. We sort of run through this kind of base, sort of like somewhat of a channel we're forming through there. That's not very straight, but you guys get the idea. Punch through here and then actually get the drop. So this is what I'm very tentative on right now with the euro dollar, pound dollar in general, any of the dollar cross related pairs, is as to whether this actually establishes a run and we break up into that box and the prior highs.
I can kind of see that actually. Would be nice hedge
Yeah.
for my cable trade. I mean, I'm not like a fan now of drawing always lines on especially daily charts, but you know, if you are into support and resistance, you could also play something like here that this line holds now, which is the extension of the last two tops. So somewhere around 153.90, 154 could be a good entry into long trade. Not going to do that. I don't want to hedge my cable trade now. I want the full exposure there, but yeah, I see the attractiveness of it. Maybe also because kind of the whole political mumbo jumbo that we had with Trump visiting Japan is kind of out of the system now.
Yeah, that's what I'm like, because I mean, that's pretty priced in now. Right?
Yeah.
We've had a long time to digest it, both before she actually got in, after she got in, and then, you know, Trump has been over there, Besson has been over there, they've talked a bunch. That should sort of be all in the market. Plus, we had the Bank of Japan run through already, too. So
Exactly. Yeah.
that's why I'm wondering if this is kind of the capitulation point. Because I think if we don't really establish new ground, then especially coming into tomorrow, we write off. Which then is what's putting into question for me this euro dollar move altogether, whether we do get that downdraft or if this is sort of one of those slight fake outs, you know, just overkick the level, Monday trading, only to come right up and attack those tops again. And then hence the same thing with the pound being just a nick over those bottoms, right? And if this ends up being a stalled momentum, we get the drive higher. I think this was from last week as well. I was looking for this channel, that bottom, which we actually did just hit that. Some kind of kick through there and then a punch back up. But get rid of them now. It's kind of annoying. That or else this is the bottom. So we got this kind of piece forming. That should have gone deeper. Bit of a head and shoulders type thing on the 1 hour.
Sorry, will you excuse me for like 2 or 3 minutes quickly?
Yeah, that's right. That's okay. No problemo. Good to see you, Rahul. How we doing, mate? I appreciate that. I'm a bit under the weather today, so apologies, guys. Off to hospital tomorrow, so high time frame, it's quite a big support. Yeah. Pound, I assume you're talking about. This is the thing. This is the area that basically we've broken, right? These 2 weeks here. But whether this is just sort of a slight fake out, slight over push, only for price to sort of stall here, turn around. Because otherwise you have to start looking at how much of a deeper drop that is, which I don't know if we're ready to go down another 200 points after this much of a move already. Particularly with we've still got 23 days until the budget. So I think from now, I mean, this is pretty much the budget price action. It's sort of being priced into price action, I should say. Whether this might be something to fade, buy the rumor, sell the fact thing, leading up, we now get a correction coming up to the budget. Then if the budget is indeed very terrible, hated by the market, then you might crack these lows again and actually take a deeper drop. But I will. Thank you, guys. I appreciate you. Man of the hour. Please, what's causing gold to fall? We can have a look at gold. Just give me 1/2 a second. Check messages. Okay, that's fine. I can wait till later. All right, gold. Oops. Here we are. So again, this is my this would have been my little marked out areas from last Friday as well. So we can clean some of this up. But last Friday, we were basically forming this somewhat of a wedge type thing through here. We did have a bit of a crack through there later. I think when I drew this out, we were still somewhere along further back. And then to see whether we actually got a capitulation back down to new kind of lows, or if this ends up being consolidation and then break higher. But that still seems to be just what we're looking at on gold. But go and clean this up a bit. Got kind of a garbage-ish channel through here. So, I mean, we're pretty much just in the dead center point of this. Like, I'm sure if you check the, this is going to be the majority volume traded through here. I'm sure if you go and throw VWAP on this as well, we'll be sitting right in that volume area, which I will jump over to my C trader and have a look, because I've got another indicator on here that's really good for VWAP. Yeah, we're literally directly in the middle of VWAP. So VWAP kind of literally runs like this. So we're just dead center stuck in the middle right now. So yeah, not exactly dropping. We're just trading sort of point to point right now for today. We're just pulled back into the middle of the majority volume trading area. But yeah, gold's very just consolidated right now, to be honest. So yeah, not much movement unless you're trading a pretty high number of lots on every like dollar tick per ounce on gold. You know, we're not really moving too far. Hello, how are you doing, Rich? How are you doing? Good to see you, mate. Any suggestions for dollar CAD? Yeah, sure. And NASDAQ, yeah, we can have a look at NASDAQ again. No problem. I haven't checked NASDAQ today, but we have digested all the earnings data from last week now. So dollar CAD, I take it will just be right on up. Yeah. So again, dollar CAD basically today, you know, dollar strength pretty good across the board. Same with last week. Also, prior last week, we had Trump having a bit more of a spat with Canada themselves around the tariff situation, you know, pulling back on negotiations, right? So that's further lent itself to Canadian dollar weakening, because we were sort of consolidating sideways through here, and potentially we could have had a retracement lower, but we got that coming through, and that helped propel dollar CAD higher to continue the trend. Right now, you can see we're faring with that peak top over here on the week, back from 24th of October. So yeah, if we go out to the larger time frame, because this goes back to like one of Johnson's trades. So this was some of the stuff we're mapping out from with this, with a recapitulate through there. That's going to be that decision area. That's your break there. Pull back into here. Come right back up. We've seen exactly that. So on a daily time frame, given that injection of momentum, we could very well continue on to see 141.50. If we go back to like the 1 hour just now, you can see through here, basically got that dead on that we've run into. So if we start to break these highs, take another run at this zone up here, these 2 wicks, I'd be looking at some kind of attempt on there and look for a break beyond that as the trade entry. You could choose to enter through here if you're pretty aggressive, but you've probably missed the majority of like the safety portion of the move as far as where to position and size the trade. So from here, I'd probably wait for either some small pullback, come back down to 140.20 or so. Oops. Stop below these lows just here, and then take another run for the highs. Then obviously, if you get some kind of convincing break of the highs, you could run it all the way to 141.50. Then you got like a 7-to-1. But yeah, that bullish sort of momentum seems to be creeping back in.
And Jinka D6V, no NQ trading. Of course, we're trading NQ. As a matter of fact, I'm still in a trade from late Friday, which is this one here,
Nice.
which I opened around about 25,930 something, I think was my entry actually. So this is one I held over the weekend. Funny enough, my yearly target, or this year target for NASDAQ, or my extended target, I should say, actually has been hit also, which was 26,000 US dollars, which I drew back then in, I think, late July, August, when I said I can imagine 23,900, we're for sure going to reach that. I didn't really believe that we would see 26,000, but, here we are. Here we are, and
yeah,
we are now at this time within the cycle of election of a US president where usually we see the peak. I think I've shown this chart also many times. So kind of the natural, how do stock markets behave under which president, which is right now the candlestick chart you are seeing, of course, the second term of Donald Trump, the blue one, Barack Obama, the orange one, first term Donald Trump, Joe Biden, who had the greatest outperformance, by the way, for the stock markets. And what they all have in common is that about 1 year after the election, which would be somewhere now, I mean, we are almost exactly 1 year after the election. I think it was like 5th November last year, if I'm not mistaken, or somewhere around that date. Usually the markets get into kind of trouble. That was especially predominant under Joe Biden, but that was also the case under Barack Obama, under Donald Trump. And as you know, somebody who was always looking for things that repeat itself. I mean, this is what technical analysis or also fundamental analysis, as a matter of fact, is all about. I wouldn't be surprised to see something like this happening very soon again. Whatever this will trigger, I said it many times before, I think the whole sentiment is far too positive at the moment. And we've seen many times, we've seen that with gold now as well. Just now, then just needs to be a little thing that can suddenly trigger a sell-off of 10, 15, or 20%. Now, I'm not saying, this is going to happen, but I think as traders, we need to be a little bit wary of a possibility that this is something that could happen. If we look especially as a little bit of backup at the wicks, I mean, we've seen a spike there this year. We've actually just in October seen a spike there up to 27. But now we've come down again to levels which are very low in volatility. Why are they low in volatility, or why is the implied volatility for stocks at the moment low? This is always in times where everybody thinks, where the majority of investors think, everything is going well. Companies are earning money, stocks are going up. There's nothing that could, change that. And then usually it comes boom. To a little extent, we saw that. Like 2 weeks ago or 2.5 weeks ago, on the 17th of October, when we had the spike to 28 in the VIX. So be a little bit careful. This is, of course, also not precise science. This could also be the case that we are not going to see this pattern repeat itself, that we are either going sideways or the markets are going to outperform, because we had also a large dip after the election of Trump, which were I think the worst 3 months in a long time since the election of a president last year. But as a matter of fact, I've said this all year now. I expect somewhere in November now, latest mid-January, that we kind of see a turn in sentiment on risk-on assets. Whatever this is going to cause, I hope, of course, it's not going to come. But looking at how the stock markets behaved under the last 12 years, under the last 3 presidents, looking at the 4-year cycle of Bitcoin as well, which is coming again to an end, the last bull year, end of this year. So we could have seen potentially the top in that already. Probably going to release a video on that as well on my channel this week. I'm getting more and more cautious.
Interesting. Okay.
I know you see it different. You're more optimistic when it comes to the stock markets, but I totally get what your arguments. They're much more based on what I tell here on repeating patterns and kind of this gut feeling I have at the moment. But from my experience, if the shit hits the fan, pardon my English, it's coming suddenly and unexpected out of a direction nobody expects. And I'm wondering what this could be. Last time it was COVID. I don't know, maybe this asteroid coming towards us, Atlas or what its name, maybe it's after all an alien ship, and we are all going to get invaded and be the pets of aliens very soon, or extinct or whatever. I don't know, just kidding, of course, but there's something in the bush, if you ask me, and I cannot point my finger at it yet.
Yeah, I'm trying to find some images that I had. I'll try share. Give me half a second.
Yeah, it's also. I remember a while ago we spoke about what was that? What you showed? Where I thought that was quite impressive. Like that, the readiness of smaller banks to give out loans again is like higher than I personally expected, which of course is an indication to that like smaller companies get easy access or easier access to money again, which should of course stimulate the economy. But then again, we have like these credit structures, which are pretty much like what we saw in 2008. They were called ABS, asset-backed securities. I don't know what they're called right now, but it's the same. You repackage a mortgage, you repackage, I think this time it's a corporate loan, into a new security. And when you say, well, instead of the old loan having a credit rating of C, now the whole structure has a credit rating of A. So, I'm much more willing to buy this from you, of course.
Yeah.
Did you find what you were looking for?
I think so.
Then go ahead.
Just give me a sec. Okay. So I think the one of the things that we do have to look at is just how long this has ran for.
Yeah.
So I think we'll get a dip, but I don't think we'll get. I think we'll get like a healthy dip. I don't think we'll have stuff.
Yeah, I'm not saying we're going to get the after than 95% drop in the NASDAQ or S&P. Like talking about those 10, 15, 20%, which is like 15 or 20% usually is enough for people to start panicking already.
I think we're definitely in the final legs. So the final year, the final 6 to 12 months, probably 9 to 12, where we are now. I think 6 to 12 would be pretty shocking. 6 months. So I think it's more 9 to 12. So about Q3-ish, sometime next year, stuff starts to come off a bit, pretty heavily. But I think until then, we should be pretty good. We've got more liquidity and everything coming in. The Fed obviously has paused QT to help with the banking stuff. They're removing the SLR. The Treasury General account has a bunch of cash in there. There's heaps to deploy and keep things going. As far as things here, the other part is that I think people are a bit surprised by how good stuff has kept going, right? We got 64% of the market beating expectations. Everyone's expectations are so low, so they're like, this can't keep, and we keep going to sort of more, higher and higher strengths. Now, the other portion of that is the returns for those beats have not quite reflected the beats themselves. So people are definitely very cautious in adding to that after the beats. However, that always ends up being a thing where people are too cautious means there's still more upside.
Yeah, absolutely.
But yeah, also like you're saying, we have been running hot for some time, as highlighted by this chart. So chances are we'll get some kind of dip. It could even be Trump with who he picks for the Fed.
Maybe
that throws the market out or something, right? But yeah, these numbers are still ballistic.
Insane. Right? Yeah.
It's absolutely
how is Meta earning money still? I don't know anybody who's on Facebook really or actively on Facebook.
It's all ads. Ad spend is crazy. Yeah. And particularly globally now, where the West had that big ad race for a number of years, the rest of the globe is picking up on that. But yeah, I don't really know either. I stopped using Facebook.
Yeah.
So long. I think I last updated my profile picture. I think I did it like 2 or 3 months ago, or a couple of weeks ago now, for the fact that the last one I had put up was like 2014 or something.
Yeah, I think my last one was also like from 2010 or something.
Yeah. I stopped using it literally 10 years ago now.
I read, by the way, also that Google is like really in trouble when it comes to ad revenue. Like what used to be the benchmark, like you rank for certain keywords, is eroded now because when
So
you
the
enter a
slot.
search term, you get like the AI answer first. No. And we know that it's true for myself, at least, that I always tend to read, what is on the first thing that pops up and not number 10 on the page, because I want quick answers and not so much like spend that much time researching.
Yeah, it's also crushing how they manage the SEO, because people are using AI to run to create ads, both for voice, video, text, everything.
Yeah.
Do all the copy, everything, right? So you're getting heaps of like double stacking, triple stacking, and then for them to sort of break that apart is becoming really hard, because there's a lot of people that do have genuine ads that they're running. It's not slop. But just a lot of the syntax, the wording, the grammar that AIs use is all very, very similar.
Like Web Nomad says, it crushed a lot of people's SEO efforts. I as a matter of fact, I know I once was approached by like a site from the UK about like financial news and so on, and they had like, I think, around 300,000 or 400,000 organic visitors on their site every month, and they also wanted to do some like trading education, fundamental education. So they approached me and said, "Hey, you interested in doing something for us?" And shortly before we came to an agreement, they contacted me and said, like, "Sorry, man, the deal is off. Our organic reach has gone from 300,000, I think it was, per month, down to almost zero within just 2 months." It's crazy. Like, I think if you are working as a marketeer and you're specializing on SEO, it's like you're probably questioning your career choices at the moment, or for a while already.
Yeah, and there's then the interlinking of Google ads with like meta ads, and just like linking out to things, and Facebook's having trouble with pages, bot pages, all the reposting thing, all just this AI race Armageddon that everyone wants to try and make a little side hustle thing, and it's just creating stuff everywhere.
That's why for me it's amazing that especially Meta still has this growth and revenue. Because I think like 6 or 7 years ago, I did a cooperation with somebody who was like specializing in performance marketing, and that guy spent like $50,000-$60,000 every month on Facebook ads. And for me, it was like unbelievable back then. This guy, he didn't have even an account manager at Facebook because his spend was too low. Somebody who drops like $500,000 or $600,000 every year in the company has to go through a generic random support chat to get help. It's like, what is this company, and like on what pedestal, or from what pedestal is this company looking down at its customers? Really crazy.
Well, it's because of that competition. Like the return on your ads are often not that big. Like you sort of have to spend $100,000 to make 120 or something. It's hard. So then the thing ends up being like size. Just get that. The whole race is to get it up to 1 million a month and spend as quick as possible, and then to 5 million, then to 10 million. So when you look at it that way, they're small fish. It's just this big
bring
revenue.
it up to 1 million, and you'll have the intern at Facebook or Meta as your personal account manager, but only 2 days a week.
But back to with the NASDAQ thing. So this is on the weekly. NASDAQ, S&P, take your pick, whatever. Indices in general. We're definitely starting to get, I think there's a bit more in it, but it's kind of like looking like gold,
Yeah.
You know what I mean?
That was my first thought as well just now, when you open that chart.
So, and when you even just use a cross comparison, like, we've probably got a touch more, I think, than NAS, because this has been a bit more gradual, but we are definitely this vertical here. That incline is getting steeper and steeper.
Would be interesting to do like a short-term correlation analysis, like between gold and the NASDAQ, to see if one is maybe even just by a couple of days front running the other.
Because I think 27,000 roughly is like 20% up.
Yeah.
On the year.
That's
I'm thinking Yeah, I'm thinking once we get towards that 20 kind of number, that's sort of where we'll come off, because then you've had 3 of them in a row.
Yeah.
Now.
And it's not just 20%. I mean, if you look at an individual stock and say, oh, this one has been rising 20% per year 3 times in a row.
The
You're like,
market,
oh, right, this company is doing well. Yeah,
that's
but
a good
here we are
company.
looking
That's
at the
what you
whole
want.
market.
Yeah. No, for individual stock, that's exactly what you want. Like that
Yeah.
sort of okay, good, this is healthy. But yeah, for the entire market, I mean, yeah, this is bonkers. Honestly, Nvidia crossing 5 trillion.
Oh man, over 200 now.
Yeah.
I cry every time I see it. Really. Why did I sell at 110?
Oh, Dirk. Yeah, sad. That's unfortunate.
That's very diplomatic. That's unfortunate.
Yeah. But yeah, so a little bit more in it. I think we will get a wobble, and then I think we'll have a final sprint over through next year. Heading, Q1, Q2, Q3 will be a bad period. Whereas this year, typically like Q3 is always that sort of dip period. This year we didn't really get that. We still sort of kept going. But it looks, I have a feeling next year people are okay. Yeah, this has been.
Yeah, maybe I'm actually a bit early. You could be right. But we see like everything shifting a little bit to a couple of months later to when it would naturally be occurring. But let's see. I'm still a net seller of stocks and Bitcoin at the moment, every month.
Yeah, I'd look to pick up in that final gasp, right? That's where all the gains are, every time, right?
But then you get greedy, and you say, oh, just like a thousand more.
That's right. You're sophisticated enough, Dirk, you can run some some downside option protection or something to
Yeah, I know. Yeah. But if you do that for too long, it's going to cost you as well.
Yeah, it's going to cost you as well.
It's the game I should have played, especially with Nvidia. But the thing is, the volatility in these stocks is so high. You really pay a lot of premium, even for options that are quite far out of the money. And if you bought at 110, let's say the stock is at 150, you don't want to buy an option with a strike price of 120. It's a bit like then you also missed out on too much already. But yeah, I get, of course, this is a very valid strategy. And now I've disrupted you enough because you've been wanting to show this graph for, I think, the past.
Oh, no, that's right. Yeah, no, I was just going to highlight, just because like Gabriel was asking about GU, and we were talking about the pound earlier in general. I just thought this was an interesting chart of just highlighting how much, over time, like the UK has just sort of really come off the boil. And funnily enough, sort of you actually rebounded pretty nicely after Brexit, but then just right back down again. Switzerland, obviously, just up there all the time. US, yep. Australia has taken like a massive
So basically that means how much money you have left if you are in the top 10% of earners of your country. Sorry, how much money you have left in comparison to the other countries after you've been being taxed, right?
Yeah. So and then I think this is on like relative purchasing power as well.
Okay.
Right. So for you to meet all your needs, and then hence obviously a lot of that in these other countries, this sort of goes towards like housing, wealth building stuff that is put aside. Yeah.
So if you see people, if you see countries up there, wouldn't that mean they, on average, don't tax the high income individuals? I assume it's individuals that high. Wouldn't that be actually something beneficial for like, for example, for the middle class in UK, if they tax higher incomes more than they used to do?
I think you're already seeing a mass exodus of because they already have quite high taxes.
That would be the other side of the medal of my assumption, saying, okay, rich people are going to flee the country,
Yeah.
I'm surprised to see Germany up there, actually.
Yeah, I mean, Germany does well, for sure. A lot of this is going to be partially to do with housing. So this is like income isn't necessarily just your job. This is income. So this is, if you got housing portfolios, stocks, bonds, whatever other investments and stuff, and then obviously there's beneficial tax structures and that kind of thing.
Yeah.
The UK has been slaughtering everyone with that. They've had to raise taxes massively. The main problem is benefits. So from what people take in from benefits like retirement, pension type stuff, and like healthcare and things, that is now outpassing the entire tax base.
Okay, crazy. That's crazy.
Yeah, so that's where it gets really bad. I mean, they got some. You don't even have to live in the country. I've got friends' parents here who get lifetime pensions. They live here in Australia, and they just get money sent to them here every month.
Yeah, you can do that as a German as well.
Yeah. They're pretty. What's the word? Generous. Amounts, generous sums as well. So yeah, it's a number of those kind of things where it's probably a lot of the benefits that have to be pulled back. Obviously that's going to be difficult, as far as like the social base from the politics side, but at the same time it seems as though the UK could be turning that way. It's like a lot of the older crew in the UK now, you just see all the street stuff, people asking questions and stuff. What would you recommend to younger folk? Leave the country. So they also recognize it themselves how much stuff has gone backwards.
But you got the same here in Germany. Also, people like saying, "Oh, back then it was so much better. You should leave the country, go somewhere else. The grass is always greener on the other side." Yeah.
And I know Australia's grass is pretty green.
Yeah, it looks good. I mean, it's like Germany's grass is also just shy of the greenness of Australian grass.
No, I think there's still plenty of great places, and you just got to work hard all that. What were we saying though? Pound, weren't we? So we were talking about this earlier. There's potentially a move up on pound from here. So if you go out to the longer term outlook, we'll actually need to go to a daily. So you can see these two wicks through here. We've dripped down through, right? We've knocked through that a bit. This has been on the back of leading up to the budget on the 26th, starting to price that in. Some of the wobbles in the bond market and such, throwing out some concerns. Question being, is this sort of priced in for the near term? And this is a bit of a false break here. And then we're going to get this is going to make my drawings all turn back on again. There you go, it's already on there. So we get a bit of a turn back higher and sort of consolidate in this middle section leading up to the budget on the 26th. And then once that's out, market decides whether it likes it or not. And either from that point you drive down, or market goes, it's not too bad, we drive higher again. And near term, we've definitely had quite a large degree of selling pressure. And you're now seeing here, we've got this kind of head and shoulders type thing forming.
Oh man, when I see you drawing there, I should get out of my trade. How much would I
think
now?
The whole market right now is we're a bit neutral across the board. It's easy to see both ends. But it does appear we're getting some kind of stabilization.
I want to wait also until the US comes in later.
Yeah.
It's always those Monday morning trades are not the best ones I take usually during the week, honestly speaking.
Yeah, that's fair. It's always a bit of digestion. So yeah, can NAS break its high as well? We were talking about NAS before. This is the stuff I was mapping out last week when we were talking about some of the earnings still coming through. If they came through poor, we'd see this come off, tumble. Obviously today we've held up nicely through here. We did get the slight dips on a couple of the earnings, stuff like from Meta, which they did actually beat on revenue, but they had some other, I think it was with investment cost, R&D costs or something, like big one-off spends. So the market didn't like that initially, then it rallied back afterward. So can we see all-time highs? Right now, quite possible. You've got kind of this mark to run through here. So I would say if we start to get momentum pushing beyond this and this sort of top cluster where we sat around for a bit, then you probably see a drive higher to the highs, and then obviously look for a break. But just like euro dollar, pound dollar, dollar yen, all that stuff we're looking at, it seems as today, Monday, is a bit of a
lackluster.
Yeah, market's sort of deciding. It's kind of thinking, if you want to put it that way. There's a bit of indecision.
Do we? Yeah, I mean, you are anticipating my next question. I was just about to ask you if we are seeing some nice option expiries that could tell us about potential moves today or the next days.
Indeed. So today's cluster is at 25844. So you can see that's just a touch below where we are. It's a bit further than I thought. 844. It's actually down here by the lows. Right? So
that's a good
you
move.
might actually have, you've now got basically this triangle being formed. You could see that as the top. That would come in actually pretty much right here. So if you see this top out here, move back into there for tonight. So then that would be this sort of triangle holding. That's your options level for today. I don't mind that, actually.
I'm seeing this right now. 63 likes only. Man, I thought we would do better than this. Guys, leave us a like.
Jam. Come on, guys. Give me a like to wish me well for hospital tomorrow. There you go.
Yeah.
if you
want LJ
to
get well
back,
again,
it's your guys'
you
fault.
would leave a like. Under 100 likes, LJ sadly is not going to be able to get well again. No, that is very morbid of me to say something like this. But seriously, leave us a like, subscribe to the channel. As we said in the beginning of the stream, if we reach 90,000, or when we reach, I should say, 90,000 subscribers, and we are just 1,400 subscribers shy of that, there's going to be, and Jonathan promised this to us this morning, another nice giveaway where for sure you can maybe win things like free accounts or goodies or stuff or candlelight dinner with LJ. Who knows? Be in
hospital, right next to me, right next to my bed,
with a nice hospital food they serve, like dry bread,
beautiful,
watery soup, and all the nice things you need to recover in a hospital.
Indeed. But punch that like and subscribe, guys. Yeah, Jonathan's got some big stuff for you guys. So if you smash it, and especially if you can get like a like, if we can get some kind of like record, see if you can do something extra. That'd be good.
That's the thing. LJ currently is under-liked. That's why he has to go to the hospital.
Yeah, exactly, guys. You want me to survive, right? Come on.
Is that the definition of gaslighting? It reminds me of some bad movies, about the dark web.
Yeah.
If you want this person to survive.
Cheers, Camille. Also, Camille, what were you saying before? Melbourne Cup tips. Dude, I haven't looked at any of the horses this year. Mainly because I got the hospital thing going on. So I'm going to be in there tomorrow. Maybe I'll be able to watch the race on the if there is a screen at all near me. But I don't know. I can probably have a look in the next little bit, and if I find something, I'll.
In my Germanness, I thought that question Melbourne Cup tips means like any good coffee spots somewhere in Melbourne that you can recommend. I didn't think of horse racing.
Yeah, no, it's the big the big horse race we have here, right?
So you're horse racing better also.
No, it's like an international thing. Like the entire country stops, so everyone at work, pauses for like an hour, 2 hours, or normally most offices like just call it a half day, and you go to lunch. Everyone has a boozy lunch, gets
Boozy lunch.
Plastered and yeah. So
I don't know. I thought you guys are more into like rugby. I think no, it's pretty big in Australia, isn't it? And
yeah, definitely.
As an ex-colony, cricket probably.
Yeah, so Union League cricket, they're probably the biggest ones. Obviously, you got stuff like swimming at the Olympics, that kind of stuff.
Yeah, of course, swimming. Yeah.
We always have a couple F1 drivers in there, so we
not
got
anymore.
Melbourne F1. Hey, we still got Piastri. That's fine.
I think
He's
Lando
we
is
can see what happens.
slowly but surely stealing the show until he does a Lando thing again and either crashes or stalls his car when starting or whatever that guy always does when he gets nervous.
But the horses. I think it's just been a long tradition. I don't really know heaps about like the history of horse racing stuff, but Melbourne Cup is massive. It's one of the big races on the cut, like internationally and stuff. You get people all over bringing horses from all around the world and that kind of stuff. So big day.
So I gotta ask about that again. Is that like comparable to the horse racing you see in the UK, where like every woman has to wear like those fancy hats and dress up like crazy? Is that the same actually?
Yeah.
Really?
Yeah.
Oh wow.
Yeah.
So that explains why sometimes we see you on the live stream wearing all those hats when horse racing is going on in Melbourne. Okay. That explains a lot. That explains
my fancy hat. Yeah. What do you actually? I don't know what the proper name for those hats are called.
I don't know. They probably have a proper name. Guys, do you know what that name is for those fancy hats, especially the ladies like to wear, or for horse racing? Let us know in the comments, please. I'm not into horse racing at all, simply to the fact that I'm mortified of horses. I don't like them all. I'm super afraid. Like the wife of my brother has like a couple of horses, and she always say, "Oh, come here, you can pet them." And the one time I dared to pet this giant horse, it like put his head on my shoulder and then bit me into my neck, which left a giant bruise. So that really added insult to injury already.
Yeah, it's scarred you for life now.
Yeah, really.
Hopefully, no actual scars, but.
No, not. It was as gentle as like this giant 5-meter horse can be.
Yeah, horses are great. They are scary with their eyes are scary sometimes. Like when they have them in horror movies as well, because they're just full black, right?
Yeah,
and like zoomed up real close, they look scary. Like from a little bit further back, they're pretty nice.
But for an animal that is that large, I don't know why they have to be so scared, like of little noises all the time. You don't want this. Like to be around an animal who gets like freaked out by a fly or whatever.
Yeah. It's weird. And then other things they're fearless. Like people ride them into battle and stuff. It's such a
such a contrast.
Yeah,
there are only two sides of a spectrum for a horse. They cannot be on the middle ground.
But it's a fascinator.
Fascinator. That's a nice word, actually.
Fancy hats. Yeah.
I'm going to remember that next time I put on my fascinator.
Yeah. No, I didn't watch cricket yesterday. Infinity. Been busy getting stuff ready for the week. Since I'll be gone from tomorrow till Saturday. So that was pretty much what my whole weekend consisted of. A bunch of housekeeping before I go. So, what else are we looking at?
Jones took a gold on the 4-hour time frame. Not a bad idea. I agree with you, Jones. As I said earlier, I'm looking for a long there today as well. It seems like for now the 4,000 is holding up pretty decently. So just make sure you have your stop there on. Do you have a stop somewhere, Jones, you want to share with us, or maybe you want to keep this a secret because you're afraid LJ is going to fish your stop? See, I'm not alone. By the way, I'm afraid of spiders as well. It's one of the reasons I never could come to Australia.
Yeah, look, a lot of spiders. That's fair. There are. So I can't argue with that.
See,
I forget what percentage of like the world's spiders we have. It's something ridiculous.
Yes,
or at least I think total numbers like South America, like the Amazon and stuff or something. But I think we've got like 65% or species. I don't know, some number like that. It's somewhere up there, which is nuts.
And then it's not only those super big ones. What are they called? Like the huntsman spiders. And we have those too, but they are like miniature, you know, they're like this large, which already is enough for me. If they suddenly jump out from behind the radiator or something in your apartment, but like if I see the Australian huntsman spiders, and there was this one video, where some politician had like during an interview a large huntsman spider crawling on her. It's like it's a heart attack. But they are, from my understanding, pretty harmless. It's like more the funnel web spiders, black widows, and all those nasty little things that make your flesh melt when they bite you. No, thank you. No.
Yeah, and sneaky little redbacks and stuff.
Yeah,
which are like tiny.
No.
And they hide under the chair when you go and sit outside or something, and then come up and bite you. So
we don't want that. Back to gold. Let's talk about something more.
I don't mind gold from here near term. As you can see, like you've got this, it's sort of building off the 10 moving average through here. I use that in the same way you use the 8 deck. Right?
Yeah.
So yeah, very similar deal. Yeah, I mean, we seem to be holding the other side of the sort of rough channel that we have through here. So I can definitely see this coming up near term. I think as talked about with Jonathan last week, sort of looking for some kind of move. I can zoom that even more up into this kind of area, and then this will be kind of the base.
Man, right? you have the best charts in the world. It looks like always like I don't mean that in an insulting way. On the contrary, looks like I print out a chart and give it to my daughter and ask her, like, tell me what's happening next.
Here's the crayons. Yeah. But yeah, no, I just find it the easiest way to like communicate and
absolutely
show stuff to you guys, right?
I'm happy there's somebody else out there who's as good in drawing as I am.
Dude, it's hard with a mouse, right? To get it just
not only with a mouse, like also on paper. Like my capabilities of drawing stopped at drawing stick figures.
Fair. See, drawing I can do. Drawing art, I'm quite good at. But yeah, the computer with the mouse is very different. But yeah, so longer term, looking for some kind of ultimate deeper move down into the 3,700, 3,900 range. What is it? 38.20. Like we were talking about with Jonathan last week. But near term, want to see some kind of move up into the higher 4Ks before expressing some kind of short from there. So this kind of higher cluster up here, where this red line coming through here, that's the 100 moving average on the 4 hour. That's looking like a pretty decent zone. So if we hide these scrappy drawings again, you can see that's through this sort of cluster after the big fall there that we sort of traded back and forth between.
But
so it'd be about the middle point there.
Like midterm, still expecting lower prices, or what was the yellow zone you marked on your chart a little bit?
Yeah, so that would be like ideal pullback point to down there. So if let's go out to like daily here.
Where's that zone for you at the moment?
So it's about 37.20. I think it was meant to be 37.20 down to 36.20.
Yeah, that aligns perfectly also with the bull market support bands down there that I mentioned earlier.
Because we were talking about, I think last week we were talking about Jonathan's like longer term portfolio and him wanting to add more gold and reduce some of his Bitcoin holdings, basically, and shifting more into gold. I was saying, dude, the primary pickup zone will be probably down here. I think once you get that kind of a drop, that's where you want to layer in for longer term holds. So yeah, that's general structure. But yeah, so the 10-day moving average is climbing right up through there, which will roughly come inside with that 4,100 for you guys. So looking for this to run up into there, and we get all the drawings back into that 10 moving average. It's basically where my cursor is, okay? And then to come right off. I promise I will spend some time cleaning up the charts whilst I'm in hospital, okay?
But it's always nice, if you draw on a chart and then kind of you don't use that chart anymore, and a couple of months down the road you use that chart again, and you see what you actually drew in the past, and then to see like, oh, I was like spot on, or maybe I completely missed the whole picture of what is going to happen in the future.
Yeah, that's why I typically leave it on there. So like when we come back and talk about stuff later, I can you can point to here and this is what happened, that sort of stuff. But I think some of them are getting a little bit. They need some pruning. I got to prune the hedges, something like that.
Yeah, do it.
Yeah.
Yeah, but I pretty much for me really it would be, in order to be a bit more convinced to really see that drop in gold down to the zone you mentioned, I want to see us closing below the 8 weeks moving average, which if we did it today would be somewhere 389, 3,895, 3,900, 3,895, something like this. I don't think necessarily this is going to happen today. And as we move forward on Mondays, of course, those weekly moving average also change. But for sure, if we drop into that zone down here, which aligns,
yeah, this
very
is
much
over the
with,
next.
Yeah, of course, yeah. I know, and you're not talking about that, becoming the truth today or tomorrow or this week or next week. But yeah, that would be one of the rare occasions where I would say, now I'm going to buy gold. Because it's such a good risk-reward ratio. Also, you can basically still have a quite wide stop, which you always need to have for gold because of the crazy wicks it sometimes have. But the upside potential, even if you have your stop down here, is like so much higher, when you stop. So we're talking about really 3, 4, 5 are probably you can have in a trade there. Yeah, like James says here, from 4,100, a 10% drop, that puts us already into that reach. We're talking about $410 then.
Yeah,
of a drop. See, and now I'm going to clean up this drawing very quickly again, so you cannot hold me accountable anymore.
Kavika was saying before, show you the Melbourne Cup stuff, so I will.
Melbourne, oh, nice. Oh man, that's crowded. These are kind of crowds. It's like hundreds of thousands of people or what watching. Yeah. Crazy horse race.
It's ridiculous, hey?
Oh, look at that fancy building also. I bet it's like super expensive also to be in the live audience there.
Decent dude. I couldn't imagine adding up the net worth of all these people in here. These are
back then when I was living in Singapore, I always wanted to watch the F1 race live there. I mean, I had a pretty good spot from my office window. They would basically race there, but it's like you see them like 2 seconds, and then it's gone. But it was back in the days when Vettel was still the champion.
Yeah.
So I thought like one day, you're going to buy a nice ticket, so you can see it from the grandstands or whatever. And it was like several $1,000s for a really good ticket. So it's like, no, I'm not going to pay that really.
Yeah. At that stage, you might as well end up... you might as well shell out a bit more and get like one of the sort of hospitality suites.
Yeah, absolutely. Yeah.
With like Porsche or something, like at that rate. Because they sort of go, to 15. But at that point, when you're spending 7, the differential is like...
Yeah.
It's still a lot, but you don't want to spend 7 and then be stuck in crowds, right? Then that's like you might as well just not spend 7,
Then you want to feel superior, have a nice catering, be above everybody else, and
you get aircon, you get drinks.
It's not like you are going to see much of a race then too. You're just looking.
You sit down and watch it on the TV.
Yeah, you end up watching it on the TV anyway. So there would be maybe if you put in another meet and greet with Nico Hulkenberg, for example, for me, then I could consider it.
Yeah.
Or meet and greet with Oscar also. just to tell him,
Yeah.
I have this guy I
Like
stream with who hates you. His name is LJ.
that is the benefit of those suites, because you are close to that. Often even just by accident, you get to run into them and all that kind of thing as well. Just searching something.
100K bets on horses minimum for those spots. Yeah, probably you're right.
I was trying to find how much is actually bet by the country.
Must be a lot, no?
On average, the average Australian, so the average is just divided by the whole population. The average is $209
That's a lot.
on Melbourne
That's
Cup.
really a lot. I mean, not everybody's betting that, if like one and 200 or 300 does a bet.
Yeah, and it says of that portion, about half of that is betting. The other half is spent on entertainment. So like I was saying, the drinks, the events, stuff that everyone does, right? So that's big on average per every person. That's quite a lot.
I never got also like the kind of the gist of betting on sports or stuff like this. Also when it comes to casino, and I've been in a casino once in my life, which also was in Singapore, and I exchanged like $100 into chips because that was like the minimum. And when I lost it within 2.5 seconds playing roulette, because the minimum bet was so high. And there was this Chinese guy standing next to me. He had this large stack of $1,000 chips, and he would like just take them and do like bring, bring, bring. And wherever they land on the roulette table, he would be like. And I think he gambled away at least like $25,000 or $30,000 in the time I was there. And I was like, man, as a trader, investor, this really hurts my heart, Like,
I know.
Like you have a below 1 risk reward ratio and you're just gambling it away.
Yeah, it's crazy, honestly. Yeah. I don't know what the stats were from last year, but 2020, it was like 280 million.
Wow.
And I'm sure it'd be way more than that.
For sure. Yeah, for sure.
Yeah. So, yeah, it's wild. Anyway, it's a big thing here. Yeah.
Any last words on my favorite asset in the world? And I mean that in an ironic way, oil.
Oil. Didn't I have oil put on the side here? I swear I had it. Oh, well.
We have it every now and then. Yeah, we talk about oil, not me, because I'm like the worst oil trader in the world.
Yeah, I'm just trying to find where I had it. Did I accidentally delete it? Yeah, because I had stuff mapped out.
You were frustrating. You lost. That's why you deleted it. Admit it.
Where? Yeah. Oh, it might be on here. No. Which one was it on? Oh, it's right here. What am I talking about? There we go.
Here we go.
Here are the drawings. I was searching WTI instead. Yeah, all my drawings. So, WTI, basically, this is a swing trade that I took on personal accounts the other week. So after we made kind of a triple bottom through here. So I'll delete all the drawings on this. So base there, and then this base. So we're finding nice support through there, through about 56 on WTI. We go back to the hourly. This was on the back of, we basically had a bunch of all the sort of dovish-ish news for oil come through as far as supply and everything. Russia's still putting just as much supply into the market just through side channels. US has kind of given up trying to police that or, rah-rah about it because it's next to impossible. Then the other portion that we had from this driver is, given oil prices quite low right now, the US administration has started to replace the SPDR, so the Special Petroleum Reserves, right? So that's the countries back up oil reserves that they hold there. They had depleted them earlier with Biden when we had the Russia-Ukraine thing kick off and energy prices went through the roof. And we had inflation going as well. So to help bring that down, they unloaded all those barrels. At this point, they do need to replace it. So that's what's helped some of this lift. Now, as we saw before, I pretty much expect price to just sort of range within this area through here and just play ping pong between each end. Bit of consolidation through here near term. So again, it's one of those things, just follow whatever the current structure is. You've got the moving averages shuffling up through here. We've now pulled back into them. Whoops, I didn't want to move that. So I would say we're probably due for a bit more churn through here, something like that, move up to the top, and then we go down and keep doing this back and forth type thing through here. But yeah, oil overall is basically a consolidative type pattern between 65 and this 56, low 56 area for the near term. So just play it end to end, and then you've obviously got the section portions through there. This is kind of your dead center point, roughly through those tops, so 62.5 and about 60. So there you go.
And by the way, I have good news for you, LJ.
Yeah.
We've reached 100 likes. So.
Oh yes, I'm gonna live. Thank you guys. Thank you. Oh, that's amazing. If we got to 200, I would have got superpowers. So that's unfortunate.
Nice, but even if we don't have superpowers, we have two gentlemen in the back already eager to join who definitely have superpowers. Richard and William, how are you guys? Welcome.
Yo, how are we doing, guys?
Hello, lads.
Well, hello there.
Hello.
Guys,
good to see you.
Yeah, and yourself. How are we doing?
Good. All prepped for tomorrow to leave. So
awesome stuff. Yeah, well,
go ahead. Sorry, I didn't mean to interrupt. You had something to say.
How dare you? No, it wasn't that important. It's just a hello. You could probably notice something slightly different today, maybe by my camera quality. It shouldn't be by my audio quality, so that's the same. But my PC's down. My Wi-Fi's down. Everything is just completely frazzled in the house until tomorrow morning. So I don't know if you can see that little green button in the top right-hand corner of my phone. I'm currently streaming on through my hotspot on my phone.
But the quality is super good.
Oh, that's awesome. That's awesome.
Yeah.
So
yeah, it is good.
Yeah, that's okay. Then at least the quality's there. So yeah, guys, I do apologize if if it dips in and out. It should be okay. So I was streaming this morning with Rich, and everything was fine. So I'm hoping it's going to be all good. Nonetheless, if I do dip in a little bit or if I freeze for a couple of seconds, I am back. It's just trying to deal with streaming through mobile data through my phone to my laptop. It's not even on my PC. I couldn't connect my mobile data to my PC this morning. It was just so much effort and stress. So it's on my PC. It's on my laptop. I do apologize, guys, but I won't be. It's a no trade day for me today, just because flicking between like terminals and the streaming software and trying to do my other stuff that I do to make sure that I'm successfully trading live is it's going to be a bit of a kerfuffle and a bit of an effort today. So nonetheless, I'm here. I'm all good to go. I got my coffee, which is more important, and I'm joining you guys on stream. So it's a happy day.
Nice,
definitely.
Nice.
All right, guys. Then thank you for everybody. To everybody, LJ, best of quick recovery for you. Going to see you. I think I'm going to be on Wednesday, if I'm not mistaken again. So not seeing you next week. See you on Wednesday, everybody. And yeah, have a happy time, Richard and William. Take care and bye.
Thanks, Dirk. Have a good day, mate. Thank you very much. Cheers, Dirk. Have a great one, mate.
See you, Dirk.
What's up, LJ?
Not much. How you doing, Rich? Going well?
Did you survive the weekend, mate?
I did. I had a massive sleep in on the Saturday.
I bet you did. Dude, you needed it. Bro, you needed it.
Yeah.
I'd be amazed if you even got out of bed.
I survived though. I made it pretty far. You know.
You did. Like,
strong,
what time did you end up going to bed on Saturday?
Yeah, 10:30 a.m. As soon as I jumped off there, I just bang passed out.
Dude, you're absolutely nuts, man. I couldn't have done it. Like, I've done it in the past, but I couldn't do it anymore. Like, fair play, dude. You're
that's
old,
a young man's game. I'm telling you, like,
mate.
staying
You're
awake for more than
older
24
than me,
hours.
and you act younger than me. How you manage it, I'll never know. Honestly, mate, you're like, my body couldn't take that. Like, if I don't get like probably 6 hours sleep, like I could probably cope with 4 or 5, like at the very bare minimum. 4 or 5 hours sleep. If I get any less than that, dude, I'm not a great guy. I'm just like I'm a zombie. I'm like a nasty zombie. I just like walk, like slogging my body around the place, and then like someone will talk to me. I'm like, what? So, mate,
he'll get angry when he hasn't slept well.
Mate, literally, like, credit to you, LJ. I couldn't do it.
Dude, look, I don't know how much longer I'll be able to do it. Like I've been
fair. Yeah, you got another
still
year
doing it,
I reckon.
But I don't want to like I feel like when you do it when you're younger as well, it's not as damaging. You know, like you start doing that when you're older, it has like actual like health, detriment that is very like insidious and like, slowly like creeps in. You know, it's like so.
I mean, there's a reason why you have to go to the hospital for a week, so.
It's all those late nights, man.
Yeah, it's not anything we've done on a Friday. It's not because of that.
Yeah, nothing. Dude, nothing to do with that. I don't know about.
Dude, I'll have plenty of time to sleep in there, so. Yeah, exactly. I don't know how much I don't know how much I'll be able to like. So I'll take my laptop and stuff, but how much I'll be able to use.
I was gonna say you are taking some form of work with you.
Yeah.
I do. I'm like that. I couldn't not.
Yeah.
Dude, I
think. Why don't you just take like rest? Just like leave everything. I don't know. Catch up on some movies or something like that. Like completely step away from work.
I'm sorry, like, Richard. Have you tried doing that?
Yeah. Like 4 days in hospital. I'm not working.
Really?
There's no way.
Oh, mate, I spent
There's no way.
nearly 48 hours in hospital on an IV and all. And dude, I was on my phone working the whole time. I hate it. I had to be doing something.
Dude, your body needs to rest. You will heal up faster if you actually rest. Sleep, eat well.
Yeah.
You know, like get away from that.
The body needs the rest. The mind doesn't. The mind can stay active.
The mind just needs entertainment. So entertain it.
True.
That's all it needs. The body needs rest. Like, don't
so if that's the case, then LG is just going to stay watching us on stream.
Oh yeah, I definitely will. I'll check in.
Yeah, 100%.
The thing is, that's the other thing though, because like I think roughly at this time, it's like lights out, coming up to 10. So that's the other problem. Of course. Like, they'll be like,
I forgot about that. Hospitals are like prisons, man. Like after a certain time, doors lock and lights go out.
Dude, I was about to say, when last were you in prison? When last were you in prison that you can make this comparison?
Do you want the real answer to that or not? I'm joking. I'm kidding, guys. I've not gone to prison. You
see these
live streaming with a convict.
I used to make toilet wine.
Yeah, I used to make shivers out of the bones of my soulmates.
Okay. All right, mate. Relax.
Yeah, thanks, Paulie. I'll say bye to you guys now. I'll see you next Monday. I get out on Saturday sometime, so next Monday I should be back just fine. But I'll say bye and let you guys actually get to.
Are you sure that's not going to be a poker night in hospital? We can have like poker night hospital edition. That'd
be like in the morning. I'm thinking about it. I'm thinking
you love the nurses coming in, being like, "No wonder you're here."
Like, what is this guy doing, dude?
Mate, literally, they'd be gossiping about you in the hospital waiting or like staff room.
Yeah,
you can run up to all of the nurses and say, "Come have a look. Come have a look at all of my friends."
Look, this is my friends. This is my friends.
Yeah. All right,
Anyway,
LJ,
LJ,
you go rest up.
See you
Good luck
later.
with the hospital thing, mate.
See you
We'll see you
later,
Good
later.
luck.
Yeah,
Good luck
speedy
trading to
recovery,
everyone.
mate.
Yeah, thank you. And yeah, see you next week. Cheers, guys.
Shot, mate. Good luck. Enjoy.
Peace.
What's up, William Davis?
Hello there.
You're
Dude,
a
I've
bit.
just seen...
Your camera is a little bit fuzzy, but
Oh, really?
yeah, but dude, it looks good.
Let me play with my ring lights.
It actually looks better than your normal camera setup.
Is that better? Oh, that's bright.
That's very bright, mate.
Is that better?
Good. Looks good.
Dude, I'll tell you what, I got too many ring lights today. I got 2 ring lights instead of 1. Dude, my eyes are on fire.
Dude, blink more often. Maybe just... I have 1 ring light, but I have glasses, and the thing is,
Mate, I know, right.
you can see
I gotta
them
show
there.
you guys this. Look at the glare.
Tilt your head a bit down. No, you still look at your screen, but just tilt your head a little bit. There we go.
Oh,
No glare.
No, that's just weird. I can see my eyeballs through my glasses. That just looks weird.
You're supposed to see your eyeballs through glasses, mate. It's like glass. It's lenses.
Nah, that looks weird.
Yeah.
I feel like the guys in chat would have too much to say about that. Going to take them off. Oh, dude, my eyes are sore though. Huh?
No. It's just Alex asking if you've got glasses on. She wanted to see.
Well, if Alex wants to see, I'll put them on one more time. Alex has seen my glasses, has she not? Have you not shown her a picture of me with my 4 eyes?
Nope. But seeing as you lost your competition on Friday, I might have to have her create a trading card.
Oh no.
Yes.
Oh, that's true. I did lose my competition on Friday, didn't I?
Yes, you did.
Oh man, I forgot about that.
Well, keep your glasses on, and then she can. Or send
Alright,
a picture
I'll tell you what.
with your glasses on.
I'll put them on for a little bit longer, and then you can take a screenshot from it, and then you.
Oh no, dude! I want a proper photo, mate. I want good quality.
Oh, you mean you want a photo of me with my glasses on?
Yes, mate. We're doing this. You and
we're doing this properly.
MGN. All of you are gonna get your little trading cards, which I'm collecting.
Oh man,
you can't say that.
I can hear it laughing in the background. Then, what'd she say?
Right, you said you're not doing a trading day today. Obviously, good reason. There's too many things.
Yeah, I'll still bring my. I'll bring not a terminal, but I'll bring my trading view up. But
you can do that. Let's take a little run down through the EU, GU gold, and maybe some of the indices if you want to, maybe some other pairs. If anybody in the chat would like us to have a little look-see at any pairs or something like that, just drop it in chat and we will try and give a rundown of it. Today has been weird. Like, gold has been absolutely non-existent for me. It is just... I said it this morning during our stream that gold to me is kind of like stuck between like these two spots, like this bearish base of mine, which is a daily one, and the opposite one over here. So if I just go over to the daily, we'll see that price had been incredibly bullish, just absolutely ramping, eventually making all-time highs and then just making a double top and really struggling, falling off from that point. No real attempt to push higher, and we've just been going lower. This bullish daily base got wicked and then a slight little reaction off of it. If I go down to the 4-hourly, you'll see the wick reaction over here. This is still the daily base. This was the daily base created on its way down. There's the double top. So as it stands right now, gold to me is super sideways, even though it is a large range, like it is like a $200 range or something like that. But the point still stands at, it's like 168, like almost $170 range. The idea is just that there's no direction yet. So if you're doing intraday or you're doing scalping or something like that, there's opportunities for you. But in terms of like swing positions or like really higher time frame trades, you're consolidating effectively. So you have this very, very little upward current trend, channel really, but it's a weak channel. You are making higher highs. So if this down here was the low, that is a higher high in relation to that point. This is a higher high in, and higher low, sorry, and then so on and so forth. But it's very weak in my opinion. So if you wanted to look for a buy opportunity, where would you start and where would you end? Just on this that you're seeing here. Obviously, you could try and trade it in line with the. Let's go to the half hour. You can try and align it. Let me just select this again. So, oopsie. If you did something like this, you would want to attempt to buy maybe after some point down here to try and aim for that portion up over there. And then you'll risk just below that. But like, you need impetus. You need something to force it higher. You know, don't get in when there's...
You need that momentum from somewhere.
You need momentum. You need something to push it, to really say, so you're either reacting off of a point of interest. So you're reacting off of a point where you can see, yes, previously there was a proper reaction off of, and it's testing again and having a similar reaction. You want something like that. Or you want to see, okay, we're trending, but we're trending with volume. We're like really moving in a direction like we had done previously on these points up over here, where right now it's very weak momentum. It's very weak upward movement. So to me, it's really not worth it for me to get into gold at all right now.
I quite like I agree with you, but I like the breakout that we've had to the upside. We're just, like you said, we're just lacking in that momentum. But if you have a look on the 15-minute, I tell you what, we'll have a catch up with chat, and then I'll bring my chat up. But if you have a look on the 15-minute, we're coming into an area now where price is looking good for buys, but there's that potential that we may want to sell off from maybe like $1 or $2 above. But if we look to the left, we've got that imbalance, that downwards imbalance, or that bearish imbalance to the downside.
I mean, we have some consolidation here now, especially if you go down to the 5-minute, you'll see like it's very, and this is London. Like London session is supposed to have like a lot of.
We're supposed to have a lot more momentum in London than what we have had.
What I would say is that now on the 5-minute, we are creating a rally, which is these candles here after a consolidation break. So let me move this back a little bit, then you can see it with the drawing. So this is the consolidation. Then we started breaking out. We made a base, and then this candle over here is then another rally candle. The issue is, what do you aim for? Where are you aiming? This was the low point over here.
Yeah, I like that. Like I said, there's 2 points that I'd target, which would be the high, which is the previous high, which is there, or
and then your stop loss underneath.
Exactly, or the potential point of reversal, or what I like to call the potential point of reversal, which is where you drew up just now, which is the low previous to the previous high. No, above. Where there you go. Yeah. So that would be a buy target for me. That would be like TP1, for example. So that's what I would be looking at. But I don't know. Like you said, you're lacking in that bit of oomph.
Just the only thing that I can see is that it really struggled to push lower than this point. So
I mean, I really struggled as well. Like we
really struggled.
Yeah, which is nice. It's good to see. It's really good to see.
This is an hour, almost 2 hours that it's just been kind of like stuck here. Now you basically have, let's say if this is a box, let's make it on the bodies, just for the sake of interest. If this is a box, you now have the break of the box, but you still haven't created a new high. So you're still in this little bit of a downward movement, even though you're starting to show that there's a potential that you want to start pushing out of this box. Where's the next box for you to test? Let's have a look at the 15. You have this whole section here basically to be tested. What do you have above that? So that's a swing point. That is a swing point. And then this is a swing. Oh, misclicked. This is a swing point over here. You're making lower lows here.
Yeah, exactly.
Lower highs, sorry. Here, lower lows. Oh, misclicked again. So you have lower high, lower high, lower high, lower low, lower low, lower low, if you know where it was tested. So this one over here, this one over here, and this one down here. To me, price action is still showing bearish, but I'm seeing it starting to want to push up. So if it can break above, at least take one of these lows or these highs, sorry, at least take one of these highs, then we can potentially see upward momentum like really come into play again. But as it stands right now, I have zero interest in it. I mean, especially if you consider just like from here, this was last week Thursday. Didn't break anything there. Didn't break a new low, didn't break a new high. If you just take this small little bit of consolidation there, nothing. You're just jumping in between.
I'm trying to
from last week. Yeah.
Guys, I do apologize on behalf of me fiddling with my computer right now. I'm trying to plug my fan in. I can hear my laptop starting to get a bit hot.
And then this consolidation that we have here is effectively smack bang in the middle.
There we go.
Of this, let's say up over there.
Yeah, I'm seeing some of the comments as well. Oh God, where have I gone? Okay. This is what I hate about not having the correct. This is what I hate about not having multiple screens. I like having or like one big screen so I can divide them. I was actually chatting about this morning, guys. If anyone knows like a double monitor add-on to a 17-inch laptop, let me know. Because it's a bit of a kerfuffle. There we go. Okay, I'm back. I'm back properly. Cool. I'm just looking at some. Where'd the comments gone? Oh no. What have I done? Oh no, I've done something.
What did you do?
Rich, I've done something.
There he goes. I guess I think he just accidentally closed everything. Yeah, but he'll be back. Will be back. In the meantime, I'll have a quick little look at the chat. I just want to scroll up a little bit and see.
I'm back.
I was about to say, dude, like for a technologically advanced age, we really do struggle with technology.
Dude, I'm a tech phobe. Honest to God, I am a tech dinosaur. I hate technology. I just love how it makes me money.
I mean, fair.
Yeah. Cam saying phone died. My phone hasn't died. I got my charger here plugged into my computer. Like it's so my charger is charging my fan that's cooling my computer, but my computer is also on charge, which is also charging my phone. It's like it's like recycling itself. So I'm all good. I'm good on far as charge. So yeah, guys, I do apologize. I'm back now. I'm seeing some of the comments as well. Checking out gold. Let me just have a bit of a catch up.
I was also just kind of like I was about to run through some of the comments.
Yes. Let's have a quick doodle through. See who's saying what. I've seen one of the guys saying, "Will, your camera is actually better than usual." Will, your video and audio is even better than before. I feel
like
closer.
Yeah.
Yeah, like I said, I want to upgrade my. So like when I get back from Hong Kong, I'm gonna upgrade my camera setup so that I can actually, you can see me a bit better and you can see me in a bit bigger. Whereas like before, like I'm all the way back here, and it just doesn't feel as quality. So I appreciate that, Michael. Thank you very much for the words.
Imagine having internet problems in 2025. You got to sue your ISP.
Yeah, no, I know. But I was on the phone to them yesterday for so long, just for them to find out there's an issue outside because of a storm. And they were like, oh yeah, we'll send a technician out. I was like, right, well, I've got a lot to do and I need Wi-Fi by tomorrow. Oh, okay, that's fine. We'll be out Tuesday morning. No, dude, I said tomorrow. Not Tuesday. They're like, yeah, that's.
We'll be there on Tuesday. We'll be there on Tuesday.
Yeah, literally, I was like, no, I don't want Tuesday. I want today.
Tomorrow, Monday. I need it fixed Monday.
I need it fixed yesterday. Like, I couldn't watch Netflix with the missus. Like, I need Wi-Fi.
I mean, was that the important thing? Is this like you've got a stream, you've got trading?
So I got to interview a trader. I got streaming. I got live trading. My career.
I have a business to run.
I got a business to run. Screw all that, dude. Like, I got a girlfriend that I need to put Netflix on for. Oh no, but I did say, I was like, dude, like I really need Wi-Fi for tomorrow. They're like, yeah, I'm so sorry. Like Tuesday is the best we can do. Like Tuesday at 8:00. And I was like, but my stream starts at 8:00. Like, sorry. I was like, oh, it's just not good enough, really, is it?
Yeah, we need more from you, ISP. We need more.
Yeah, we like. Reimburse me. What have you lost? Nothing. What have you lost? The potential to earn money.
It's the potential. That's
what I mean. Like, could you imagine? Like, could you imagine saying like a trade, like trying to recompensate a trader for losing, like, or for not earning money? Oh, how much do you earn? I don't know. Yeah.
Well, it's easy. That is very easy because you work on a probability scale. You basically have all of your trades that you had on Monday.
Probability of me hitting a 3% TP.
Literally this. You have all of your back-tested data. You have all of your physical trades on your terminal. And you say, on Mondays, this is my probability for income on a Monday, as an example. Or on a Tuesday. So you have physical data that can show that you're very profitable on Mondays, as an example. And then you say, well, due to you screwing up my internet, you've caused me to lose potential income of this amount.
$10,000 US. It would have been a 1 to 10 hour trade.
Can you imagine? On GU and EU this morning, we were having some difficulties with our stream this morning, and there was some stuff that just wasn't working the way that it was supposed to. So I missed a trade that was exactly in line with my strategy. First of all, and secondly, I have a new account. So a while ago on the 5ers stream, I mentioned that I was going to start trading live on stream. So I have an account with the 5ers that I am going to trade live only during stream. Whether it is our stream or this stream. So analysis taken on stream, drawing taken on stream, trade taken on stream. That's the only time allowed to trade that account. That's the first thing. Second thing is I am going to journal every trade, and I have a spreadsheet that I have set up to show everything about that trade, the risk management, what it is. And then I will also, once we have a fair few trades, you can see the equity curve, which I will then show you as well via the 5ers hub. So you'll just see the equity curve as an example. So completely 100%, no fluff, straight up in front of you. That's it. Like complete honest trading. So
what's gonna be super cool is to have someone live trading with me. That's gonna be super cool. Haven't had that in a while. So
Yeah.
You will literally see me and Rich live trading our accounts. That's something I haven't really done. I haven't really shown you my back end of my terminal. I suppose I could do that. No, but
you don't have
yeah.
to.
No, of course not. But it'd be good to show you the equity. I mean, I could show you the equity curve anyway through the terminal.
I mean, you can literally just take a screenshot. If you don't have to show all of the detail, but you can just show a screenshot of your equity curve, and you can just put it on your screen. That's what I intend on doing. So just so I don't give away like information about.
Yeah, don't give away the obvious stuff. You know.
Yeah.
Speaking about giveaway, SWL Music's saying do giveaway. Well, so rumor has it, and the reason I'm saying rumor has it, otherwise, like I'd be shoving it in you guys' face, and I'd be like, guys, there's a giveaway. But don't quote me, because rumor has it, I've heard floating about in the background that there may be a giveaway at 90k subs. Am I right with that? I'm pretty sure I am. So guys, there's going to be a big sort of celebration giveaway for 90,000 subscribers. So guys, you know. You make the giveaways possible. You know, the giveaways happen when we reach these peaks. So make sure you subscribe to the channel, guys. You know, the more subscribers we get, the more you share our stream, the more you repost our stream, the more people you get to watch and enjoy what we do here. Then yes, we will be doing a giveaway, because with the minute we hit 90k, there is a giveaway. But more importantly, who knows what may happen when we hit 100k? Like, even I'm excited for that. Like, I'm just excited for us to hit 100k. So guys, give us a big thumbs up on the video. It really does go a long way, and it shows that you enjoy what we do. And us content guys behind in the background, we all like to see you guys supporting us. It does go a long way, and it means a lot. As far as the giveaways, and as far as, you know, supporting the 5ers and supporting us as a community, give us a big thumbs up, guys, and make sure that you subscribe to the channel, because the more subscribers we get, like I said, yes, SWL Musics, there will be a giveaway. I don't know how big. I'm assuming it's going to be quite a big one, because, you know, it's a monumental moment. You know, 90,000 subscribers. But I think 100k is going to be the one to watch out for. So the quicker we get towards 100k subscribers, guys, you know, who knows what's going to happen.
No, agreed. Definitely, if we can definitely get to 90k. Before the end of the month.
Oh, there we go.
We can.
Remy had actually answered it. We hear you. Next big giveaway is coming when we hit 90k subscribers. I thought it was. I was gonna say I knew it.
You definitely heard correctly.
Yeah, that's okay then. Thing is, like, knowing me, like, I'm so busy, like, on my phone. Like, I get like hundreds of text messages, and I'm like flicking through things on my phone, and like I'll read. Like, oh, we're doing a giveaway, or oh, guys, you know, we're nearly at 90k. You know, this is super cool. Like, guys, we're all doing so well. You know, all the supportive stuff. Like, we're all, you know, good friends. Even on stream and off stream, we're all good friends. So, which is super cool to see the vibes there. But I quickly read stuff, so I don't know whether people say, "Oh, are we doing a giveaway?" or we are doing a giveaway. So yeah, sometimes I'm like, oh god, like, do I tell everyone there's a giveaway, or do I just wait for it to be announced? So yes, guys, there's 100% a giveaway.
I mean, I generally would say wait for the announcement, you know, from the officials.
Yeah, exactly. Yeah, 100%.
But in this case, not bad. It's not bad.
Peter's saying it doesn't matter. We hit a 15-minute fair value gap. Okay, I'm actually gonna. Have I shared my screen? Oh no, I dipped off, didn't I? Okay, let me share my screen.
Yeah, you can share your screen and whatnot. There is a question as well from Point Break that I think is a good one. Okay. So we do that one after you've had a look at your 15-minute fair value gap.
Yeah. So this is gold, I'm pretty sure you're on about.
Yes. We were discussing gold at this point in time, so...
I thought so. So, 15-minute fair value gap is going to be this one here, I would imagine.
Correct me if I'm wrong. Like, a fair value gap, is it not supposed to be, let's say, for argument's sake, 3 bearish candles, and then the gap that's made between the first candle and the third candle's top wicks? Isn't that what a fair value gap is? Or am I just not understanding?
I mean, that sounds about right, but I don't think so. I'm pretty sure a fair value gap just has to be 3 candles in It doesn't have to be in a specific direction. It just has to be something like this. So I'll just draw something out real quick for you guys. Ooh. So a fair value gap.
How are you going to make the wicks?
Huh?
How are you going to make the wicks?
With absolute precision and legendariness, like because it's me. Yeah, you look at this. Look at these wicks, guys. Le Bosch. Oh wait, I see what you mean. Like this. So I'm just gonna imagine a fair value gap would literally just be the gaps between this candle here and like these wicks here, for example. So if we're moving up like this, there you go. And I know, I'd have to be. Let me try and think about how a fair value gap would have to look. It'd have to be like this, wouldn't it?
I'm not somebody that trades the ICT concepts. I haven't studied them. I just, everything that I know about trading is completely based around my stuff that I found. So I've never traded fair value gaps.
I like them though. I do like fair value gaps. I just call them. I just don't call them fair value. I just call them imbalances. But I quite like a fair value gap now and then. It's quite nice. So as far as I'm aware, this is what a fair value gap would be in my eyes. Would be the gap between here. So there'd be an imbalance here. There'd be an imbalance in price action. So, for example, and this could be a bull candle, this could be a bear candle, this could be a bull candle. I don't think that matters. Again, guys, if it's an ICT concept thing, correct me if I'm wrong. So, and then using real-time example, I would imagine this would be candle 1. This would be candle 2, and this would be candle 3. So therefore, a fair value gap would be the distance or the gap between this low wick here and this high wick here. And the gap is the difference in the middle candle. No? Guys in chat, let me know if I'm wrong.
That I've been told is that it's 3 candles in the same direction.
Okay.
With a gap.
So
it's 3 candles. There are 3 bearish candles with a gap, and then 3 bullish candles with a gap. That's my understanding. But once again, preface: didn't study ICT. Have no idea.
I don't know. Possibly. That sounds plausible. That sounds about right.
You know who we need to ask? We need to ask Derry.
Yeah.
We need Derry to explain to us exactly, because he trades concepts.
Should I text Derry and say, Derry, what's a fair value gap?
Give us a definition, please, and some examples.
Derry, if you're watching this right now, can you hop in stream and show us what fair value gap is for 2 minutes, and then you can bugger off. Yeah, so for me, so I'm assuming this is what you mean by the fair value gap. I see where you're coming from, but I wouldn't solely use fair value gaps as a reason not to enter, because into consideration market structure, we are on this uptrend. We are trending upwards ever so slightly. So we are in this sort of like bullish channel. Yes, okay, we are putting in lower highs, which is a little bit worrying. Yeah, exactly. So if we jump down onto the 15-minute, we can see, yes, we had a big move to the downside here. We had this big 2-candle push down here. And then, oh God, no, go away. There we go. So we had this big 2-candle push down here. Came back into an area of interest though. We pushed with momentum down into an area of interest, where from there we consolidated, held, and then look at the candlestick characteristics. Look what's happened on the 15-minute. Wick, indecision, big bull push candle. So we've got that almost like bullish engulfing. And then, yes, okay, we have slowed up a little bit as we come into what you're referring to as the 50-minute bearish fair value gap. Now, for me, it's an imbalance. So for me, it's like, almost like a gap. So for me, it's an imbalance that I want to see filled. I want to see it rebalance the markets. Hence why, for me, I see price as zones, not as specific points. And this is why I like imbalances. This is why I like fair value gaps, because to me, it's not a specific price point, more so an area of interest. So therefore, it's a gap. It's an area of interest. It's a large point of view that price may want to come up into. Now, is it enough of a reason to say I'm going to sell hard from here? No. Why? Because look at the momentum to the downside after this candle here. Look at the stagnant price action. It just did nothing for a couple of hours. Now we're pulling back up with a fair bit of bullish momentum. Yes, we're slowing down. We're wicking to the downside, also showing that we are still trying to reject and move a little bit higher. So therefore, for me, my fair value gap wouldn't be candle to candle. Instead, it would be here.
Sorry, Will. Rodrigo just gave clarification. There's a 1 hour fair value gap, and it's three candles with gap in the middle. So it's on the hourly.
Oh. Yeah. Well, that just shafted my entire analysis.
not entirely.
Well, I'll tell you what, Rodriguez. Thank you, but I'm going to carry on with this analysis. Then I'll do another analysis with your 1 hour fair value gap. Yeah. So I suppose this is just me sort of analyzing or showing my vision of a fair value gap. Is it Rodrigo or Rodriguez? What did I say?
Rodrigo Rubio.
Okay, Rodrigo. Did I say Rodrigo or Rodriguez?
I think you said Rodrigo.
Okay, that's okay.
But yeah, thank you, Rodrigo, for the clarification. We appreciate that.
Yeah, awesome stuff. So yeah, I'll jump into that in a second. Yeah, so for a fair value gap for me, or an imbalance for me, I wouldn't be interested in this here. And the reason I wouldn't be interested in that there is it's not got enough weight. It's not got enough confluence. For me, it's just a little bit of, it's a bit of space. It's a gap. I need more reason to go into a zone. So for me, look, like I said, we've got a break and retest. We got this low here, pull back, break and close below this previous low. So therefore, it's a break and retest. If we go into the higher time frame, we'll probably find that this is some form of consolidation or order block or supply zone, whatever you want to call it. We'll have a confluence area. So now what we're doing is we're building an idea for a potential point of reversal, a potential point of reversal, PPR. That's a rubbish P. So we got a potential point of reversal here, due to the fact that we got a break and retest zone. We've got an imbalance or a fair value gap, but a better fair value gap, and we've got an overall space or area of potential reversal, an area of consolidation or supply. Now we can jump down to the 5 minute, refine it even more. And then boom, you've got your, oh God, come back. There you go. Now you've got your reason to potentially either exit a trade, enter a sell, or if we completely disrespect it and we have a candle move up and break and close, there we go, break and close a little bit higher, then we know that, okay, there's a good chance now we can start to increase our probability of invalidation of this supply zone and how it's going to get respected. Right, let's have a look on the 1 hour.
I think my idea of how the market goes is way more on the idea of support, resistance, or like demand supply zones. So supply and demand and momentum. So I want to see not the imbalances, I want to see the reaction point. I want to see where it reacted. Like, I understand with the fair value gap that there's this little space and it just broke through that space, and then you're saying there's an imbalance, price will come back to this point and then it's going to react off of it. But to me, in that area, you had just one directional move. Okay? So it just means to me that there weren't any sellers there. There weren't any buyers. They were just sellers. So it's not a point of interest for both sides. It's not a competitive point. It's not a point where I want to see them fight over it. Where if you have a reversal point or you have slowed momentum in an area, that means that there's balance. This is an area where the buyers and the sellers are having a nice little battle. And then who won? Who won the battle? That's what I like looking at. That's why I think
I like that.
Yeah, that's why I've never looked at the imbalances or the fair value gaps as something to incorporate into my trading, because it's just I didn't view the market in that way. Let's put it like that.
Yeah,
it's a good question.
I like that.
It's a good question from Point Breaken. It was about at this point it was about 15 minutes ago, but it says, Rich and Will, give me some mentorship on revenge trading. I have 50% win rate with a 2R, but I can't stop revenge and being wrong. So this is a really good question, because there's two things that I'm taking away from this. First and foremost, if you have a 50% win rate with a 1 to 2R, you're quite profitable, mate. It's pretty good. So for 1 to 2, that's good. The thing that I'm taking away from this is you're saying you can't stop revenge trading and being wrong. I get the idea that, and you can correct me if I'm wrong with this, Will, or if you think that there's something different to this, but when people generally revenge trade, it is usually because they have set themselves a specific expectation for the day, for the month, for the week, and they have not yet met that expectation. So they're forcing themselves to do trades or to take trades that they believe is going to lead to that expectation. So if my expectation is that I want to have 2 trades a day or win two trades a day, that kind of thing, and I don't win, I don't want to end the day on a loss. So there's this psychological break point where I don't want it on a loss. I expect to get 2 trades a day, winning trades. Now I'm going to try and trade. And then what happens is, unfortunately, you lose another trade, you lose another trade, you lose another trade, and you end up having 5, 6, 7 losing trades on the day because you were chasing that expectation, where the reality is not aligning with the expectation on that day. What do you think of that?
Yeah, I fully agree with that, but I'm going to build on it. So a 50-50 win rate is fantastic. You know, you can be a very successful trader on a 50-50 win rate. Now, I agree. You sound like you're giving yourself too much expectation, but it could also be that you don't actually trust your trading style. So I'm going to build on this Point Break with a question to you on how long have you been trading and how long have you been testing this strategy? Because more times than not, if you've got a 50-50 win rate, you can accurately say you got a 50-50 win rate due to the fact that you've got data backing it. Now, data backing it, knowing your win rate is 50%, knowing that you're going to take a 2-hour trade, you shouldn't revenge trade if you lose 1 trade in a row, because the 50-50 win rate, you know that eventually, whether it's 2 trades in a row, 3 trades in a row, 4 trades in a row, you know that eventually you are going to come off on top by 50%. You know
the maths play out.
The maths will play out, but that is only shown through data. Now, if you're losing a trade and then you're trying to revenge trade, or if you're losing 2 or 3 trades and then revenge trading, there's a good chance that you're still a little bit green with that strategy, and the maths may play out, but you're not quite trusting it. You know, or now the second point is you're completely new on the strategy. You win 1 trade, you lose 1 trade. You win 1 trade, you lose 1 trade. Happens a couple of times, and then you lose 2 trades and you go on tilt. Because instead of having data, you're trying a strategy, winning 50% of the time on average, and then as soon as you lose more than 1 trade in a row, you end up going on tilt because you've not got enough data backing up your strategy. So question to you, Point Break, is how long have you been trading? And how long have you been trading and testing the strategy? And have you got data backing it? If all the answers are the correct answer, and what I mean by the correct answer isn't the answer that I want to hear nor should hear, it's the answer that is genuinely true, because you're not going to cheat us, you're not going to impress us, you're not going to disappoint us, you're only going to help yourself or destroy yourself. It's just, remember, it's your own career in trading, it's your own money at risk. So if you lie to us, we're never going to know, but you lie to yourself. So best thing is be truthful always. Or if you don't want to tell us on stream, jump in the Discord and give us a message, and we can try and help you as best possible. But yeah, so that's the best thing I'd say to you.
I have a follow-up question as well. Sorry, Will. Why do you feel the need to carry on trading if you have, for argument's sake, given yourself a rule to say, I'm only going to trade one trade a day? Why do you feel the need to take another trade?
Yeah.
What?
I'm guessing it's going to be more of a revenge. I don't know. Maybe it is overtrading. Because what you're about to dive into, by the sounds of it, could be overtrading. But he's mentioned revenge trading, which means that he's trying to make up for a loss that he's had.
He doesn't like losing.
Yeah.
So
going off of what Richard said, is it revenge trading or is it over trading? Because
he's given an update. I do it, but one day I lose all of my profits. Losers keep coming. I have data and I've been journaling for 1 year. So you can give us more details, like give us a bit of context. So do you stick to one specific risk strategy? So if you say you're going to risk 1%, you only risk 1% and you stick to 1% all the way through. Do you have a specific stop loss to take profit ratio as an example? Like you do 1 to 2s, but like do you always do a static stop loss or a static take profit as an example, and then you deviate on your stop loss as an example? Do you have a daily rule that I'm only allowed, let's say you're a swing trader, you would not have a daily rule as an example, but as a intraday trader, you might have a daily rule and say, I'm only allowed to trade 2 trades a day. Give us a little bit of context, because the context matters. In this
100%. Like not only that, so I'm going to pretend now, and this is why context matters, because I'm going to try and pretend that you take 1 trade, win, stop trading for the day because you don't overtrade, you revenge trade. So you stop trading for the day at 1 win. The next day you lose 1 trade, you can't hack the loss, so you revenge trade. So this is the scenario that I'm going to pretend that you're in. So what I'd be doing if I was you is go ahead and take the trade only if it's an A+ setup, and you said yourself you got data back in this, so you know what an A+ setup is. So my challenge for you is, I don't care if you don't see an A+ setup. If you don't see an A+ setup, you don't trade. Simple as that. Sit on your hands, close the terminal, and if you really need to, open up a demo account. You shouldn't need to though, but practice patience, open up a demo account. Now, the next day, if you see an A+ setup only, take the trade. Now, the minute you take that trade, if it hits TP, close the terminal, journal it, then open up a demo account. Now, if you hit a loss, close the terminal, journal it, open up a demo account, keep trading on a demo account. If you need to itch that scratch, you're protecting your live terminal, or you're protecting your actual your asset that could do something for you, and instead you're moving over and revenge trading on a demo account. Now, this isn't recommended as a rule. This is quite an unorthodox way of trading, but I know a lot of people that do really struggle with revenge trading, and that is what I say to them as a last case scenario. Or a worst case scenario, that you do open up a demo account. Now, once you start doing that, you'll start realizing that not only is your data backing it up, your analysis is backing it up, but now your P&L on your real account, on your live account, is actually backing up your data. and you're looking at your demo account and you're like minus 20% in the year on your demo account, but you're plus 8% for the year or plus 28% for the year on your real account, on your funded account. So now you're looking like, wow, like you've actually now extracted the negative, the poison of your brain out and put it into a jar on its own, and you realize the rot and the bad and the not so goodness it's doing to you. And then what you're able to do is like divide the nutrients, divide the nutrients and the health in your trading account. Okay, so good practice, stop, journal, demo account, bad practice. And then you're actually able to make it real, and you're able to actually look at it and think, wow, this is the actual work that I'm doing. This is like, you imagine now, if I merged this together, I'd be net loss, or I'd be a lot less of a gain than I would had I have not done what I'm doing now. It's just a good practice, and it's a good way. And guys, this goes for all of you. It's something that I've done. This is a good way to actually make the differential between good and bad practice real, instead of looking at it through data. Like some people, I've not got a very analytical brain. I like to do things and see things. I'm a very physical, hands-on person. So for me, when I'm looking at data, it's quite hard to think, right, I've got to imagine what that would be there, what that would be there. I've got to really try and imagine what that could do for my account. Whereas instead, if I do what I've just recommended you guys do, I'm actually able to look at the two accounts and think, wow, this is real. Like I've actually made this happen. And it implants it into the brain a little bit more, cements it in.
Yeah, no, I like that idea. The reason why I think that works so well is that you're still going through the motions. You're still entering a trade. You're still following your process. But the downside, the emotional downside, is completely removed initially. So The thing is, he's replied, Point Breaker's replied by saying, strategy break and retest, I always do one trade a day, but when my losses come 2, 3, or 4 regular days, and it keeps coming and I can't control my emotion. Mm-hmm. So here's the thing. Trading is a mirror. It is going to bring out, it's going to show you aspects of yourself that you may not necessarily have like always thought about. If you are an impatient person, the market is going to show you you're impatient because you're going to keep trying to take trades, not waiting for your setup, and it's going to negatively impact your account. And there you go. It shows you you're impatient. It's just like how you analyze what it is that you're experiencing, not just the market, but like what the feedback that you're receiving from the market. If you're someone like this, where you have a specific strategy, your back-tested data is reliant on you following your strategy. Every aspect of your strategy. The moment you allow emotional input to create or to impact your strategy, you're now no longer going to have a 50% win rate. When you had your backtest on your strategy, you did that without emotion. You just purely looked at it on an analytical point of view, just numbers. It's just math. So you made a few assumptions. You assumed that you were going to have a specific entry point. You're going to have a specific take profit point, stop loss, risk management, all of those things, all mathematical, analytical things. But the thing about backtesting is that it completely cuts out the idea of emotion. So I rock up today, I didn't sleep well. How is my emotional state and how's my decision making on that day? I did not sleep well, I don't know. So that's where journaling comes in. The journaling is not just the data that you're writing down, but how you felt emotionally, how you felt physically. Was I in a good mood on that day? Was there existential issues? Is there financial issues at home? Did I not eat well? Was all of these existential things is something that you can't test for in backtesting as an example, because backtesting is all mathematical, it's all numbers. But when you go onto a demo account and you treat it like it is a real account, because remember, an evaluation account, like with the 5ers or whatnot, is a demo account. You're not trading physical money, but it's the impact of it that you're giving value to. It's the fact that this can lead to actual money into your pocket. Where with a demo account with a normal broker or whatnot, will never provide you with any sort of financial stability. But what it can do is it can help you show, if you treat it like it was a real account, can help show you where your shortcomings are in terms of your psychology or your emotional control without any negative feedback, without you actually losing money. Like, imagine you have an evaluation account, you've spent $100 on buying this evaluation account, and you trade it, and then you start losing trades, and now you're thinking, oh, I'm going to lose this account because you've given the account value. You've put $100 onto it. That's why a demo account can be so valuable. Yes, it will never replicate all aspects of trading.
No, of course not. But it'll replicate what you need it to.
Yes. Use it as a tool, a demo account. Use it as a tool so that you can, in a risk-free way, test something. And then see, if I just followed this without bringing emotions into it, without attaching a value to this specific trade, this is the outcome. And then you'll slowly start learning, like, what is it that I need to do, or what is it that I need to focus on, rather, to eliminate emotion.
A lot of people do, mate, is... Do you remember, like, back when you were in school and you didn't know a question and you were dying to ask the teacher and you're, like, looking around, like...
Yeah, you don't want to feel like an idiot.
Is anyone else going to ask?
Yeah.
No, I'm just going to sit here and never know. You know, it's the same effect in trading. Trading a demo account is like putting your hand up in class in front of everyone. People will mock you. People will laugh at you. But do you know who won't laugh at you? The teacher. Do you know who also won't laugh at you? The other students who also wanted to know that question. Do you know who won't laugh at you? The students who actually potentially knew the answer, like the intelligent kids, for example. Not saying that we're not the intelligent kids, but you know what I mean? It's the kids that thought, yeah, you know what, fair play. He's put his hand up and he's asked the question. Demo accounts are the exact same. You will get laughed at by the people who don't matter. You'll get laughed at by the people who are too afraid to open up a demo account themselves. Who you won't get laughed at is by the people who have done that, who open demo accounts, who promote using demo accounts, who potentially maybe mentors, maybe people like us, for example, you know, like I said, who have used demo accounts. Guys, I've just come off a demo account before going back onto my live funded account, just because I went through like 2 months of drawdown. Guys, demo accounts are a tool, not only for learning, not only for testing, but for going back and making sure and building confidence. You know, demo accounts are a tool. Use them.
Yeah, I use them to practice. Like, if I
100%.
I don't have any EAs or bots or anything like that I use for trading, so my backtesting is purely manual. So if I wanted to backtest an idea, I don't use any other programs. I don't use third-party softwares or something like that. I have an idea. I go onto TradingView. I see if there's any validity to this idea that I have. Then I see if I can replicate it on a live account. But I don't have a live account that I'm willing to offer up as a test, as a guinea pig. So I did.
I had quite a bit of fun with my live accounts. I had live accounts that, you know, I wasn't really too. Maybe I got them in a giveaway or a discount, or, you know, maybe that the firm wasn't really a firm that I'd want to work with as a rule. So, you know, I just sort of used their accounts. I was like, let's have a bit of a play about. Dude, I earned some good money with play about accounts. But do you know where those accounts are now? In the bin.
Yeah, because you didn't take them seriously.
No, I blew them because
you effed around and you found out.
Yeah, literally that.
That is what a demo account is for. It is for the idea of testing in a risk-free way so that you can nail down the practice point of it. The entering of a trade, looking at the data set, making sure that the numbers align with your expectancy. That's all. That's all you're going to use that demo account for. A demo account is not going to teach you how to work with or deal with losses. It's not going to teach you how to deal with having actual physical risk on the table. But what it's going to do is going to take all of that mathematical side of trading, and it's going to inform a decision based on that. And then you can look at that demo account, you can say, okay, if I traded a demo account and I purely stuck to just the logics, just to the rules, just to the maths, and I traded without the idea of the psychology, then I can follow this is exactly what my trade strategy can provide me. And if it is 50%, then it's 50%. And then when you go into a live actual account or an evaluation account in this case, where you have physical money on the table, you've bought an evaluation account, or you have an account that has your money in it, you've invested, okay? When that happens, now you need to understand that psychology is going to play a role as well. So disassociate the importance of the value of money. You paid $100 as an example, or in my case, for this 5K account that I bought yesterday, I paid $39. It's $39 so that I can trade live on stream, so that people can see not necessarily how I trade, but it's that open honestness of you'll see everything. You'll see the trade, you'll see the journaling, all of that stuff. If I lose that account, or if I enter a trade, there's no point in me over trading it. There's no point in me revenge trading, because it's only $39. In my mind, it's just like I've disassociated with the value. If I pass this account, yes, that's great. But at the end of the day, it's not going to provide me with any psychological benefit by doing anything other than just sticking to my rules. And I think that at the end of the day is also something that you need to do, is just like, you need to be very stringent with your rules. If you decide to do something, you only stick to that thing, and you need to force yourself sometimes to do it. Because if you don't stick to the rules and you don't stick to the plan, what's going to happen? You're going to have all of these psychological influences that's going to influence your trading itself. And you will never realize your expected gain and loss based on your backtesting if you keep going against your plan and allowing your emotions to take over. Now, obviously, we can't all control our emotions. But what you can control is basically recognizing it and choosing next time. Okay, you know what? I realize that right now I'm angry and I'm about to revenge trade. Where the control comes in and saying, you know what? I'm not going to revenge trade. I'm going to close everything up. I'm going to walk away. If you have your one loss for the day, point break in. If you have your one trade for the day, if it's a win, stop. If it's a loss, stop. It doesn't matter. And you just stop completely. You can have 4, 5, 6, 7 losses in a row. At least you won't have 5, 6, 7, 8 losses in a day. And then understand that, okay, maybe, potentially, I'm over-risking. Or I'm trying to take my A+ setups and turn them into B+ because I'm in drawdown. So disassociate with the value of that specific trade. Each individual trade doesn't matter. It's the collective. I want to reach a 50% win rate with 1 to 2 R. I will trade one trade a day and I will stick to that. And only you, and I'm talking to you now, point break in, only you can have control over that. We can give advice, but only you can follow it.
Yeah, absolutely. Yeah.
So make that choice. Make that decision in the morning. This is what I'm going to do. And then stick to it. And then see if you can do it for a week. Start by doing it for just the 5 days. So today is Monday. Just start today. And just for the whole week, only one trade a day. Only your A+ setups. Once it's done, you close it and you go and watch, I don't know, you go and touch grass. You go and watch a movie. You go and do something that gets you away from the charts.
Do something, anything other than trading.
Yeah, anything other than trading. And
also,
then next
guys,
week you do the same thing.
Absolute bombs of advice over here. Absolutely fantastic. So, guys, please give us a thumbs up on the video as well. Make sure, guys, we've got we've got 20 minutes left. 20 minutes, and we've got 148, 150 likes. Let's see if we can get to 200 likes before 2 p.m. Sorry, 1 p.m. Not 2 p.m. Let's see if we can get 200 likes before 1 p.m. guys. 20 minutes for 50 likes. Absolutely smash that like button, guys. Come on. And if you are new here, then welcome, guys, to the 5ers community, and make sure you subscribe, click the bell notification, and join the Discord. I'm pretty sure the link's in the description below. So come join the community. Make sure you subscribe, and guys, give us a fat thumbs up, and let's get to 200 likes on this video. Got a good question here.
I over explained or took too much time for that explanation.
Dude, you probably helped a lot more. Like I said, it's the hands up theory. You probably helped a lot more people than you realize. Good question here from Infinity. When markets drop, many traders overtrade, trying to recover fast, especially when there's financial urgency. How can we control the impulse? Fantastic question, because it's something that's going on in the crypto market right now. I am not a crypto. In fact, it's going on in a lot of markets, even like cable at the moment. I'm not a crypto trader, but I'm going to keep it crypto related to because it's so relevant. I know a lot of people that lost a lot of money in crypto over the past bear run, should we call it? So, guys, and you can apply this with trading forex, trading assets, currencies. I literally named 3 exact same things. Trading assets like currencies, commodities, or stocks and shares. There we go. Try that again. So, guys, you can implement this in any form of trading. So, when it comes to financial urgency, if you are in financial urgency, be careful trading. First things first. Straight up, press the brakes. The minute you get on financial urgency, press the brakes on your trading, and then maybe step into. Maybe keep it trading related. Maybe if you're a profitable trader, go into other trading jobs or trading things that could pay you. Go into maybe some part-time work, or go in and make sure you're doing something that can pay you, so you're not in financial urgency. Trading has never paid someone who needs the money, because the psychology is different and you force trades. Now, when it comes to over trading, trying to recover fast, dude, don't rush. There's no point in trying to recover fast. There's no point in trying to recover financial losses fast. If you're trying to ladder in on Bitcoin as it's dropping like an absolute lead balloon, you're just going to lose money. Wait for it to settle. Wait for things to settle down. Reanalyze. Step out of the market. Step back in when your head's a little bit clearer, and then start again. Take your time, guys. If I wanted to recover everything, guys, like I said, I was in 7% drawdown. There's no point in hiding it, and there's no point in lying about it. I'm very open about it because I did it all in front of you. I was in 7% drawdown. If I wanted to make that 7% back fast, I would have blown the account. Instead, I didn't care that I was in drawdown. I waited for a bit. I jumped onto a demo account. I came off the live markets because the markets just weren't doing market things for me. And then I kept watching the market. And I was waiting. I was patient. The minute the markets came back and I started thinking, I got edge again now. I'm back, baby. Let's go. Then I just traded the market as per usual. I traded it not caring about what my equity or my balance was at. I was trading it based on my plan. And that is the best way that's the fastest way you're going to recover your profits. Slow is fast and fast is slow, guys. Actually, no, let's redo that. Slow is fast and fast is destructive. There we go. Phrase of the day. Unless someone can beat that phrase of the day for you guys is slow is fast and fast is destructive when it comes to trying to recover your trading and profits.
I agree, mate. 100%. Unbiased Trader also had some really good points as well about 11 minutes ago.
Yeah. So again, sorry, I missed that last bit. I was just reading another comment.
So Unbiased Trader said, be confident with your strategy and you will make money back when opportunity comes. Don't
you said
it as the last day of the world and fight the markets.
100%. You say that. I was actually reading a comment from Unbiased Trader saying, personally, I overcame my revenge or overtrading during losing is getting disciplined in my daily life, along with the books I mentioned earlier. Now, I'm pretty sure I remember this comment. The books you mentioned earlier were Atomic Habits by James Clear. Now, James Clear is, and there's another book called The Disciplined Trader, I believe, which I haven't read. Atomic Habits, however, a great book. Me and Richard Wells have actually sat down after stream and spoken in depth about this book and actually used it in our personal lives as well. Rich, I'm sure, has told you guys plenty of times how that book has helped him, and myself included. Guys, James Clear, Atomic Habits, fantastic book, can't recommend it enough. That and The Psychology of Money, which I've just started. Now, guys, two fantastic books. One is obviously about the psychology of money. The other one is about improving your life and how your daily habits can actually affect different parts of your career. So Atomic Habits is a great book, and it really does hold a mirror up to yourself when it comes to your trading as well.
Look, these books are not going to be for everybody. There will be books that you're going to either find boring, or you're going to say, no, this is not for me, this is not according to my personality. Give them a try in any way. Even if you don't generally like this kind of content, or you don't generally like those kind of books, just give them a try. Like, what do you have to lose? Nothing. You have nothing to lose. And you might... The thing is, we don't know what it is that we don't know.
Exactly.
Up until we know. And then we realize, I missed this. I could have used this 5, 6, 7 years ago as an example. So these books are good. They're really good books. There's something to be taken away from. Even if you just take one little setup or one little portion of that book away and say, okay, this out of the 600 pages, there's one page with this one sentence. That's it. That's something.
Yeah, absolutely. Yeah, no, definitely that, man. You'll read 10 books and maybe only 2 books will be good. Maybe you'll only remember one, and maybe you'll actually only use actionable steps out of 2 pages of those 10 books. Point being, those 2 pages could be a change in your life. Those 2 pages can be the difference between being broke and being a multimillionaire. Those 2 pages can be absolute inspiration. So you've got to go through those lessons. You've got to go through those experiences. Not only that, no one ever got thick reading a book. No one ever became stupid reading a book. No one ever, maybe regretted reading a book. I've read books that I thought that was a waste of my time. But nonetheless, it increased my vocabulary. It increased my knowledge in that specific field that they were talking about in the book. And this book was actually Diary of a CEO by Stephen Butler. I love Stephen Butler. Stephen, if you're watching right now, which you should be, because I'm here, because I'm a legend, and also Rich is here, and we're both legends. And
I was about to say thank you for the shout out, mate.
Yeah, we all know Stephen Butler wants to watch this video, these streams. But no, all jokes aside, Stephen Butler, awesome guy. But his book, sorry mate, I've watched your podcast. Your book's boring. Your book's rubbish. Absolute garbage book. However, probably about 1 or 2 chapters, absolutely revolutionary. It was amazing, and it sticks to me to this day. But the rest of the book, garbage. Does that make it a bad book? No. Why? Because I've taken something from it. I've taken actionable steps into my business, into my life regarding those books. Could I have found it elsewhere? Yeah, definitely, because it wasn't necessarily his innovation or his creation which he was talking about. Instead, it was almost someone else's creation he was diving in and breaking down in the book. Nonetheless, doesn't make it a bad book. It just means that I didn't personally enjoy it. Now, I've got other people I know who swear by the book, and they said it's the best thing since sliced bread. Now, it's all about finding what works for you. So if you find a book that you like, enjoy it. If you find a book that you don't like, ask yourself, what did you take from it? And if it's absolutely nothing, then you've taken vocabulary from it, because every book will teach you something. And if you taught you nothing, what it did teach you is a better vocabulary and better reading skills. So never regret reading a book. With your thing is one problem, Will. If he can win on a demo, he can think that he can do it live also, and gonna move back to live and lose again. Hello, experience. Dude, that sounds like you've done it. Sounds like you've got the t-shirt. Wear it with pride, man. But the most important thing is you've broken your rules you've set yourself, because you may think that you can win through that particular method. I agree, there are definitely flaws to it, but you've gotten through the experience, and that's why you've done it, is they are rules. So you're only taking your A+ setups on your live account. That is rules. You must follow those rules. Now, if you want to break if you want to take a trade that isn't necessarily within your rules, then you can go, okay, that's absolutely fine. I'm going to go ahead and move into another, and then I'm going to go into a demo account, break my rules a little bit. Pros and cons, dude. Like I said, it's unorthodox. It's not recommended. It's more like a last case scenario. And if you do take a winning trade on a C gamble trade, a C+ C setup gamble trade, then congratulations, well done, you won. Fine, but you won in that demo account. The minute you go back to your live account, remember, A+ setup only. Follow your rules. Try and stay as strict as you can with yourself. But yeah, 100%. Like I said, that method is very unorthodox. I don't recommend it. It has its flaws, definitely.
But it's also the understanding that it's not all of it. It's not the whole thing that you need to do. It is just one puzzle piece of the whole puzzle of getting you to follow your rules is the demo. It's not it's not revolutionary. It's not going to change your life on its own. But if you incorporate the use of a demo account along with reading a book that basically reinforces or enforces certain habits, you taking charge of your, the stuff that you have control over, like when I get up, when I eat, what am I going to do when I'm angry? Am I going to lash out at my wife? And am I going to kick the dog? That kind of stuff. Taking control. Take control back. Understand this.
Is there a reason why you don't have a dog?
None of us here, not a single person, controls the market. Nothing you do, or myself, or Rich, Wells, or William, or LJ, or anybody can influence the market to the point where we have control over it. So, control the things you can control. Control when you implement your strategy. Control when you don't. Control when you make a decision. Take ownership of it. Say, I'm going to take ownership of this. This is my responsibility. My emotional state is my responsibility. Yes, people can really annoy me, and then I can be here all angry and want to yell at, I don't know, my neighbor or whatever. Will annoyed me, but the control of me yelling at my neighbor, that was mine. That ownership is on me. So that's what I mean by this. It's just a very silly excuse. Will never annoys me. He's an awesome guy. I love him. But what I mean by that is that
it's okay, Rich.
If you're struggling with the psychological side of trading, try and find things within trading that you can control and control them. Take ownership of them. Take responsibility for them. And I wouldn't say be harsh with yourself, but keep yourself, in check. Like, I'll give you an example. I didn't follow my rules last week. Will enforced something on me that I had to do 100 squats live in front of them. It's one of those things.
Don't break your rules in front of me, guys.
Probably not, because my legs only recovered today. So, but the thing is I claimed ownership. Didn't follow my plan. It didn't matter if it was winning trades, because the outcome doesn't matter. The process is the important thing.
Another thing building on that is, not only did you take ownership and take accountability, guys, accountability only works, or success only works when accountability appears when no one else does. I try to make that really sexy. I can put like a really fumbled example together if you want. So what I mean by that...
Out into ChatGPT quickly, and so they can...
Yeah, shall I try and ChatGPT explain this better? So what I mean, guys, is you become successful when you can still take accountability for stupidity, losing trades, and something maybe you shouldn't have done. You only become successful when you take that ownership when no one else is there watching you. Like, it's very easy to break something, to do something wrong, and then look over your shoulder and go, no one's watching? Sweep it under the carpet. Easy, 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 easy. But then you're going to have an unbalanced carpet. You're going to trip over it every time you walk. You know, you're going to see it there. It's going to haunt you. Guys, it will be there. It doesn't decompose. It's not like chucking rotten fruit under there. And if it is like chucking rotten fruit under there, that smells. You know, there's always going to be a bad smell. You can never escape lacking of accountability when no one is there, because do you know why? No one will know but you. And then what will happen is one day you'll trip over it and you'll hit your head and knock yourself out, and then no one's there to help you, and you're sitting there with a bad headache and a lump on your head. And what I mean by that is, guys, you're sitting there in your trading account after sweeping all those bad losses, all those lacking accountability, all those stupid mistakes, sweeping it under the carpet. And what will happen one day is you'll full margin on NFP or something, thinking, oh, this worked once. And that'll be you falling over. You'll lose your account, you'll hit your head, and you'll be sitting there with a sore head. And that's like that sore taste in your mouth. It's like that bad negative vibe where you've lost all your money, you've blown your funded account, you've blown your Percy account, and you're sitting there like, what have I done? Guys, take accountability. People won't hold your hand the entire way. You know, me and Rich will always hold your hand, guys. We'll always be there for you. But sometimes maybe we won't be. We're not there late at night when you're sitting in bed on your own thinking about, trading. We're not there sitting there watching over your shoulder when you're thinking about taking that NFP trade. We're not there when you're thinking, oh, should I journal this loss or shall I just leave it to make my P&L look better? We're not there. That is the work you've got to do on your own. And that is the work. That's the difference between you becoming a very successful trader and you just staying as average or just staying unprofitable. So, it's the work that you've got to do. And Rich is fantastic for that. He owned up, he took accountability, he still got punished. He got punished because even though he took accountability, he knew that he'd done something bad. So if we gave him a punishment that says, look, you did something bad, now you got to do something that's not going to feel good. And that was squats.
Part of the ownership.
Yeah, he did 100 squats. It hurt his leg. He had sore legs after. He was aching. He had lactic acid buildup. And now he's related the idea of breaking rules with sore joints, sore muscles, So now he's like, oh, I don't want to do squats again. I'm going to make sure I stick to my rules.
Yeah.
Now, guys,
part of that ownership.
Yeah.
Realizing that your decision has consequences.
Yeah. And that punishment isn't always squats. 100 squats for me, like I'd break my rules just so I could do 100 squats. Whereas one of the other guys that we've got in our community, he broke his rules. He had a week off trading. We banned him from even looking at the charts for a week.
Plus 100 squats a day for 7 days.
Okay, no, he in all fairness, he did
700 squats, mate.
He had 700 squats to do. So he did still have a physical punishment, but nonetheless,
with baby in hand.
With baby in hand, yeah. But nonetheless, even though he had to do 100 squats with a kid in his arms, he still had to take his hardest punishment, which was being away from the markets. So guys, take accountability, get an accountability buddy and find a punishment that you really don't want to do. Something you don't want to do that makes you feel like, that's really crappy. You've now related a negative feeling with breaking your rules.
I see there's a few people asking, can I place this trade? Can I take trades based on your signals? Guys, this is not a signal service, first of all. Secondly, there's a disclaimer at the beginning of the video of the 5ers stream stating that it's not for educational, it's not a signal service, it's only for entertainment purposes.
Yeah.
So,
that said, though, we will discuss what we personally would do. This ain't financial advice. We're not financial advisors. Although I nearly did get my financial advisor's qualification, so this could have been at one point financial advice, but it's not. No, it's not.
So don't copy the trades. If we write something or we mark something up on the screen, it is purely for illustration. It is not a signal idea. It's not
This is
a
what
trade.
we would personally do.
Yes.
You know, this is what we personally do. And like that's what I mean. So right now it's a no trade day for me. So what am I doing instead? I'm drawing trade ideas up, and I'll go into them as well. So we'll start with GBP USD. You know, so GU, we're looking. We got a high here. We got some sort of consolidation. We got a break and close above consolidation. Jump down onto the 5-minute. We got this small area of consolidation here, and we're stacking confluences. What are we doing? We've got a break and close above. We've got a break and close, a break and retest of this current high. We've got a consolidation zone, and this consolidation zone is within a 6 fib of this low and this high, and it performs quite nicely here. So what does that mean? We're going to look at potential buy limit to go around here somewhere, because it's within the consolidation, it's within the break and retest, and it's close to the 0.61 fib, which I quite like. And then again, target the high for a 1-to-1. Now again, guys, I'm not going to take this, I'm going to draw it out. The reason I'm drawing it out is because I can't be taking 101 trades right now on my laptop, and I've not got my proper equipment. Now, however, EU, I wanted to see a break and close above. I'm not seeing a break and close above, so I'm not in this trade. So guys, don't copy this buy, because this isn't a buy right now. However, if we get a break and close above and a retest, then maybe I'll consider a buy. Gold, what's happening with gold? Guys, what did I tell you? Potential point of reversal. This is where I want to watch things take place. We got consolidation. I wanted to see if we could come back into this break and retest on the 15-minute. As you can see here, consolidation, break, retest. Guys, again, I'm not going to take this on my live account, because I'm not able to take it on my live account today, because not only that, I haven't got my terminal set up today. So what are we doing? We got that perfect wick into this break and retest. Now we're currently inside the potential point of reversal, or PPOR. Now what's going to happen? We've broken and closed above this, but we're currently in this area here. If we consolidate now and price looks a little bit like this here, then hypothetically, I will take out of the trade where it consolidates for a 1-to-1R. Right now, I'm at 1R. Now, however, I'm going to leave it at 2.5R, because right now we are disrespecting the point of potential reversal and continuing with that momentum to head up. This is trades that I would personally take, not trades that I think you guys should take. Always take your own trades and always do your own analysis.
Yeah, no, I agree with that. Like I said earlier with gold is currently stuck between 2 points for me. And myself, the way that I trade, I need a trend. I need at least a trend to have established, as an example. So, or a reaction off of an area before I will consider taking a trade. So in this case, gold is stuck between 2 points for me. Not interested in it. It's one of those days where you can literally decide to follow your plan or not.
Yeah.
This is a day for myself and Will where we both just like, you know what? I'm not going to trade today. Remember, not trading is also trading.
Guys, we're 19 likes away from 200, and it's 3 minutes past 1. Guys, there's nearly 300 of you watching right now, which is incredible. Thank you so much for the support, everybody. Make sure that you hit the thumbs up button. 200 likes with nearly 300 of you watching is absolutely incredible. So guys, 19 likes to 200. Please absolutely smash that like button and subscribe to the channel if you are new here.
Don't
meanwhile,
you have another hour?
Yeah. So it's 300 likes for the next hour.
Yes.
We want 300 likes. Come on.
I'm not going to settle for anything less than 270.
270. You want 270 likes?
I think less than that. Yeah.
I reckon
I'm not
we can
coming
get
back tomorrow if I don't get 270. Well, actually, maybe people might.
Oh, mate. Guys, you heard it here first. If you want to see Richard Butler back tomorrow, you've got to make sure we got 270 likes on this video by 2 p.m.
We can get 250 likes.
Okay,
Easy.
250 likes. If we get anything less than 250 likes by 2 p.m., Richard Butler is not coming back, everybody.
Ever.
Not tomorrow, ever. So guys, make sure you smash that thumbs up and smash the like, please, because I really need my co-host. So I don't want to have to beg him to stay.
Unbiased trader, need to head to the physio. I have taken 2 losses today and the third one running. Part of trading, but take pride in what you do, and happy trading. Unbiased trader, thank you very much for that comment. I don't know if you're still here. That was 6 minutes ago. We really appreciated that. We really appreciated that comment. Thanks, mate.
Yeah, absolutely, man. Also, hope physio goes well. Hope the injury isn't too long. So, speedy recovery, bro.
Yeah. M. Tran Lee says the chart color is very hard to see. I am new here. Well, that is Will's.
Oh, fair.
Starting for you.
Yeah, guys, I do apologize. Like I said, on my terminal, it's a little bit sexier, but my actual analytical software on TradingView, it's really boring, man. It's nothing exciting. It's gray on gray with a bit of blue, gray on white with a bit of blue.
Pooley, you can go take a very long walk off of a very short pier, my friend.
What's Pooley said? How do you unlike? Pooley, you savage. Also, M. Trenley saying, I'm new here. Welcome to the community, bro. It's awesome to have you in. Like I said, please leave us a like and make sure you subscribe to the channel. We do like to have a bit of fun here, but it is also serious. It's full of value. Feel free to ask us any questions that you have regarding trading, or just come have a chill out with us. Come hang out with us, do some live trading. Both of you guys are doing great work. Keep doing it, guys. Our Infinity, we really appreciate those kind words. Yeah, really appreciate that.
Will, do you mind popping my screen on screen, please?
As you said, please. Of course.
I always say please. It's just sometimes I say it like... Would you mind just doing that thing? So... I mentioned earlier, and I said this a while ago, that I'm going to start trading a live account. So this... Oh. Look at that. Can you believe that?
I missed that. What was it?
I had to restart the terminal. It had an update.
Oh, I see.
As I was about to... I opened it up and it looked fine, and the moment you went to my screen, it needed to restart.
All right. Standard. Also, just before you do go into an analysis, that's risky business, William. Most people watch streams for signals, live streams for signals. They watch with no sand, just waiting to see some signals. Dude, yeah, fair point, man. That's definitely very true. Look, guys, if you are here for signals, enter at your own risk, I suppose. But please don't copy our stuff. We're not here to do signals. But if you are going to copy them, those who are here to signals, I can't stop you. Let's be real with each other. I'm not gonna come to your house and close your trade manually. Yeah,
I have zero control over you.
Down and say close that gold long. I'm not gonna say that. But guys, you are entering at your own risk. I am a profitable trader, granted, but guys, I did go through a 7% drawdown period, so who knows? I could end up blowing an account. Hopefully I don't, but not only that, I may only risk 0.2%, whereas you may risk 2%. I can take more trades at a loss than you guys can. So guys, we really recommend that you do your own analysis, but if you are going to copy our trades, they're not signals, but if you are going to copy them, enjoy the profits. I'm joking. Please don't.
You're not putting a good case on for not copy trading, mate.
No, I know. Guys,
he's profitable, and he's telling us not to take his trades, but then he says, enjoy my What? No. So, I may just full margin some really dodgy gambling sells. Told you, don't follow me. Ciso Dotlo, or Dlotlo, I think. Sorry if I mispronounced your name. Yes, unfortunately, we have no control over anybody in chat following the trades or not. All we're saying is that take ownership, make a decision yourself, use the information that you see on this live stream from all of the streamers that are on, and build your own strategy based on that information. Like learn, take in the information, and you will be better for it. Because imagine everybody stops doing signal services. Like, what if nobody is marking up a chart anymore? How are you going to trade if you don't know how?
Yeah,
So
exactly. Also,
it's better for you, mate.
I'm going to point this out. I watched the live streams for improvement. Winner right here. Absolute champion right here. I'm a silent spectator and try to learn. Another absolute winner. Absolute champion right here.
Great.
Absolutely love to see it. Guys, also, if you are here to spectate, to learn, to watch, to absorb, or just to hang out and have a bit of fun with us, I don't know, chuck a W in chat or something. Show the guys here why we're really here. Like, if you're here to spectate, if you're here to enjoy the banter, if you're here for good vibes only, chuck a W in chat, and we welcome you all here. It's good vibes only. We're all here to have fun, and trading's a lonely job. Trading's a very lonely, boring journey. So it's amazing to see silent learners in. It's amazing to see you guys jumping into the community and just watching in the background and trying to absorb as much as possible and learn as much as possible. So, guys, we love every single one of you. Make sure you leave us a thumbs up as well, guys. A couple of you dropping out, a couple of you new guys coming in. Make sure you like the video. Like we said, 250 likes or Richard Butler isn't coming back again.
So, here I have a brand new 5K account. I got this one on Sunday, which is yesterday. I did not place any trades on it as of yet, but the idea is to trade this live in front of everybody. So Will has his 100K account, so we're doing the dichotomy. We're doing the two polar opposites. Massive account versus a tiny account. So Will has got the big account that he's trading. I'm going to trade the small account. And the idea is to show that the size of the account does not matter. What matters is the process that you're following. So what I have here is what I intend on trading. Now, obviously, every time the thing restarts, you have to reset your lot size here. Don't accidentally just enter a trade before making sure that your lot size is as you want it to be. So what I intend on doing is I made myself a spreadsheet with my account on it, the 5K account for the 5ers. What I have here is I have every day of the week where I'm going to be trading. I will put in my results here. The little yellowish portions here is days that I cannot trade, so it's weekdays or public holidays. So this is November. I have my account, the exact prerequisites, basically, like how you're going to trade it, like what rules, basically. So you have to make 8%, or you've got 8% to lose, which is $400. I need to make 10%, which is $500. What is my maximum risk going to be that I'm willing to take? And it's 0.25% as an example. How much is that? It is $12.50 based on my rules that I'm going to set. What is my buying power in this case? That is the size of the account times the leverage, which is it's 1 to 100, so 5K times 100, 500K. So I have a maximum lot size of 5 that I can take on this account. I will never do that. Even if I have it available, I won't do it because I want to stick to the idea that I trade less than 1% per trade, and I'm going to trade something that is in line with my personality. Let's say hypothetically you are somebody that really struggles when you see money disappear from your account. Or let's say you're somebody that you're afraid to risk the large dollar values as an example, but you want to risk 1%, but then you see, 1% is $1,000. Oh, I'm struggling with this. Lower the percentage a little bit till you get to a point where you really feel comfortable. Okay, cool. Now I'm only trading $250 as an example. I'm happy with this. And then kind of like build your confidence to get to the point where you're willing to trade 1,000. Just as an example. So the idea that I have here is the portion here is basically what it is visually for me to see what this account can become. This is all of the scaling for every aspect of the account from 5K all the way to 300K. Obviously not going to go all the way to a few million and whatnot. These are already like a bunch of steps to take. What I have on the bottom right is my 1 to 2 RR expectancy on my best of 3 strategy, which is what I use to prevent overtrading and to prevent revenge trading. I have a very specific rules set that I follow. And if I don't follow that, I have to do 100 squats, and I don't want to do that again. So I'm just going to stick to my rules. And then underneath this one, I have a 1 to 3. What is the expectancy? On the left-hand side, it's best of 3 per asset. So I can have 1 of 4 outcomes. I can have 2 wins and 0 losses, and then I'm done for the day. I can have 2 wins and 1 loss, then I'm done for the day. 1 win, 2 losses, done for the day, or 0 wins and 2 losses. And once I've reached this, it's done. I don't trade anymore, only these ones. So this is a way that I'm going to maintain my objectivity in the market and make sure that I stick to my plan. I am going to risk 5 pips, which is going to be the equivalent of 0.25%, which is something that you can see here on the 1 to 2R. I'm going to plan on taking 1 to 2 and 1 to 3R trades live on stream. And every time I have a winner or a loss, I will document it. Like, let's say for argument's sake, I have a loss. As an example, I need to add the commission, which is 1 for a 0.25, so it's $1. It will add it. Why is it adding it? Yes, there we go. Or is it adding it? Sorry, not why. Which means that today would have been a minus $13.5 loss. Sorry, I forgot to do minus $13.5 loss. It gives me immediate feedback to show me what my trade did for the day. This is going to be filled up with red and green. Like, my expectancy is that I'm going to have some losses. At the bottom, I have the account size. What is the amount that I need to make? And as I'm adding profits and losses in here, it's going to show me how far I am. Let's say I did a $15 trade as an example. It'll show me that I'm 0.3% risk up and that I've got $15 in profit, or the account gain in this case. And this is what I'm going to use. And then once I have a few trades, I'm going to go onto the 5ers Hub. I'm going to screenshot the equity curve. And I'm going to show you, let's say once a week, once every 2 weeks, depending on how many trades I've had, just to show you the equity curve of it. So I know there's a lot of people that are asking to share this. I'm going to make a copy of this, and then I will link it, and then I will paste it in the Discord. I think the Discord might be the best, unless I can ask Remy to post it for us in the 5ers chat. But it's just something that I've used. You can see here at the bottom there's a bunch of other tabs as well. I use this as my trade management. So I have a journaling section. I'm not going to open up the journaling section right now. It is multiple journals that I look at. But this is just a means for me to manage my trading. And when it comes to my rules, you can always just write here on the right-hand side, basically, any rules that you want to incorporate into your trading as an example. So there are many journaling tools, many journaling programs that you can use, apps and stuff like that. This is free. This is easy. This is something that I've set up for myself. This is something that I use every single day. I'm going to show you guys how I trade. Not my exact strategy necessarily, but a different one, a different variation, but with the idea that if you stick consistently to your plans and you arrive at the market every day with the right expectancy, you can succeed in trading. You really can.
Absolutely. Yeah, I love that, man. That's awesome. Like I said, it's awesome to have someone doing it alongside with me. This is exactly what I'm doing with my 100K account. And, even Rich has even inspired me to be more transparent again, which I didn't think I could be. Guys, look, I will, once I finish taking whatever has just flown into my eye.
That was your finger.
Yeah. Yeah, so guys, I will also show you my equity curve on TradingView, on MetaTrader. I'll also show you my equity curve on the 5ers Hub, and I will also, guys, when I get a payout on this account, I'll also show you my payout on this particular account, because that is how transparent I want to be with this account. I want to show you guys absolutely everything and what is possible and how easy it is possible. So yeah, guys, absolutely, it's absolutely incredible to see Rich join my journey. I'm super proud of you, Rich. You've come such a long way since joining me since being a viewer. You were one of the guys in chat, all the way to joining me on stream as a guest, to joining me as a host, and now, co-hosting with me on the 5ers, whilst trading a funded account and showing your journals and analysis. So, dude, Rich deserves a massive thumbs up just for that, guys. So again, give us a smash the thumbs up. Give us a massive thumbs up for that. And if you want to watch Rich along this journey with myself on my 100K account, subscribe to the channel. Click the bell notification, and join us every single day trading live a funded account. 5K and 100K. So
Maxwell Bonnie saying, please do well to share it here on the live. Some of us are not on the Discord. Sorry that you guys aren't in the Discord. I will then post a link to it in the chat. I'll just make a copy first, and then we'll get to that. Yeah.
Absolutely, guys. Not only that, I'm in the Discord, but I'm hardly ever active in the Discord. If you want to chat with me, I do apologize if people are try and chat to me through the 5ers Discord. You can you got to be here. Got to be here, man. Live every single day. You got to be got to like and subscribe, and then you can see me here. I saw a great question earlier, and it was fantastic. There we go. By MarthGL, saying, when is it your ego saying that you will hit TP, and when is it trusting your trade that you will hit TP? This is a great question. Ego is when you break your rules and still want to hit TP. Ego is when you look at it and think this is 100% guaranteed to hit TP. Trusting your rules and trusting your trade is accepting the fact that you may not hit a TP and still being okay with the fact that when you take this trade and you lose, you're okay. Ego is taking a trade, guaranteeing your success, and then being emotionally vulnerable when you hit a stop loss. So that's the difference, in my opinion, that between hitting TP due to trust in your trade and due to hitting TP due to ego. Ego shows arrogance, and it shows that you could potentially break your rules. You're like, oh yes, I know that this is going to happen. That's where mistakes are made. That's where mistakes happen. That's where you could maybe cock up your analysis slightly. Whereas if you trust the trade, it means that you've well thought out, you're process driven, and you're still okay if it hits a loss. Whereas ego usually says you're not okay if you hit a loss.
Ego can be detrimental to your trading journey, like really, really bad.
Yeah,
but having lack in confidence can also be detrimental
100%.
to your trading plan.
Yeah, definitely, man. This is great, Richard. Brilliant breakdown. Like I said, guys, big thumbs up. Smash the thumbs up for Richard's breakdown, guys. Yes, let's go. 250 likes, so Will won't have to be alone. Don't leave him hanging. Like the stream, guys. Yeah, guys, please don't leave me alone here. Me and Rich get along really well. I don't want to have to try and find a new co-host just because he put his word on the line. Oh, man. So yeah, give us a big thumbs up, man. I really appreciate that. Make sure you like the stream. Buenos dias desde Colombia. Buenos dias from, or good morning from Colombia. Is that? Or it's not morning in Colombia right now, isn't it? In the afternoon. Oh no, it would be morning in Colombia.
It's morning in Colombia then, yeah.
Yeah, it would be. Yes, buenos dias. Good morning, all the way from Colombia. That's awesome, man. Please don't speak too much Spanish to me. My Spanish language is very limited. I only know what my brother teaches me. I mean, I could try and drag my brother in here. He's practically fluent in Spanish, but I'm not. So only give me basic stuff in Spanish and I'll try and read it out. So, yeah. Please add me into the Discord community. It seems my dashboard is not showing the link. I have already emailed the help center. Until now, I don't receive a reply. I already purchased an account. Thanks a lot. I'll have a word with the guys. I brought your comment up. I'll have a word with the guys, see if they can sort that out. I'm unfortunately not in the back end of things, so I can't help you with that one. But we shall indeed put your stresses forward, my friend. Do not panic. Only if you give us a like on the video, though.
Oh, wow, that's cheeky.
Otherwise, I'm not going to put your problem forward.
I'm not going to help you unless you do something.
I'm not going to help you unless you help me. I mean, to be fair, I scratch your back, you scratch mine. That sort of makes sense. I'm joking. Of course, I will definitely put your problem forward to the guys. But we do appreciate a thumbs up and a subscribe to the channel. Not only that, guys, I'm dying to see 100k by December. I mean, we got till end of December, of course. But, guys, come on, 100k by December. How doable is that? What's that, 12k? 12,000 subscribers? That's doable.
So, look at this, Will. This is why I really like the idea of the break and retest. So,
what do you got? Let's have a look.
This is EU. Okay. So we had, if I just do this, can we see it properly?
Yeah, I got you. I can see it.
Okay. So this was last week, Friday. Friday, we came down, a New York session. We were just ranging, blip, 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 hopping up and down in this section. So multiple tests. There's one test, establishment, let's rather say. First test, second test, third test. Bottom establishment, first test, second, third, fourth test. What did we have? Struggled to break through, absolutely tanks, breaks through the bottom, consolidates, comes and tests this. So it's basically a break, a very long consolidative retest, and then it tests it and then absolutely tanks off of it. Now, obviously, this was a consolidation period for me a little bit on the 15 because there is no real like higher highs, lower lows, that kind of like thing. If you just took into account the wicks and all of that stuff, it was very crappy movement. Now, if I just remove this out of the way and I just... Oh, sorry. Didn't mean to do that. And if I just go on the idea that this is a break, a long-waited test, it just tested and then it started pushing lower. So this is why I love the break and retest. It's the idea that somebody can go around and say, okay, there's a fair value gap on the hourly, that kind of like thing or whatever. You can see it on the 5 and on the 15, just having zones that you've marked up that to you has had reactions of previously. Price pushes through it, comes and tests it, and then confirms pushing lower. So if somebody wanted to, there was always potentially a trade to be had here. As an example, go for a 1 to 2, that kind of like thing. This is why I love the break and retest. It's sometimes you get the break and continuation. Yes, that happens. But often when the break and retest happens, it's so beautiful, mate. It just lines up absolutely perfectly. Sorry, I just wanted to point that out.
Okay.
And then we had this section here as consolidation.
What did you say that was? What asset's that?
This is EU.
I thought it was. Yeah, so that means I'm losing my EU if I bring it up.
Did you take a buy?
I drew a buy.
Oh, yeah.
GU it was, sorry. So GU, I would have been entered into this and I would have taken a 1% loss. So 1R down on GU.
So it's the same idea on GU as well. That upper line of yours, I had a box there. Yeah.
So
So that was my point of interest. If it broke or it touched into it, it just, on the 15-minute, it had that massive wick above with a very small body and then a continuation lower.
Yeah, and this is why higher time frame analysis really helps, guys. You know, if we look at the higher time frame and we look at the 15-minute, you know, you're not going to want to take a trade after this wick. Like, look at this entire candle, guys. You're not going to want to take a trade based on this candle, are you? Like, no one's going to look at this candle and think, oh, that's a very nice candle. I'll buy here. Like, we've not had a close in this zone. We've just come up, broken close and above. Yeah, that was nice. And then we come up on the 15, wick it, and actually close bearish. A slight indecision, but bearish nonetheless, with a monster rejection wick to the upside. Followed by, as you can imagine, a massive sell-off. So based on the 5-minute price action, I would have taken this trade, would have been stopped out. EU, I didn't get entered into this. Like I said, you know, we didn't get the break and close above. Now, what we have had instead is a sweep.
No. Sorry, mate. Your mic freaked out there for a second.
What do you mean?
It went robotic.
Oh, really?
Yeah.
Yeah, so what? Anyway, let's see if human will can speak for a minute. Not robot will. So what we had instead was consolidation. We had this sweep to the downside here. So swept, consolidated, swept, broke, closed, potential pullback now for a continuation down. Who knows? You know, selling pressures, bears are taking control. I didn't get entered into this because of invalidation to the upside. GU, validation to the upside on the smaller time frame, invalidation to on a higher time frame, trade taken at a stop. This will probably be a B setup. Gold, however, look at gold, you know, so we're currently 1% up. We were highs of 1.73 with a 1.55 TP. We'll have to keep an eye on this and watch it and see what happens. But so far, so good. You know, this may want to pull back to a break and retest of this zone. We'll have to wait and see what happens. But I'm going to keep it drawn up and see if we can get 2R. If we can get a 2R, if we can get 2.5R, risking 1%, in theory, that puts me 1.5 net profit above for the day.
James Pinhorn saying, sometimes I cross-reference my GU and EU trades with the DXY. Like, if you just go over to my screen quickly, Will, then I'll show you. So this is the DXY. I haven't drawn anything up except these two quick boxes over here. This would have been the highs of last week Friday. So Friday's London session, New York session, and this morning's Tokyo session. So if you just took that as a high point and I need an area to break and close above as an example, there you have it. Price broke above those highs of last week, retested it, and continued. Now, if you just look at the same idea on GU, you don't really see it, but you see it on EU. So EU has got the same idea, break, retest, continue. So you don't always get that like connection as or direct correlation, let's rather say, where GU basically had the high point that was tested and then fell off, but we'd already taken the low point. But on EU, it broke through the bottom, then tested the bottom and continued lower, which is the exact same as the DXY as well, but just inverse. So here we had the upper ends that were broken, tested, and continued. So yes, there is definitely correlation, but not always across GU and EU. So it's just something to be cognizant of, that just because you're doing the correlation doesn't mean it's going to ring true every single time. So just something to yeah, I see. Yeah, true. Yeah, so it's just something to take into consideration for those that don't know, that there is correlation, but it's not 100% correlation. It's the same with GU and EU. They're correlated, but not 100% correlated. So
yeah, exactly that, man. I like the DXY. They do correlate, and it shows dollar strength and weakness. So I do like it as an indicator. I have a strategy that I've tested. The only problem is I don't follow it. No accountability partner. Dude, welcome to the 5ers. We will be your accountability partner, man. We will make sure that you are staying accountable. Come in every single day, chat with us. Me and Rich are usually live 11:30 a.m. UK time to 1 p.m. So if you want to catch us, be accountable, hold yourself accountable, tell us your plan. Feel free to give us a message or join the community, So, dude, there's plenty of us in the Discord, in the community, willing to be your partner. So there's lots of people out there that also need accountability partners. So 100%, let's start a trend, guys. If you need an accountability partner, A, stick the thumbs up to this video, and B, drop it in chat. Let's build some community. Let's start encouraging each other to be better, not just at trading, but be better in everything. Also, guys, just smash the like button anyway. Just thanks for the honesty with you guys as well. You guys are sharing a lot of your experience with us, so we really appreciate that. Big thumbs up for the vibes in chat as well. So, not only... I wish we could put our thumbs up to you guys. There you go. You get our thumbs up. So, not only do we want you guys to put your thumbs up on the video and give us a like, guys, we love your interaction in chat. It means a lot. Thanks a lot. I've already clicked the link above and still the same. Smash the like. Absolutely. Yeah, definitely. So make sure you smash that like button, guys. And then what is the dollar bull still I control? Is what it is. Dollar bull still in control. Yeah, no, dude, literally that. It is what it is, man. We just gotta deal with what we're given, and that's why I like what Rich says. We're reactive traders, not predictive traders. Love this comment as well. Why wouldn't it come up? There we go. We can be partners. I need also. There you go, guys.
That's great. Get yourself a accountability partner.
We're like Tinder for accountability partners. Do you want to find
We'll hook you up with an accountability partner.
Yeah, of course. Date nights, accountability nights, we'll call them. Oh, man. Yeah, no, there we go. Do you need to find your lifelong accountability partner? Are you looking for success in your trading? Then find Tradinder.
We would probably be able to get like a, I don't know, copyright strike there. Somebody probably already did a Tradinder.
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 Guys, if someone has already created a Tradinder, I do apologize. Then we shan't take your idea.
DAX dating.
DAX dating. Yeah. Oh man.
S&P and chill, mate.
Guys, just a question. Today, New York time changed. Was it today?
1 hour. It happened on Saturday evening, Sunday morning.
Yeah.
So, it's moved up 1 hour.
Yeah, so we have had daylight savings. So we're back to normal times now. Back to complete normal times.
Something like that.
Yeah, I suppose. I don't know.
So you were saying in gold, that trade of yours. Somebody asked, was I wrong for buying? Brian asked, I'm wrong for buying. It depends on what asset you're buying. If it's gold, as an example, I don't know. Like, I'm flat with gold. I don't really want to trade gold until we've broken either this portion up over here or this portion down over here. But there's intraday trading as well that can be done. So it depends on what kind of strategy you're running at. But I mean, this is a consolidation break and retest effectively. If you wanted to, for argument's sake, little bit of consolidation, you have the break, you have the retest, and then you could have on the confirmation candle, as an example, you could have entered a trade, or you could have entered a trade directly on the top of the box and then have your TP at the bottom of it, and then try and look for a 1-to-2 or a 1-to-1 or a 1-to-1.5, whatever, like risk, whatever parameters you want to set for your trading. So there is opportunity still, but myself, I would not be trading this.
Well, just take me for example. I would have potentially been in this trade here, whereas you wouldn't have. So just different styles of trading, man. Different validity points. This doesn't make this a valid trade. However, we've invalidated my potential point of reversal, so that's nice because we've break and closed above it. So right now we've got two more. We've got one more point, which is this high here. So I think this is my last potential point of reversal here now. Unless price.
I think this is the last time that buyers attempted to push the price higher. It's the last time that they attempted something and were overwhelmed. So the top line of those two lines, that was the first time they tried to make a high, and then buyers took over. And then the second line, which is the bottom of your little segmented box, that is the last time the buyers attempted. So what do you expect to see happen here if it reaches that point yet again? Do you expect the buyers to take over, or do you expect sellers to jump in again as they've done before?
Then what? When it comes up to this level here?
Yes, that little box of yours.
I don't care what happens.
And see, that's the thing. We're reactive. We don't care if the market wants to try and push through. I want to see what it does when it does reach that point and starts reacting. That's what I want to see.
Yeah, exactly. So I really don't care as long as what happens in my trade happens in my trade. So right now we're at this point here where it's like, okay, we're a little bit questionable. We're slowing down in volume, but if we come up and take this zone here, then I really don't give two kahoonies on what goes on. I don't care if it starts doing bloody backflips. I really don't care. What is most important to me is that I manage my trade where it's at, or it hits TP. All I care about is what happens to price in this zone, because that is where I am currently in a trade. What happens after price hits my TP or stop loss, or I take out due to whatever reason, I don't care. I really don't care. I will react as and when I decide. So, for example, now, if price comes up, there we go. If price now comes up, plays about here a little bit, boom, comes up, hits TP, I get taken out, and then we consolidate and start drifting down, pull back, consolidate a little bit more, and then drop. I do not care, because I'm not going to buy us to sell this. Why am I not going to sell this? Because I have already had my opportunity in the market. I've already taken a trade. Why would I risk? Yeah, dude, chill. So I've already taken my trade. Why stress and put money on the table, and why risk more money when you've already achieved it? You've risked money, you've taken profit, you've taken money away from the market. Run away. You're done now. Take your money and run. The minute you get back into the market is you saying, I've made money, but I'm willing to give it all away again.
Well, I mean, not just that.
It's depending on your risk reward.
Yeah. It's the fact that you're allowing the idea of greed to take over, to start planting a seed, because you're not satisfied with what you've already received for the day, because you believe that you need to make more, get more, you must always be in the market. Like sitting on your hands and not trading is also trading. It's you following a plan. It's you following. Yeah, it's you making sure that you have longevity in this game, which is something that people struggle with. Like, people think that you're supposed to burn bright and burn fast and then burn out. No, it's like you're supposed to try and make it for the long game.
Yeah, 100%. Dude, like, guys, I'm going to have to go to the toilet because I've smashed out a coffee and an entire bottle of water. So I'm going to go to the toilet now real quick. By the time I get back, I want 250 likes. We got 2 or 3 more likes to go. I want those likes by the time I get back from the toilet.
Before you go, swing over to my chart.
Yeah, that would be a smart move, wouldn't it? So guys, hit that thumbs up. I'll be back in 2 minutes.
Nice. Let me just quickly see. There was a question. I'm planning to put my sell limit EUR 1.15337. That should be up here somewhere. 15337. Okay, and then if that is your stop loss, I will be targeting it. What are you targeting? I can see why, because you have this little bit of area here with a nice big reaction. What would you put your stop loss just above this box as an example? And then aim for where price now inevitably turned, which give you a pretty 2.7 R. But the only thing that I see here, and this is not a critique, I'm not critiquing, it's just what I'm picking up on. Look how far we need to move back from where price is currently, 23 pips. Especially with the fact that we are so bearish over the higher time frame. I mean, this is the hourly chart. This is quite bearish. I mean, let's basically take this point over here. That was Wednesday, the 17th of September. We started, pushing lower, making lower highs, lower lows. So I would say that what's the chance of us pulling back to that point? I don't know. Might be slim, might be non-existent, might happen, I don't know. But what I can see is that this was, and I think we mentioned it this morning in our stream, and I think LJ also mentioned it along with Dirk, that on EU you have, there's a low, there's a reaction of it, started pushing higher. We came back, we almost touched it. And then here we've broken through. So now the question is, there's this whole segment here, basically, that needs to be tested still. So it can potentially come back, but I would then want to wager, okay, the chance of it, I don't know, a trade somewhere in here as an example, and then stop loss up above this area of consolidation here. That's what I'm saying. It's not a critique. It's something more in line of what I would have done based on the support area that has now become a resistance point. So price needs to resist breaking through this portion, which I don't know if it was a little bit larger, you could have said that this was a test as an example, but it didn't test it fully. So I would not go so far as to say that was a test.
Yeah. Oh, I'm back, guys. Hello. I went and filled my bottle of water again, so I can keep drinking some agua. So, guys, keep yourself hydrated. Another absolute key to successful trading is staying hydrated, staying healthy. Loads of comments in chat, guys. I do apologize if we don't quite get to all of them. Make sure you show up tomorrow, ask the question again. We'll make sure that we will make sure that we answer it if we do miss you guys. But guys, can I just say also
250 likes.
254 likes.
I guess you will be seeing me tomorrow.
Dude, that's sick, man. Like, seriously, that is super cool. Guys, we cannot thank you guys enough for the support you guys show us. We really can't. It is awesome. I get to keep my co-host, so I don't have to go out and try and find another one. So thank you so much, guys, for allowing me to keep my busy mate in trading.
Your busy mate.
My busy trading buddy.
Making you all smiles, mate.
I'm going to sound a blush, mate. Gems, that's what separates pro traders from newbies. Absolutely, man. You know, Rich, you're full of value, mate. You're also full of
I
shit.
think it's just the idea that consistency, like try and aim for consistency, whether it is inside of trading or outside of trading. Choose something. You can choose your destiny. Choose something and just give it everything that you have. Give it a real proper try. Like,
yeah, no, I totally agree with that as well.
Try, but just like really freaking try, man. Like put your effort into it. Put good practices into it. Just try. Just really hard.
Not enough people do that. Like me and my brother talk about this all the time. Like we say, like, you know, me and my brother, we're pretty successful people. My family, you know, my dad, and you know, he's a pretty successful guy. So I was brought up around people who try. You know, like I was always under the impression, even back in my sporting events, like I've discussed this, maybe not on the 5ers stream, but I've discussed this in like LLTF, like last year and all. That I was brought up very much try your utmost hardest no matter what you do. Like if you're gonna fail knowing that you tried your utmost hardest. But like when in sporting events, like my dad would be screaming at me. Like if I was running or swimming, like he'd be screaming at me. Like he would make sure that I am motivated. I'm trying my hardest, you know. Like nothing is good enough but my hardest. It doesn't matter if I'm not the best. You know, that never, you know, obviously, you know, we got to the point where the older we got, we started winding each other up and pushing each other to the point where, like, if you're not first, you're a failure. You know, but that was what we wanted. You know, me and my brother put that on ourselves. My dad was very much like, I don't care what you do. Like, I don't care if you become first place or last place. I will be disappointed in you if you do not try your best. And that's how I grew up, you know. So there's nothing that I will do in life without trying my utter hardest, because then I know that if it didn't work out, by God, I tried. Like I really bloody tried. And like I look at people like,
can take that away from you.
No, yeah, 100%, man. And like me and my brother, we look at each other now, and like we're doing well in life, and we're achieving goals, and we're thinking to ourselves like how easy it is. But it's not, you know, like it's easy to say, oh yeah, we got this super easy because we tried really hard. But we grew up knowing that trying really hard, it was just an absolute basic given. Like we look at other people and they're like, oh, I'm really trying. I'm trying to do this. I'm trying to do that. And we're looking at them and like, you know, you're not. Like if you looked at your life, like let's say, you know, 500 years time when you're on your deathbed, you know, when you're looking back at your life and you're thinking, well, the reason I give an unrealistic, the reason I give that unrealistic figure is because who knows, you know, I don't want to give someone an absolute time frame. So let's say in like 1,000 years time, when, you know, you're surrounded by your great grandchildren, and they ask you,
and who else?
Great granddad to the power of 10. What do you regret? Are you genuinely going to look at them and say, I tried my utmost hardest and absolutely everything that I battled through? You know, I really tried to become a profitable trader. And what I mean by that, I sacrificed everything that I needed to sacrifice, all the immediate gratifications. I sacrificed what I needed to become a successful trader. And what I mean by that, you don't ever sacrifice family time. Don't ever sacrifice your health. And don't ever sacrifice, you know, enjoyment. And what I mean by enjoyment is like little pleasures. You know, like giving yourself gratitude, giving yourself a pat on the back. Don't ever sacrifice that. But sacrifice going to the pub. Sacrifice going partying and clubbing. Guys, I made a reel and it hit like 6,000 people. And it didn't get as many likes as I thought it was going to, because I think I triggered a lot of people by doing it. And it was a video of me and my brother laughing and discussing and having conversation in a sauna. And it was our competition these days, or our competition right now this weekend, is going out, partying, spending money in fancy dress. Meanwhile, me and my brother were sitting at home working out how we can be more successful. And people wonder why they're not as successful as us. People wonder why they're not as good as us. Guys, you will have time to go out dressing like SpongeBob and Darth Vader and devils and clowns and whatever you want to dress as for Halloween, you know? Can you tell I like Star Wars? You know, you'll have that time. You'll have time to dress up. You'll have time to go out partying. You'll have time to enjoy the things. But sacrifice it now, because you're not where you want to be. And that's what I will say before I leave, because I've got to jump off slightly early because I've got an interview with a fantastic trader on behalf of the 5ers. So, guys, I'm going to go off and interview a fantastic trader. So if you do want to check out that interview, it will be posted on the YouTube channel. I don't know when. I'll have to speak to the guys about it, but I will update you on when. So I'm going to pop off now, and I'm going to leave you in the very, very capable hands of Richard Butler. And guys, thank you so much for joining. And more importantly, thank you so much for the kind words. Thank you so much for the support. And 262 likes.
You guys are freaking awesome. We really appreciate it.
Come on. How awesome is that? So thank you so much for the support. Tomorrow I should be back at my proper setup, not my laptop. So I'll be able to live trade back on my real account, back on my live 100K account. So if you do want to catch me trading live on a $100,000 live funded account, then check out tomorrow. Make sure you stick around, and you shall see me there. So guys, unfortunately, I'm going to have to love you and leave you. Thank you so much for joining, and we shall see you tomorrow. Well, I'll see you tomorrow. Richard Butler's gonna finish off. Peace.
Right, Nick. You carry on your thing. I'll see you tomorrow. Okay, guys. So I'm just going to make a copy of that spreadsheet so that you guys can. So that you guys can use it if you want to. It is completely up to you if you want to use it. Okay, sorry. Let me just set this up, and then I will get into. There was a question that I will get into. Where is it now? It's Johnny Boy 2934 saying, I'm very good in marking my zones and stuff, but the only problem is I'm having multiple time frame analysis for intraday trading. I can't identify the trade sometimes, can't do it properly. I will get to that in a second. There is a very nice way for you to kind of like find the trend very quickly, and I'll show you just now. But if you guys just give me 2 minutes quickly, I just want to sort out this spreadsheet for you guys, and then you can use it if you want to. I can explain if there's sections in it that you don't understand. I can explain it maybe tomorrow, because we'll be back again tomorrow if you guys would like a proper explanation from it. Okay. I hope that this works. So, Remy, if you would be so kind, sir, do you mind just testing that for a second for me, just to see if you can read what is happening on that spreadsheet, if you don't mind, and then if it works, then yeah, then we can share it with everybody. All right, cool. All right. So, what Johnny Boy, let me just get to his question. Johnny Boy, what you were asking is about identifying a trend. So, the same thing that you would do normally to the same thing that you would do in order to mark up your key levels of every day. Here we have GU, and this is on the 15-minute chart. Now, obviously, you can see straight up that it's going lower. The trend is lower. Okay, sorry about this. I'm just trying to get the spreadsheet out to you guys as well. Okay, I've just shared it with Remy, so let's see whether or not he can view it properly or not. All right, so the same thing that you would do when you mark up your normal levels, you look for swing points normally, correct? So you would see, okay, historically, this is just the 15-minute, but you can see it on every single time frame. You can see, okay, there is a swing point here where it's become a lower low. So if I marked it, that is a swing point. There's a swing point. So this swing point over here and this swing point over here is within 1 day of each other. But now the very next day, you see that there's yet again a low point that is yet to be tested and yet another lower point over here. Misclicked it. So if you drew a line from that top point to there, and you would see exactly that you are creating lower lows and lower highs, correct? So the exact same idea that you would do for checking your levels, you would see that you have a trend just by marking that. But there's a faster way for you to do this. In TradingView, at the top, where you choose between your candles, you have a line chart. And the line chart is going to show you what is your direction. It's as simple as that. You don't even need to mark up swing points or anything like that. You can literally just check your line chart. And the line chart can show you, okay, we're trending lower, we're trending higher, that kind of like thing. If I go onto the 4 hourly, you can see the exact same thing as well. Here we're trending a little bit lower. Hello, Victor, how are you?
Hello, hello. Please continue. Hi. Please continue. Do continue.
You can see that there was a swing point. We didn't come close to it. Here's a swing point down here. We've broken through it. And every time you have something like this, you're basically seeing that you're trending lower. And all you need to do is just find the high and the low and see where price is in relation to the high and the low on every time frame. 4 hour, 1 hour, 15, 5, 1 minute. And you can see it. The idea is the trend itself is ever changing. So even on the higher time frame like it is now on regular candles, this is the 4 hourly, you definitely have areas where the price started, pushed a little bit lower, closed lower, tried to swing higher, massive gap between these 2 points, lower point, another lower point, and so on and so forth. And it keeps going lower, so you can see the trend. But if you keep going down, you can eventually see it on the 5 minute as well. Now, the problem with the 5 minute and the 1 minute and so on is that you get intraday structures. So here you have a trend, a small little box, basically. So from this point here to that point up over there, just this little box in pink is effectively a trend. But it's just a 5 minute trend. So the idea is choose one of the time frames to be your overall trend bias, and then based on that, move one lower to see if you can see the trend developing within a trend. Because I can't remember who was it that mentioned it, but like you can have a higher high on the 4 hourly, and it will be a lower low on the 1 minute, as an example. So not exactly that point, but the point is being that every time frame shows you the exact same thing, just slightly differently. It still shows you trend, it still shows you higher highs, lower lows, all of those type of things. You'll see everything, but just how much noise is in between. Because you can have a trend within a trend within a trend. And I know it doesn't necessarily make sense, but every time frame has something that you can see. It just depends on how much noise is around it. Like you can have small areas of consolidation. Here is a very tiny section of consolidation. But if I go onto the 30 minute, it's just a lower swing. So I don't know if this makes sense, but the idea is just that to see how a trend is formed, I will always look at higher highs, lower highs. I would see how price is reacting, and then I will try and see if I can condense it down all the way to the 5 minute. And then I generally trade on the 15 and on the 5. I don't really care about the trend, to be dead honest with you. I don't care if we're trending upwards or downwards. I want to see how it reacts at certain areas, at certain points. So you don't have to use trending or trend portions for your trading necessarily. Victor, how are you, my friend?
I'm fine. Enjoying this moment here. So the question, I assume, was how do you identify the trend?
The question was, and let me just get to the exact one so I can frame it properly. It was Johnny Boy that said, I'm very good in marking my zones and stuff, but the only problem is I'm having multiple time frame analysis for intraday trading. I can't identify the trend sometimes, can't do it properly. And then I kind of wanted to use the idea of pulling your support lines and your zones to indicate to you how a trend would formulate based on your zones. So I don't know if I did a good enough job on it, but
I think you did just fine.
I tried. So yeah.
You give yourself too little credit, Richard. You're a very good trader. You should take more credit.
Thank you very much for those very kind words, Victor. You're much too kind, my friend.
So how has the market been to you on this lovely Monday so far?
I am not loving the market at the moment.
Okay.
Today,
and is she loving you back, or?
She's sometimes a cruel mistress. Sometimes, but today I've only had one opportunity really where I had a drop, a base, and then another drop, but this was just before I went live on my stream this morning with Will, and we had some technical difficulties in the morning, so I remember I missed this trade. So it was supposed to be an entry point over here, and then I would have shorted a 1-3 as an example. It would have realistically been a 1-2 if I had entered it, because I would have wanted price to base. Oh, I misclicked. I keep misclicking these days. I would have wanted to see this area over here basically tested, but I missed that one. And since then we've been ranging slightly in an upward direction, but still ranging nonetheless on GU. So I just decided, you know what, I'm not going to force any trades. I'm going to just wait.
I'm sorry to interrupt you. I actually took a short when it came back to the supply area not very long ago. Yes.
So you took this upper one?
Yes, I took a short when it retested the level, and I'm still in the trade. And I'm looking for price to continue lower because, it's been very weak, not being able to create higher highs. I'm just respecting the structure and then breaking slowly but surely towards that level where you're indicating. And I suspect that it's at least going to attempt to approximate it, right? Approach it. Probably gonna break down at some point, but I'm not gonna, hold it for so long. I'm just gonna take it until it gets to that area, and that's it for today.
It has been a very long time since it's last tested this area back in April. So it has been a minute since it's been to this point, this lower point on last week Friday. So I can see it definitely get there. Obviously, I don't trade. Let me rephrase. I don't know your trading style in depth, but obviously you are an established trader, so you know exactly what it is that you're looking for. Myself, I have wanted this bottom area to be broken. This one, I would have wanted it to be broken first. And Victor is gone. Oh, he is still there. Don't worry, guys. Victor is just in the background.
Yeah, I don't know what happened, but I was suddenly I disappeared.
Well, as they say, all good things come to an end, and then you're a good thing, and then you ended. You're back. So
But please do continue. So you're expecting that level to break before you're ready to get in again?
Yes.
Okay.
I would like for it to. The way that I like trading is I like trading during a trend. So I want a trend to establish, and then within the trend, I want my bases to be formed, and then I will
Okay.
trade based on that base. So that's generally when you have a failure to create a new high. So obviously, I've adjusted this one since this morning, but it was up here, basically.
Okay.
Price came into it, struggled, attempted to push higher, failed yet again, and this is all upward momentum. Basically, it's slowed, but it's still upward trending.
Yeah, very nice, by the way.
Thank you. So and then eventually it failed. It failed to produce the follow up. It failed to produce the higher high and to push even higher. And then it started pushing lower. And when it started pushing lower with vigor. It started going momentously lower, where once upon a time it was going up nicely.
With vigor, not Victor.
Well, it could have gone down with Victor. I don't know. But
I wasn't there. Not me.
You were sleeping. Don't sleep in the markets. So yeah, it started moving lower volumetrically and created a base and then started pushing lower. So what I would like to see is I would like to ideally see the same idea after it has broken this area of support / resistance for me. So I usually take the lowest point and wait for price to react off of it. In this case, we had a reaction here, and then when it attempted to come back to it, it failed. So then I will just extend it until it eventually tests it again. The same with this area. We had one test, and then eventually we broke through it, but there was no follow up. So I'm just continuing this one because it looks strong enough as a holding point for me. So I would like to see it break through here, and then maybe potentially retest and then start pushing lower. But the idea of this top section here is also very nice as well, as like your entry point as an example. So I'm assuming, and please correct me if I'm wrong, that you don't enter blindly into a trade. So you would want confirmation of some sort. Now, I don't know exactly what it is that you would need or what you would constitute as confirmation, but I would assume it would be the idea of a attempt and then a failure to push higher, somewhere on the close of the candle, and then you would potentially look for a lower point. So I don't know if you enter on the 5 or the 1 or whatever, but like I would assume that you would wait for either it to slow its momentum and then start producing an opposite direction candle. Instead of pushing higher, you wanted to start pushing lower, close below the zone. Once it's closed below the zone, you would enter, maybe potentially have your stop loss slightly above, or you might have a set stop loss as an example. Not entirely sure, but
that's exactly it. That's exactly it. I need to wait for the confirmation because well, not everyone, but I do that, and I've seen that I need to do that to be on the profitable side of things, because it doesn't always reverse from this level. Or sometimes, things have changed, and you don't know that in advance until it breaks the level, but by then you're already in the trade if you don't wait for the confirmation. So I need to be only in the trade when there are indications that the market is going to react, has reacted on off of that level. And I broadly say, without indicating exactly what my trigger is, because that's something I don't talk about. What I broadly what I look for is that I want to see one side taking over, and so it's a reversal on a lower time frame, but you can, depending on what time frame you're watching it could be a candlestick formation on some time frame, on another time frame which is more granular, it could be a much more elaborate pattern. But the point is, it need to have reacted definitively, and so far that's possible because it's never definitive, but it has to have reacted with proof not a moving candle, but closed candles, and then I get in, and then I just walk away basically, because after that point, there's nothing for me to do. They're just waiting for the probabilities to play out, and that's exactly how I trade.
Do you not micromanage your trades? So you
No.
basically set and forget. So
not my main strategy. Not my main strategy. Yeah, there's the efficiency and the efficacy of micromanaging isn't very high. I know I can a lot of times improve it a little bit, but it's most of the times I have a couple of general rules that I do have to intervene, and those get me out of the bulk of the trades I don't want to be in, and they keep me in the majority of the trades I do want to be in. So I don't have anything to there's not a lot to do basically. I'm okay with leaving money on the table if it means that I will be working a quarter of the time, or it needs a quarter of the attention that I now spend on managing the trade. I do have to watch it. There are a number of rules that I have to make sure that it is following, but usually I want efficiency. I want the less amount of time possible, so I can do other things, other setups, other activities, that is streaming, for example, right? If I were to micromanage everything, then I wouldn't be able to stream. So and a great balance, because it's also takes you mental capital, right? So
yes.
I want to be able to do it the whole day, and if I'm micromanaging the trades and I have a couple of them, it's gonna drain. It's gonna cost me more for just that little extra, and it does not. That's a beautiful spreadsheet. I'm sure you guys have been talking about this already, because I see it in the chat. But
yes, I created a spreadsheet.
Some gems here. This is your backtesting sheet, or is this what are we? Oh, risk management. Okay, so position sizing, I suppose.
Yes. So you were probably not here, but I think it was 2 weeks or so ago, I decided that I was going to get myself a new 5ers account, that I'm going to purely trade on stream.
Oh, nice.
And
just like Will.
Yes. Very exactly. Much like Will. And was kind of inspired by the fact that he wanted to be so open and honest about his trading, that I decided, you know what, I'm going to take that idea and I'm going to run with it, and I'm going to have this is my personal spreadsheet that I also use for all of my accounts. I use exactly this for my personal accounts, for my other prop firm trading accounts. This is what I use. This one is specifically catered towards the 5ers. It is specifically catered towards a high stakes account, which is what I got. I got myself a 5K one for stream. If I lose it, I lose it. It's one of those things. But I wanted to show all of the trades on stream. I wanted to show how I document those trades. And I also wanted to show the equity curve, if there is going to be one, let's say once a week, once in 2 weeks, that kind of like thing. Just not just the idea of showing the trades specifically, but how the psychology and the logic side of things, how I kind of like work around them. So I've shared this to I gave it to Remy, and then Remy has shared it to the community, so they can use this spreadsheet, make a copy of it.
That is awesome.
So yeah.
It is great. Thank you for sharing that, Richard. On behalf of everyone who's now using it fervently. Awesome. So I see you have some stats.
On the right-hand side. These are not stats. They are my best of 3. Let's do this. Maybe I can zoom in a little bit, and then it might be a little bit clearer. So this is my best of 3 expectancy strat. So if I trade the best of 3 trades based on my current risk and current take profit parameters, this is what I can expect to gain or lose on a single day, whether I use a 1 to 2 or a 1 to 3 RR. Just by simply staying within my parameters.
And this is only one strategy, I suppose?
This is one specific strategy.
Okay.
So this is the strategy that I'm going to be using for my live stream.
And did you share the strategy? Are you going to, or is that, proprietary?
No, I wouldn't say that I'm not going to share it, but I'm not going to share all details of it.
Yeah.
So I would rather show the idea of how I manage the trade and how I manage building an account, as opposed to here's a strategy, follow the strategy. Spreadsheet again for those that missed it. So I'm going to do this whole week if everybody would like to view it. So not just today, but tomorrow and all the way down to Thursday, because we're going to be here for a long time if I have to explain everything in one go. So I'm going to do it every day this week. So guys, don't worry. Perfect. I'm going to explain exactly what I mean with the spreadsheet and how it's marked up and what information. Everything in yellow is information that you can change. So I will explain all of this in due course.
Perfect, lovely. I like that because I think this is what our viewers need to be exposed to, be seeing. What goes behind. The sexy thing is to click the buy and celebrate the winners, but actually that's just the surface. That's one slice of the actual process. Of everything that goes into building the system, maintaining it, applying it, managing it, and analyzing it to see if you need to change anything, modify it, etc. And I think that's the value. The same thing as you said, you're not going to explain all the details of your strategy, and I understand that completely, and I'm sure people will understand that as well. But that's not the meat. The strategy, there's so many strategies, and many of them are profitable, right? And you can modify them. I wouldn't say every strategy is profitable, but there is a combination of parameters where it could be profitable, right? So yes. And the valuable part, I think, is when you understand the process that goes into the thought process of how you take one strategy, what are its weak points, what are its strengths, and how should I approach this, and the whole because the strategy changes. Other people might have other strategies because everyone is different, right? So depending on your personality, or depending the whatever exposure you have had in the past, you might have a different preference for how you want to be trading. But the process is quite similar, no matter what a strategy is, and how you go about it, how you think about risk, how you make sure that you're executing and making sure that you're complying to your own trade plan. And that is where the value is, not exactly on the exact entry rule or whatever it is that your trade plan dictates.
Oh, I've accidentally screwed something up.
So this is so I see you have it on the day. I see. So you're going to be showing the stats per day, not per trade.
No, yeah, not per trade. I will do it per day. So let's say hypothetically, I've decided, or I took the best of 3, and my result was 1 win, 2 losses. So I would have my 1 win, which in this case would be at, let's say hypothetically, $26. So it's my $26 win. My risk is $12.50. That's a losing trade. So $12.50 minus $12.50. Right now, I would be on $1 profit for the day without commission. Commission for a 0.25 lot trade is $1 with the 5ers. So for the day, I would be down 2. So minus $2. and then I will fill this in as it goes, and so on and so forth, until I have enough data, and then I can start showing, okay guys, on this day I had a 0.52 day, however I lost, I don't know, like minus $20, I lost a 0.4, I'm only up 0.33% on the day. It's just to show, not just clicking buttons, but like, and then I can explain, okay, so I'm currently down, let's say I put myself $100 down as example. I'm down 1.67% on the account at the moment. What do I want to do? Do I need to adjust my stop loss on my risk so that I'm not doing static 0.25%? Maybe I get a more fluid risk parameter. So in this case, I will drop down to a 0.24 as an example. Now I'm on 0.24% risk, and so on and so forth. So I want to explain as I'm going through the trades, not just the idea of enter trades, close trades, profit, because it's too easy to do that, and it takes away from all of the stuff that you have to do when managing your expectation, managing your psychology, managing your risk parameters, all of those things. And if there's one person that can take something away from this, then I've achieved what I set out, which is to just potentially help someone manage their way of trading that is honest and, you know, clear and see-through. So you can see what it is that I'm looking at, even though I'm not necessarily sharing the strategy, but you can see how I would manage my trading apart from the strategy itself. Everything that goes into the strategy. Sorry, my throat is like screaming at me there for a second. So yeah, that's the idea.
You managed that quite well, because we barely could notice.
It means that my voice changes so much that nobody notices that it changes.
No, but awesome. I like that. I like that a lot. I think it is of great value to to any trader, but especially someone who is still organizing workflow, thought process, workflow. I said, yeah. So because it is important to. There's one fits does not fit all, and in trading absolutely does not. And these mantra, or these 1%, that's totally inadequate. I think fixed 1% for everyone. It's so not true. It depends on the strategy, on the drawdown profile, on you as a person, and so many things. So and watching it from in actual trading, going through the process is very helpful for everyone. Even if you're already a veteran, you may learn a thing or two. It could help you add to your toolbox and improve whatever you're already doing.
Yeah, that's the hope. At least it's an opportunity for me to I don't know, get out of my comfort zone, because I'm not 100% comfortable trading live in front of people. I trade, all of my trades are done off stream, but because I'm streaming so much more and there's so much more time that I'm spending on streaming, I just thought, you know what, I may as well just start getting comfortable with being uncomfortable. And one of those things is to start trading in front of people. So this is what I'm going to do. And then, yeah, if it, like I said, if it helps somebody, even if it helps one person and it just helps them a little bit, it would have helped me, and then I'm happy with that.
I have a couple of questions, if you don't mind, Richard.
Yeah, by all means, shoot.
Your trades, are they fixed? What are you aiming for? Are they fixed risk reward ratios? I'm
going to be jumping between two risk parameters. Profile. One is going to be a 0.25 and the other one's going to be a 0.5, and it's going to depend on the reaction and on the area where it's reacting. So it's going to be a combination of two strategies basically. I would like to have a static stop loss and a static take profit, but I know that is not always going to be the case if I want to trade every day on this specific account. So I will be mixing the two. The one is going to be a static one, for argument's sake, 10 pip to 20 pip take profit as an example, a 1 to 2, and then the other one is going to be a slightly smaller one that's going to be a little bit more dynamic.
I see. Okay, I understand. So you're going 1 to 2 on part of your trades, and the other one is going to be higher, I assume.
The 1 to 2 is going to be the minimum, and then the 1 to 3 is going to be the maximum. So I'm going to jump between the two, depending. It's going to depend on what I see in the market. If like a day like today, as an example, if today I don't like the volume or I don't like the momentum, I might go for the 1 to 2 with slightly smaller risk, as an example. So 1 to 2 with a 0.25. And if I see a day where, wow, we like, let's say hypothetically, like Friday, where we eventually started getting the momentum. If we start getting the momentum, then I will up my risk. I will up my take profit size. So it will go from a 1 to 2 to a 1 to 3 as an example. But it's all going to depend on what I see on the day.
And so you actually have two variables. It's the ratio of the stop loss towards TP. That's one that you're gonna be switching, and also the risk, depending. Yes. So, but there are actually two kind of set of parameters that you're gonna be choosing. One is a bit more aggressive, I suppose, and the other one a little bit more conservative. Forgiving. Yes.
Yeah. So okay, I'm also, like that. When I document it, I'm also going to have the two sides of it. I'm going to have the conservative side, and I'm going to have the aggressive side, technically. And I can see, like, let's say somebody wants to have a more conservative outlook with their trading, then they can see, okay, if they're conservative and they're not risking all that much, and they're trying to take higher probability trades with that specific idea in mind, it's profitable. And you can make money, but how you manage it is going to matter. And then on the other side, if someone is a little bit more aggressive, then you can also see from the same idea that the aggressive nature, when tempered properly, could be a profitable way in order for you to approach your strategy or build your strategy, as an example.
Yep. It's a trade-off, right? Whether you go conservative or a more aggressive risk profile, it's a trade-off. There's we're paying something. You have, higher risk of something happening, and sometimes you're willing to take that risk. Maybe you're in evaluation account. You're very much willing to, because you want to reach funded state as quick as possible. You're willing to, on a responsible way. I'm not saying here go all in, things like that. Just a more aggressive version of your same strategy. Because it's okay if you lose that account. It's not like you're losing own capital or funded account, which are much more. Are you getting in now?
No, I'm just making a note for myself while I'm listening to you. Otherwise, I'm going to potentially forget to write it down.
And what's the indicator below there? What's that?
This one here. It's a MACD. So it is just Chris Moody's ultimate MACD. It is just one. It shows everything as you normally would, but I removed the histogram and the signal line because I can see it with this line.
Yep.
So I just basically use it as momentum. That's nice. Yeah. So if in this case, if it's black, then it means that the histogram is lower than the zero line, and the signal line is also below, or the MACD line is below the signal line. So it's just a visual representation.
Awesome, I like that. And you're waiting for the close on the 5 minute. Is that your time frame you normally use to get in? And
yes, so normally I would look between the 15 and the 5 as an example. So I can just very quickly run down this idea. So normally what I would wait for is I would wait for a reaction off of an established area, or in this case a point of interest. For me, this support level is a point of interest. Then I would want to see a break of some sort of the previous structure. So if this over here was a swing point, then I would like to see price close lower than the swing point.
And what's the definition? What is your definition of a swing point?
is just the last point where price reacted off of, and I don't know if that is like the definition that I would say. I would just say that it is where if we were trending upward, where sellers came into play, started pushing the price a little bit lower instead of higher. So in this case, price comes down, doesn't make a new low when it can. Buyer steps in. This is a swing point down here. Price goes up to this point over here. It didn't reach the most recent high point. That is a new swing point. It's just, but it comes into play and out of play often. So even if this swing point there has been cut out, there could be another swing point lower than it that also basically got removed as well. I just want to see it break the most recent swing point before I continue. So in this case, that would be a lower swing in relation to where price attempted to go. So I don't know if I can just do this to clean it up a little bit. But every time there is price fails to make a new high or fails to make a new low, I mark it. So in this case, price pushed lower, bulls attempted to come in, bears took over yet again, but failed. They failed to produce a lower high than the most recent low point. And then price reacted high or went higher. So this is a swing point. I want to see price break this. Pushed up to this point, sellers came in again. That is a new swing point. Pushed it lower. That is a new swing point. So it condenses. It condenses up until it gets to a point where it breaks. So in this case, this one here is now going to be broken if it closes. And if it closes, then what I'm waiting for is a retracement like this. So pushing lower breaks a swing point for me. I want it to retrace and then confirm that it wants to go lower by printing another bearish candle. This is on the 15-minute. So I have two variants of the same strategy. One is a 15-minute and one is a 5-minute entry. The 15-minute would be drop based on what I've just explained now.
Okay.
And generally, I would want to just be higher than the last swing, the candle that confirmed the low or the continuation of going lower. I would have to have my stop loss just above that one, and then I aim for a 1 to 2 as an example. This is one, and then the other one is on the 5-minute, like this one here, where we had a reaction out of an area. It started pushing lower. There wasn't really any like major swing points like the swing low over here, which was Tokyo low that needed to be tested, but there was a low here that was tested. There was a swing over here that was tested. There was another swing over here that could have been tested that was being closed lower than, let's rather say. And then on the 5-minute, drop base and then drop. So it's a very simple, straightforward strategy that I use. There is some extra stuff as well that I add to it, but I'm not going to go through that. I may as well then just tell everybody, hey, here, copy my strategy.
Yes,
which I would rather not.
Yeah, it's not very helpful. I don't think I'm I have an opinion that it's not going to help. It's giving out the wrong signal, pun intended. It's giving out the wrong signal to the viewer, because that's not how you become and maintain and form yourself as a trader. It's not by following someone else. It's by forming you as a trader, by trading, by exercising your analytical side. And okay, so how do I build my system? And you have to do that. If you're following someone else's, Richard, mine, anyone you see on this show, and you don't know why we came up with these rules, the next time, right? Because in time, strategies need to be modified, they need to be adjusted, they need to. And if you don't have the skills and you don't know the background, the context, why we're doing certain things, and you just keep copying them, when we having the skills recognize that we need to adjust something, you'd be left out of the boat. You know, and you don't want to be in that position. You want to be an independent trader, not someone who's just following. That's you know, that's the inferior version of a trader. Maybe at the beginning you might want to copy a few things just to see how it feels. So, but it's actually not. I don't think you know, as I don't know if it's a good example or not, but you know, when you're starting to learn you know, riding a bike, you have these safety you know,
the safety wheel there.
Safety wheel. You don't want to be with safety wheels the whole time. And I don't know, maybe that's not even a good example, because
it's a very good example. It is a very good example, because you need to be able to fall over every now and then just to know what it feels like to fall over, so that you know what it is that you're going to try and avoid when you're on a bicycle.
Yep. Yeah, there's you know, the skill of keeping your balance. You're not going to get that and develop that by you know, having the in a safety environment, just relying on someone else to do the job, because you know, you're never going to develop your skills that way, and you need them if you want to survive in this this industry. And we see the pound we see the pound pushing lower, and must close, retrace, and then continue. Okay.
Yes.
What is the base? I remember you last time, or a couple of times, you mentioned the base. What was it again? How do you identify your bases?
So I'll do that one, and then I'm gonna have to jump off. So
before you while you're doing that, while you're doing that, I'm gonna take a short break, and I'll be right back.
Okay, no problem. So a base, in my opinion, is an area where within a trend, an established trend, it can be bearish or bullish, where the opposite direction, let's say we're bearish in this case, let's say there's a bearish trend, where buyers attempted to break the trend. They tried to come in and push the price higher and fail. And then when that happens, you have these little retracement areas. You can see it on the 5, you can see it on the 15, you can sometimes see it on here, you can see it on the 30-minute as well. You have a trend, an attempt to break the trend by the opposite, in this case, buyers, and then them failing to break the trend, and then trend continues lower. So this would be a base area, in my opinion, on the 30 minutes. And then what happens is that sometimes price tends to attempt to come and test that area again. It doesn't happen always, and it doesn't happen all that, you know, specifically every day, but it happens often enough that I've taken note of it. So price tends to push back to it because it was an area where buyers were interested in attempting to push the price higher, but they failed because the bears just completely took over. So price retraces back into it, and then you have a reaction. And if there's a reaction off of this point, it's either going to be the bulls take over and they continue pushing it higher, or the bulls are going to completely fail yet again, as they've done already, and then start having the price push lower again, so the bears take over yet again. So that is what a base area is to me. I know, and I don't want to speak on behalf of Victor, so obviously he can confirm this or he can deny this, but from what I understand from his teachings, and his idea is that it is a breaker block, or it is an area where, is it breaker block? He can confirm this, but it is an area where buyers and sellers are at odds and one takes over. So that this is my idea of a base. So I have them on, what I normally check for is I check for them on the daily, the 4 hourly, the 1 hourly, the 15 and the 5. So I would jump between them, but the moment one of them has been broken and completely closed above, like let's say price pushed through it and closed above and then started coming down, this will now no longer be a base anymore. It will now be a point of interest, as an example. I don't know if you caught any of that, Victor.
Yes, I was listening to every word you said, Richard.
Oh, you are so kind. You are so kind.
Yes, I don't call them breaker blocks, but yes, they can. Not always. Not all of your bases are order blocks to me. I call them, order blocks. But I typically it's the same phenomena. The only thing is I have a slightly different approach because what you described is the interaction that I was gonna say proverbial, but that tug of war where
there's a clash.
There's a clash between the two sides, and someone won.
Yes.
And that's what you want to be seeing. I normally say you want to be, the order block is an expression of where one side took control, and that's the same thing. They had a clash, and they compare forces for that period, and it indicated who was stronger at that time, and that tells you that's information. The next time we get back to that level, the fact that one side took control there gives them the benefit of the doubt, meaning they're likely to at least try to do the same thing again. And if they fail, that gives you information. And as they are succeeding, that's also information. And all of this you can use to read price action, to read, I say, the intention of the market, but it's of course it's not one entity. It's the how the price action develops, the narrative is formed. But it's basically the same thing. Just I don't call them base, and the definition that I use will have me probably. Some of your bases are order blocks to me, and I see a few there that I wouldn't identify as such, but it's all about the because whatever we use is just a tool. It's just an indicator, right? Not an indicator as a graph, but it's a
visualization.
Yes, it's a visualization to the phenomena, which is the same, right? It's the same thing. We're trying to capture or identify the same phenomena, just using different ways. And no tool is perfect. So sometimes, one will identify, the other one won't. But that's okay. That's fine. You're not going to have a perfect indicator or method. There is no perfect.
Yeah. So sometimes I don't use the MACD as an example. I will just have this, and then I would also just switch off any like EMAs that I have, and I would just purely look at price from the idea of where did we have the reaction? Do we have, for argument's sake, here's one as an example. Did we have a reaction? Yes, we did, and then I will start going lower. And then eventually I will have my idea. I will understand, okay, I can see price wants to, or it seems as though this is the idea that, okay, there's no real interest in this area, as an example. So it's all fractal, but it's all information pieces. It's little puzzle pieces that you can use at the end of the day to make a very nice puzzle for yourself, make a nice little picture. So that's what I would do. I don't always use every aspect of, like I've even got the Kalman stuff that LJ has up, and I just view it once in the day, just in the morning as an example, to see, okay, what are we seeing today? Okay, maybe this, maybe that. But the idea still stays the same, that I'm trying to find a consistent way in order for me to replicate what I see, and not replicate what I see, but replicate what I do. So every time I take a trade, I want it to be the same idea that led to that trade as my previous one. And
Why
I just use,
Why do you want that the same?
Because it's how I control consistency. It's how I know that what I'm doing is in line with what I've tested.
Yep, I like that.
So it's rules, and I stick to them.
It's so important, because how can you improve something if all the time is going to be different? It's going to be very, very difficult. You can improve a variable, something that is variable, because there's nothing to compare it to, because it's always changing. The same thing with, if you're sometimes taking a double top to get in, and sometimes you're taking a quasi, and sometimes you take another thing. That doesn't make sense. You have to be, same as a lab. You have to, leave everything else same and only have one variable. But in trading, the only variable you want to be having is your result, right? So your performance, so you can check, okay, is this going well, is this not? How can I change one thing but keeping it consistent, and compare that to when I haven't before, what rules I had before. And there is no other way than doing everything. It may sound boring. It means that you're not going to be taking all the setups that you might be interested in, but that's how it's supposed to be, at least according to me. I think it should be like that. Yeah, it should be, in that sense, a little bit boring, although I don't agree with the idea that it's boring, because I get very excited of being consistent, right? Doing the same thing all the time, not because the repetitiveness is exciting, but the fact that I know that I'm doing the good stuff. I know, I'm progressing. I can see the progression. That makes me excited. And so, doing the applying consistency is in your workflow, and seeing the consistency in your result, that gets me excited.
Yeah, no, I 100% agree with you, the Victor. Victor, I'm going to love and leave you now. I am really, really in the need for a bathroom. I have had way too many of these today. So this is my third bottle of water, and it is now just before 5 o'clock in the afternoon here by me. So I need to skedaddle. Thank you very much for having me, Victor. Thank you for joining me as well. And then
I have to thank you for all these great efforts you're taking, to share with our community, for our viewers. And by the way, if you enjoy this, Richard is doing for us, for the community. Hit the like button, show your appreciation, subscribe to the channel if you're not a subscriber yet. Let Richard know that you appreciate this. You want him, to keep on sharing, his knowledge and experience with all of you. Richard, thank you very much thank you for doing what you're doing, and I hope to see you soon again.
Oh, you will see me tomorrow, definitely. You'll see me the whole week. Will and I have the double shift, let's say.
Ah, perfect. I like that. Perfect. Have a great day, and see you soon again.
Thank you very much, Victor. Have a great day. Remy, thank you very much. And chat, everybody, just follow your plan, and I'll see you guys tomorrow. Cheers.
Perfect. So here we are. This is the trade. This is not the actual trade, the signal. But this is the direction, and that is the setup with the pound dollar that I am currently. My other accounts, the stops are, my entries about quite much higher, so the risk reward ratio is also different, but it gives you the general idea that what I'm looking at. I'm actually going to switch back to, let's see, we're going to switch back to the other one, which is, we're going to have a blank screen for a few seconds, so bear with me, not going away. And let's see. All right. So that's the general idea. I'm gonna break it down for you guys because we have about 6 minutes. Let's do the top-down analysis on GU for this as a change for the remainder of the session. Don't forget, guys, we are coming close to 90,000 subscribers. If you want us to have this massive giveaway that we have on each milestone we hit the like button, subscribe to the channel, and we will be sharing giveaways account more than you think. All right, so this is the monthly time frame. We have from the, just to understand where we are, we reacted from a entry order block bearish from the, this is pound dollar on the monthly time frame. There's a quasi, this is the left shoulder, the head, the neckline. It broke it and came back all the way to the area to have this reaction. And it, as you can see, we created an outside bar here indicating that the market reacted. That's what you want to be seeing. Not only that, if you go to the recent price action, when you zoom in, you see that the market not only reacted, but also came back, retested the area, and had follow-through movement. That's the creation of the order block, and then it came back to retest it in 2 candles and had that follow-through movement. Beautiful price action on the higher time frames. This is on the weekly. You can see as the market was going away, moving away from the structure, from the supply zone, it was creating structures after one another, and all of them being bearish in this case, meaning there's follow through, there is a selling pressure, selling order flow, bearish order flow, I should say. And so that's the backdrop of the higher time frame. The trade wasn't based on the structure, but it is important to understand what the higher time frames are doing. And we had, or we still have, I should say, a quasi that we talked about, quite beautiful quasi reversal pattern that is on the brink of breaking, right? We have the break of the structure. It didn't come back to the only order block we had, which is this one, but now it has. Not only that, we can see that once we get back to this order block, this entry order block right here, the expectation is that the market is going to, that's what the reversal is telling us, right? That the market is, you want to be on the lookout for that reaction from that order block. But that's the importance of having a waiting for confirmation. You want to see if the market is actually going to make that move, right? You have that reversal, because only then you want to be part of it. And the area that you want to be that we were looking, right, is that low. So as long as the market, now yesterday, as long as the market is below that line, it will be perceived as breaking the structure. You'll have to wait for the close on the daily time frame, since this is a daily quasi, but you want to wait for the as long as we are below that, it means that we're in all likelihood going to continue that direction. And the candle here on Friday was quite promising for a reversal. It's a almost no, at least on this price feed. Let me check with other ones on this one as well. It didn't have any bodies. Let me double check that. Almost didn't have any body, meaning it's indecision. And not only that, it retested the, sort of a false breakdown. So today was very promising for a long setup. The only thing is that it looks great here on the daily, but it never materialized. It never came. It might come later, but things are looking here that it's not going to come. And if it closes below here today, then to me the quasi is broken, and I'm going to assume that price is going to likely continue to go lower. Even if we have a little pop in between, that's fine, but the likelihood that price will eventually keep on going lower would be much higher. So that's the daily. There isn't any signal on the daily. There isn't anything, only showing you guys that there was a possibility. Officially, the possibility still is there of a bullish reaction, but the market didn't show us any appetite for a reversal, right? So you have on the H4, we had the last quasi, or the next neckline is this is the neckline, and it never, that's an error. Let me use the proper indication that I typically use, which is the neckline for the H4. That's the level, right? To me, that's the break of structure that I want to be seeing for the market to break, and it never did. Maybe it will do later on. We can have a major reaction, but it never actually broke that structure. So if you go to the lower time frames, the only thing you have is, in spite of the daily quasi that we see possible reversal coming in, the market is just reacting of bearish structures which are being printed. Let me go back. It is this one. That's the H4 right there, right? That's the outside bar that the market created right here and retested in the previous candle. And if you go to the other time frames, you will see that there are indication here where you can refine the structure a bit, not a bit, actually quite better. And actually I took it away, but you can see how the market, right, also actually had a break, came back, and even it closed above, tricking you to think, there could be a move up. The reality is that it did the opposite. It came back and failed to hold. Let me take this away. It failed to hold right here. It failed to hold the level, right? Couldn't keep itself above the level. So far, it hasn't been able to do so. And as long as that's the case, the market looks very, very weak from this standpoint. And that's exactly why the reason that I took a short from the H4 and H2. If you go to the, let's say, the 5-minute or maybe the 15-minute, you can see the quasi that I was playing into, which is, let me see, this is the quasi, and the, that's the high, breaks the neckline, and then comes back for the reaction of this entry order block, and there, that's where I got in for that continuation move to the downside. And since we don't have anything to the left, right, there isn't a lot to go in here. There wasn't, there still isn't anything to use. I'm just targeting something close to that, a little bit before that swing point, because I think the market is eventually, I think, right, but it's not it's not about opinions, but I think as long as the market doesn't make a huge reversal in price action, it's just going to continue to be weak and perhaps go even lower. But in between, it can still have pops, and I don't want to be in the trade if that happens. So I try to front run that possible reversal, even that if that means that the market could just continue to go lower and I get out before the swing point, right? That's just a deliberate, that just a conscious decision that I make as a trader to just take the trade off at the next level, and that's it. All right, this is the end of our stream. I would like to thank all of you for your attention. And if we say this very often, but it's so true. If you enjoy this and you think this has been of value to you, show us that is the case. Let us know that is a something you want to be seeing more often. For example, what Richard was sharing, right? The whole process, and by showing your likes, by subscribing to the channel, that's how you express what you want more of us, what is helping you the most. So please do. And I would like to invite everyone as well, everyone who is available to our Discord community. There was one person who, before I go, let me see, there was one person who asked about the Discord community. The Discord community is in your hub, in the 5ers hub. So you get an account, you buy an account. The smallest one is the 5K high stake account. You buy one, and inside where the personal space, the hub dashboard, on the lower left corner, you will see that Discord icon. That's how you get in, totally free once you have an account with us. And I'll see you inside on the other side of the server, right? So we're gonna be having a session in about 40-45 minutes. So you're all invited, and that's it for us for today. Have a lovely day, and see you tomorrow. Bye-bye.